share screen.
Yo, yo, yo. Good morning, everybody. How's everybody doing this day? Today.
What is good? How are we doing, everyone?
Oh,
What is my camera doing? Everybody. Yeah.
I'm not gonna lie, mate. I did not sleep well. Again. Horrible night's sleep. But I know that you also had like a really crap night's
I
sleep.
had an amazing night last night.
Yeah. Yeah, we're just sick at the moment. It just seems like we're all just under the weather. We're just under the weather, man. Just like straight up.
Mate, literally, just straight up feeling like absolute garbage.
Yeah, but we're here. It is a Wednesday. It is Wednesday, yes? It's Wednesday.
Yes, it is Wednesday, and
Like
we are hoping Santa's going to
like
look
I've
after
lost
us
a day.
today. Come chat with us, chat.
Yeah, it feels like I lost a day. Not gonna lie, I feel like I lost a day. I woke up this morning like, what day is it today?
Yeah,
Tuesday. It's
I know
Tuesday
what you
today.
mean.
Yeah, it's good. It's good.
I know.
Not Tuesday. It wasn't
Yeah,
Tuesday.
no,
It wasn't
it's
even
not.
remotely close to being Tuesday.
Dude, do you know what I thought today? So I've already started planning heading back to the UK. So I've started planning, getting myself some souvenirs, buying my parents, my brother some souvenirs, what I want to do before I go. Like,
Buying your
CC
friend
has
Richard some souvenirs.
ship my friend Richard some souvenirs. I would buy him something, but I may as well just ship it to him.
Will to South Africa for my friend Richard.
Oh yeah, I am your souvenir.
Yeah.
So yeah, it's like I'm sort of like planning on like what do I want to do before I go back. And in all fairness, CC has showed me around most of Hong Kong, and I've already done most things. But I've still got a small list of things I want to do. And I thought to myself, right, March, I'm gonna be going home end of April, start of May. So what do I want to do in March? And then I looked at the date, and I thought it's the 18th of March. Where's it gone? March hasn't existed. What happened to March? Where's that been? Well, where's March gone?
Yeah.
Like, are we in some sort of parallel universe where just March is just fast forwarded?
I don't know, mate. Like like I'm saying, I've lost days. Like for
Hey,
all we
that's
know,
months.
dude. For all we know, it's already the end of the month. I don't know.
It is. Next week is the last week of March.
Well, next week plus a few days.
No, next. I might. Yeah. No. Oh yeah. Fair. Plus 2 days. Yeah. Okay.
Anyway,
Yeah. What's good, people?
LJ saying, "Get some sleep, you losers. You can't copy me with my lack of sleep. Get your own
Yeah.
motif."
Fair.
Yeah.
Yeah.
Don't worry, LJ. We've got our own little thing going
I
right
would.
now.
Yeah. LJ, fair man. You are an absolute monster when it comes to your ability to not sleep.
Yeah.
Absolute machine. I can't do it. It's dude. I don't know what it is. I think it may be the bed. I don't think I'm used to the mattress and bro. It's for me. It's like sleep. It's like day on day off. Day on day off. Like one day I'll sleep like a baby. Next day I just won't sleep a full 24 hours. And
Like a
then day
baby.
after that, yeah, yeah. Basically, at the moment, I seem to be sleeping like a literal baby.
Yeah.
So I
No,
think it's just
I feel what you're putting out there, mate. I feel what you're putting out there. Last 2 days, not good, not good.
not good.
All right,
But what about the
let's.
market?
I was
Have you
about to
been
say, let's stop complaining. Let's stop complaining and start looking at the
whinging
markets.
for just for a minute?
Yeah,
We can
of
whinge
course.
after. Whinge after we've looked at the markets. And
Bring
what
up
about
your.
you? Have you seen the markets today?
I'm considering a Nasdaq sell, but
Okay.
but I don't know yet. Uh, we do have the options expiry at 24,799, so 24,800, which is quite a bit lower than where we are right now. We're at 24,933 at the moment. So I'm kind of like waiting to see an attempt to try and push up higher and then a failure and then push lower. But yeah. Let me bring my screen up. Let's do that. There we go.
That is a good plan. Hang on a sec, Rich. I'm getting some feedback issues on your side.
On my side.
Oh, that's better. No, you're all good. Yeah, you're all good. It may be me, but I was getting some audio issue.
Well, hopefully it's gone now.
Yeah, you're gone now. You're sounding all good.
Awesome. So we had the low of the week, which was established on Monday. So the low of the week so far has been Monday. Friday's highs we swept on Monday during the New York session, tried pushing price lower. We eventually came into a previous low area, and then we reacted strongly off of it yesterday. So very nice. You can almost consider it a reaction off of a base, even though this isn't a base, but it is a nice order block area on the hourly. Price started moving up from there yesterday, nice and strongly. We eventually closed above the previous day high as well as the Friday high, and we just missed basically last week Thursday's high. This morning, however, we have been trading above that. We've been trying to push above that. So I want to see whether or not we're going to have a follow through for a buy. But first, I want to see us pull back just a little bit. Maybe potentially come down to this options expiry point and then start picking up. However, if we just never reach that point, let's say we get to basically the highs of yesterday again, and then react off of that and try and push up, that would be groovy as well. But right now, I want to see us fail. If I just go down to the lower time frame, I want to see us fail, take the Tokyo high, and then start printing a bit of a downward action to get to this options expiry level, and then from there react bullishly. If we don't get that, that's okay. I'll just wait for a continuation of the bullish movement, and then try and get in on a buy. I did end up having that one trade yesterday that I ended up closing a little bit earlier. I spoke to...
Oh yeah, I just missed that. I think I was joining as you closed that. That was late morning, wasn't it?
Yeah. It was... we entered here on the close of this candle, and it was supposed to be a 1 to 2R. I was talking to LJ at that point, and I closed the trade as we were getting close to this area over here. So I closed it. I can't remember the exact number. I'll have to go and check now. I closed it somewhere over here, and we were talking about the idea of watching a trade makes you want to actively manage the trade. So if I had just left it, it would have reached TP in any way. It was still a good trade. It was slightly less than a 1.5R trade, but still a good one. So happy with that one. Didn't continue trading after that. I closed everything after my meeting yesterday afternoon, and then just tried not to die. Dude, have you ever done like a, you know what VIX is? Like VIX Vapor.
Like Vapor Up? Yeah.
Yeah. Okay.
Love VIX.
Yeah, so I did an
inhalation.
Steam? Yeah, steam.
Yeah, steam inhalation.
I did
so
that.
You boil the kettle, put it into a
nice like container.
A bowl.
Yeah, scoop
put some
of Vapor Rub, and then towel over the head, breathing that.
Yeah. Dude, that used to be the best. Like I don't know why. Like my mum used to do that for me. Like since being an adult, I can't remember the last time I did a steam inhalation. But dude, when I was ill, like that was the first thing my mum would do for me, especially if I was like all blocked up and nasally. Or I've had
Yeah.
a cough
So
or a bad chest.
so that's where I'm sitting. By the way, this was a full toilet roll yesterday. Yesterday morning, it's almost empty from blowing my nose so much. So anyway, done complaining. Done complaining. As you were. Wow, you're sitting incredibly still. Yeah, that's how good Will is. He's so good at sitting incredibly still that he disconnects. While he is disconnected, I'm going to say hello to everybody in chat and bring up some comments. Not going to bring up everybody's comment. If you're saying hi, this is a hello from me to all of you guys. Good morning to everybody that is in at the moment. I'm looking for something like this. Good morning. Short Euro USD. Let's have a look at Euro USD. Yes, that looks very good. Very good. You got in the pullback to the London Open, 115.44. 44. There. Okay. And I think a lot of people take the same entry or even above. They could. That does look nice, though. I mean, that is a good trade. Where were you aiming for? Or are you still in it? I mean, even if you're in it, depending on where your stop loss was your stop loss just above the Tokyo high? I mean, this is a scary trade if this kind of movement continued pushing up, and this was just a little bit of a retracement and then a continue up higher. But so far it looks good. Where did we come all the way down to? We came all the way down to sweep the low of the New York session. We literally just swept that. Looking good. A little bit more volumetric of a reaction. We'll see whether or not we can respect the 50 EMA. We'll see if that gets broken through, if we'll respect this area over here where we had the crossover, basically.
Yeah, what time have you got that London high? Sorry, that Tokyo high. What time have you got that to close on your indicator?
8:25 GMT plus 2, so that's 6:25.
Yeah, fair.
Is that the correct? Is that the correct one?
I think so, because it just shows to me that we've swept it. Let me have a look at what time I've got my indicator on. Oh, I've got mine to close at 6. Fair.
Oh, okay, so yours is there.
Like 20, yeah. I was gonna say, because it looks to me like we've swept Tokyo highs on my chart, and then we've dropped below and continued that. So I would have been looking into that short, but obviously it's too late.
So
Plus, I'm not
I use this website, tradinghours.com, to determine which opening time and closing time. So Japanese stock exchange is closed right now, but if I scroll down and I go and find it, am I past it already? No. Well, let's just click on that one. It'll show here my local time. So my local time 8:25. It shows it's when it closes.
Okay.
So this is what I use for the stock exchange times, as well as.
When you say it was tradinghours.com.
Yeah, tradinghours.com /markets.
I shall take a look.
This is what I've been using for, I don't know, like a good year and a half, maybe a year and a half.
Hong Kong Stock Exchange is closed. It's 10 to 5,
Yeah.
so that makes sense.
Anyway, as we were saying on the Euro USD, looking good for a reaction to try and push up from here. We would want to, what do we want to see? We want to see potentially, I'm just going to move this out of, a great trade, by the way, Stash, great trade so far. We want to see whether or not this area up over here is going to be retested and respected, because that was the last time we had a bullish attempt prior to sweeping the lows of Tokyo and creating this nice strong downward push. So if price were to come up, we can try and see whether or not it will react at the Tokyo lows. If the Tokyo lows is disrespected, as in we break through it, we want to see whether or not this 50 EMA is respected as well, which is going to be roughly close to this Tokyo low. And if that gets disrespected, we want to see whether or not this whole area up over here is going to be respected. If that doesn't get respected and we have a reaction to try and push price lower, it's a impulsive move right now. We've already broken this area of consolidation already. I don't know if we're going to have that immediate follow through to try and push price lower. I want to see Tokyo low first and foremost, where we are right now, be rejected. If it's going to get rejected, there is a potential, sorry, my apologies, for us to retest this low of the day so far and to try and break through that to try and push price lower. On the hourly, we were quite bullish. So on Monday, the lows of Friday was not swept. We started to print bullish price action, taking higher highs and higher lows in relation to the previous highs and the previous lows. Same for yesterday. Again, new higher highs, new higher lows. Today, we kind of reached a little point of consolidation from rollover into the Tokyo session. It's very slowed. And now we're having a stronger than normal reaction to try and push price lower. I don't know if this is impulsive. We've just swept that low. However, we haven't come closer to, let's say, this base area on the hourly. Come on, here we go. This is a nice hourly base. It is unfortunately just above, well, it's almost equal to the 50 EMA. So right now, yeah, just missed it. So right now, I would like to see us reject these highs, come back down, try and fill up this base area over here, and then start picking up and pushing higher. But if that doesn't happen, that's all good. We can potentially start pushing higher from where we are right now to try and reclaim this high over here. And then in so we can also, yeah, this is a nice level up here as well. We can potentially come and retest 115.65 to 115.73. That would be groovy as well. We'll see. We'll see what we'll see what we're gonna do on the day. Right now, bit of a reaction off of the New York low. Looking decent. I mean, even on the 50. The 1 hour 50 EMA, we're seeing a bit of a rejection off of it, pushing higher. I would like to see it push higher. What is GU doing? Something similar. Whole of Monday, didn't sweep the lows of last week, started creating higher highs and higher lows, came to a little bit of consolidation during the rollover, an attempt to push higher, a much more volumetric push down. We'll see how deep this pullback can go. Are we going to sweep the lows of the New York session? Are we going to then potentially, which would be then this base area that gets tested, are we going to go even lower and test yesterday's lows? If we're testing yesterday's lows, I might even consider this a potential continuation lower. That's if we sweep this. If we don't, and we're playing around this area and then try and push up, more bullish, obviously.
Yeah, I think we can pull back and start considering to look a bit more bullish. I think that'd be nice.
I mean, I didn't even check the hourly, but I mean, we have this very nice descending channel already, and we're just sitting on the upper section of the channel. It could be that we just
test
lower.
the top of that channel and start moving lower. I mean, like you said, we are in this clear bearish trend. You know that channel is trending very bearishly, and we've got that really strong close underneath it. We had that sort of like gathering of wicks rejecting the bottom, but then you can see we've disrespected that by just having that 2 candle push extremely bearish on the daily down.
The,
Yeah, bang on.
every day that we've had a bearish day, that bearish day has swept lows, but the bullish follow-up days have not swept highs. So definitely bearish on the higher time frame overall. Going a little bit lower, it does seem like we are in a short-term upward trend. It does make sense. Where EU has been even stronger with its bearish attempt and very little bullish movement. Right now, I think this is the most bullish action we've seen in this whole downward channel.
Yeah.
EU doesn't look as good to me as GU. GU has been looking a little bit more structured. EU is more volumetric downward pushes.
Yeah, EU's been the same for some time. Like we've had more volume in EU than we have GU at the moment, I think. I don't know. I'm struggling to trade the both of them at the moment. They're just both being a little bit unpredictable, should we call it?
I don't know if they're moving unpredictably. I just think that they're giving conflicting information. So EU, we've taken a very nice high. We've swept these lows, swept all of these lows already, whereas with GU, we've made a new high, but we've only swept this low, and we've not swept these lows down here as yet. So they're just a little bit, they're not convoluted. They're, no man, dude, like my brain is tired today. It's
just gargle words.
Yeah.
The thing is, like, I don't know. Like, I want to be looking at these pairs, and then I think, oh, okay, let's see what gold's doing. So I'll like move over to gold. Even gold's been a bit crap. You know, we've been consolidating in gold since Monday, literally since market open. Actually, we've been consolidating in gold. We attempted to push up a little bit, came straight back into the consolidation, and just chopped around there for the remaining 2 days. So, dude, I don't know. I think markets. I haven't said that we have got news out today at 8:30. Okay, so this is Hong Kong time. Okay, so at 12:30 we've got US news, core PPI, and then at 1:45, sorry, we've got Canadian Bank of Canada rates. We've got overnight rates, and then at 10:30 p.m. which will be 2:30 GMT, we've got the press conference, Bank of Canada. So we got a little bit of news out later on. Canada, not so much. I'm not really interested in the Canadian assets. But for the US dollar, I'm interested in to see whether that's going to affect price and whether it's going to slow price down.
So we do have the federal funds rate at 6 GMT, 6 p.m. GMT. So that's going to be the big one, I think.
Why haven't I got
overall?
that? I haven't got the federal funds rate.
Do you not?
No. Huh? Why haven't I got that on my? That's really weird. That's really, really weird. I've not got that on my thing here.
Okay.
Oh, okay. Sorry. Yes, I have. Yes, I have. I've just had to go on to Thursday because technically this is in Hong Kong time, so it's 2 a.m. Hong Kong time.
That's why I click the calendar and then I select
Yeah, and
the whole week.
more.
So I
Yeah.
clicked the whole
No.
week. You could have just selected today.
Yeah, I did. I
You could
literally
just select
just
the
had
whole
today
week.
on,
Yeah.
and I didn't click more. So yeah, fair. Okay, so yeah, that makes more sense now. Yeah, we do have the fund rate out today. I knew we did, but for some reason it wasn't showing. So yeah, we got FOMC, we got federal fund rates, economic projections, FOMC statement.
Yeah, I think
Um,
that's why you're seeing a little bit of a slowed reaction, for argument's sake, on UJ. If you look at EU as well, a little bit of a slowed reaction today so far. GU's the same, little bit of a slowed reaction. Yesterday and the day before, obviously, were strong bullish days. But today so far, yesterday
hang on,
with
let me
NZD,
change this. I'm gonna make
same
this
idea with
London time.
NZD yesterday. We closed quite a bit closer to where we were at open. We moved down, we moved up. We closed the day out very close to where we were. CAD as well, same thing. We pushed up, we pushed down. We basically closed very close to where we were on the day. So just very, very slowed, waiting for that news. That's what we're waiting for now. Nasdaq does look like it wants to start potentially pushing a bit more bullishly, even though we're kind of like just stuck here right now on the 5-minute. 15-minute is just very slowed.
Yeah, I've now changed my forex factory back to GMT London, and yeah, it's all come up properly now. So 12:30, 1:45, 2:30, 6 p.m., 6:30, 9:45. We've got everything from the US dollar to the Canadian dollar to the New Zealand dollar.
Nice.
That's so now I don't need to do mental arithmetic with the GMT +8.
Nice. SJ Forex is saying how you guys are dealing with losing streaks. Losing streaks, once
Good
again,
question.
is just part of the journey, mate. It's just you can do your backtesting, and when you do backtesting via MetaTrader as an example, you will see they will show you at the bottom consecutive losses and average losses, as well as maximum losses that you've had. That streak, that consecutive losses, is just an indicator. It's just you don't ever know when your losses are going to happen and whether or not it's going to be continuous. The problem with continuous losses is the mental impact. You start doubting your trading ability, you start doubting the trading strategy that you're using, and then you start looking for either a different strategy or you start thinking, maybe this thing is shot, so you don't enforce the strategy as you should have, or as you would have had you been a little bit earlier on in your losing streak or during a winning streak. So that's the difficult thing about going into a losing streak. Now here's where the mental aspect comes into play. It is realizing that that is outside of your control. It doesn't matter how good or how bad of a trader you are, losing streaks will happen. It's one of those guaranteed things. You have no control when it's going to happen or for how long. So there's a few things that you can do to help alleviate the pressure of going into a losing streak. One of them is reducing your risk. Give yourself a set amount of trades that you're allowed to lose in a row before you start adjusting your risk. Let's say hypothetically you were doing 1% risk per trade, and here by the 4th trade in a row, you realize, okay, something's going on here. It's either the strategy or the market itself is moving opposite to how you normally would have experienced it. Let me reduce my risk until I start winning a few more trades in a row, that kind of like thing, just so that I can make sure that my account survives this drawdown. That's one thing that you can do. Another thing that you can do is you can go and compare your average loss rate based on your backtesting and add 1 to 2 trades to that and say, okay, if my average losses is 3 in a row, I'll make 5 in a row. If I reach 5 in a row losing trades, I reduce my risk. That's another way that you can do it. the idea is when you go into these losing streaks, you don't want to lose your account. So there will be people that's going to tell you, dude, just full margin it and just hope for the next winner. I would not advise that, because what you're doing now is you're pretty much flipping a coin to try and get yourself out of this losing streak or this drawdown. You have no confirmation that your next trade is going to be a winner. So why would you risk so much? That's just gambling. Reduce your risk. Wait until you start winning a few trades again. Wait until you get your confidence back. Carry on from there. What would you say, Will? What is your advice to that?
Literally that, literally that. Just take your time, stick to your tested plan, stick to what your data is telling you. And if you are in a losing streak and you can identify it, yeah, like you're looking at this, like you get two different types of losing streaks. You get a mental losing streak and a statistical losing streak. You get a mental losing streak where you've lost 1, 2, 3, 4, maybe 5 trades in a row, and then that's a mental losing streak where you're starting to mentally question yourself and starting to beat yourself up, or maybe doubt yourself, because mentally you can see that you're taking these L's. Now then you have a statistical losing streak where you've looked at it and thought, okay, I like forget mentally now. This is a genuine that I'm hitting more than usual losses in a row here. So therefore you're now in a losing streak because it's more than your data on average tells you will get as a losing streak. Once you've acknowledged that, lower your risk and ride out the storm. Literally ride that wave, try and survive it, and then, like I said, just really significantly lower that risk until, again, not emotionally, like not when you start 1, 2, 3 wins in a row, because that's still emotional. When you start to statistically see according to your data, I'm starting to come out on top now. I'm starting to win more than I'm losing, or perhaps, depending on what your data says, depending on your risk, depending on your strategy, whether you're minus risk reward, positive risk reward. Once you start statistically seeing that you're coming out of the woods, that's when you can start increasing your risk back up to what it was. Or perhaps, when it comes to the P&L, maybe you're getting back up to a break-even state. Then you can start increasing your risk a little bit more. But that would be my advice. That's what I would do.
Yeah, I would always look at trying to, if things are not going my way, to try and conserve rather than brute force my way out of it. I mean, one of the worst feelings is you go through something which is typical, which is normal, and you blow it out of proportion, and then you lose the whole account. So it's the understanding that you're going to go through this, and just think about it rationally. Try not to have your emotions overwhelm you and make you take decisions that you normally wouldn't have made had you not been in that emotionally compromised state. So I think it's always best to just try and, if you realize, I'm being mentally affected by this or emotionally affected by this, or I'm having, as you just explained now, more than expected or more than normal loss rate, let's put it like that, just consider reducing your risk. Just there's no harm that can come from reducing your risk, apart from your next few winners are not going to be as large, and it's going to take you a little bit of time to win back what you have lost. However, psychologically and emotionally, you'll be in a better state of mind, knowing that, okay, I'm at least breaking this losing cycle. I'm at least getting back to my expectancy realization of my strategy. So it's always a good thing. Just reduce risk a little bit. Anthony Vasquez is saying, wait, we can trade through TradingView with the fivers? How? You can't. We're just doing our analysis on TradingView because the drawing TradingView as a drawing platform is better than doing it on, for argument's sake, MetaTrader. MetaTrader doesn't give you the freedom to do your drawings and your analysis. It's a lot faster, it's a lot quicker, and you can quickly jump between them without having to open up a new window for each one of your assets. So unfortunately you can't trade via TradeLocker or TradingView. So for the time being, it's MetaTrader, it's CTrader, and then we also have a platform for the futures channel as well. There was a question here.
Yeah, TradingView is a lot better. I love TradingView.
Yeah, I wouldn't
And
trade.
no, I'd never trade on TradingView. I'd always analyze only. But especially even when you're on your phone, like even on your phone, like if you have a big phone. So I bought myself the new Pro Max. So because I bought the Pro Max, the screen's a bit bigger, and you're able to do your own analysis on it quite nicely. A friend of mine has one of those like flip phones. They are awesome if you're a trader that travels around a lot. Literally open your phone and turn it out, and then you can use TradingView. It's all a lot easier to use than MT. MetaTrader 5 is great. I love it. It's one of my favorite platforms in the world. But I hate analyzing on it. I'll always do all my analysis on TradingView.
Yeah, I'm not a fan of using MetaTrader as an analysis tool. For me, it's just plain trading. I'll do my trading there. I'll analyze here, and that's why I think it's important getting a broker information that's as close to your TradingView, as close to your MetaTrader information as you can, so that when you do your analysis on TradingView, that the pricing is as similar as you can get it. So, like for argument's sake, if you're trading via Awanda, use Awanda's data feed for TradingView.
Yeah,
make it
it's
simple.
a shame the Fivers don't have.
The thing is, the Fivers receives its data feed from multiple feeds.
Yeah, exactly.
And then it basically averages, or at least tries to use the best in that moment. So I found that the Awanda feed works the best for most of the assets. And then there are other assets where I think it's FXCM works really well as well. That's close enough, but you can literally just go and compare one for one. So with NASDAQ, I use IC Markets' data feed because it's the closest that I found to the Fivers' data feed. But, bar some information here and there, there's maybe TradingView will show you a candle, but on MetaTrader, the candle will only be the next one. Usually happens with rollover, stuff like that. So
I don't mind stuff like that. I don't mind a slight lag or a slight delay or a pip or two out. Stuff like that doesn't bother me at all. It's when it's like 10 pips different, or there's gaps, and just it's stuff like that that winds me up. So like 90% of the time, providing you're using something relatively similar, they're all much of a muchness.
Yeah, they're all very close to, but still make sure that if you're going to use a data feed, it's the one that's as similar to the asset that you're trading on the terminal that you're trading. Yes. Okay, so AUD USD, I know that LJ is actually the more fond, or the actual better person to ask for AUD USD, because he's always watching AUD USD. But from my point of view, we have been quite bullish since Monday. Same idea as we've had with GU and EU, seeing quite bullish movements for the whole week so far. Doesn't mean that we're going to close the week bullishly. If we look at the daily time frame, we did come down and react basically off of this 50 EMA over here. We are constantly making higher lows, and we've already had a higher high last week. Now it would be interesting to see whether or not we can continue this upward trajectory that we've had on AUD USD. However, we have this. It's on the 15-minute, you can see it a little bit more clearly. So we've had multiple reactions around this area, trying to push price lower. We've broken through strongly, come back to it, broken through, reacted, consolidated around this area, and we've pretty much just wicked it now this morning with the Tokyo session close. So I want to see whether or not we can actually break into this area and continue pushing up, or whether or not this reaction that we're having from this morning is the actual push to try and sweep a little bit lower. Will is just going to quickly go and fix his internet. So if we just look at this trend over here, this is basically the channel that we've been having the whole of this week. On the 15-minute, you can see it nicely. We've come to a point now where we've broken just below this channel right now. We had a little bit of a retest, and then it did seem like it wanted to push. However, we didn't even sweep the low of the Tokyo session, let alone the lows of yesterday's sessions, the New York session, London session, and then the low of the day yesterday. So right now we've swept the high of yesterday, and we've reacted off of it, but we're struggling with follow through. And the thing is, now we have a little bit more volume coming into play with the London session opening up now, a little bit delayed reaction to try and push it lower. So I would love to see, personally, I would love to see us retest the channel, break through, come and test this area up over here, this area of interest, and then decide whether or not it wants to volumetrically start pushing lower. However, being that it is a US fund rate day, high impact news day, I would most probably just be out of the market today, just in general. Just
100%.
Stick out.
It's not like a, you know how you get like in, you know, levels of your red impact, like you got red impact, you got red impact, and you got red impact. Like you can sort of understand the levels of your red impact news, of your high impact news. Like a fund rate, like, you know, rate decisions in any currency is going to be high up there, you know, high impact decision or high impact news. So especially a day like today, when we've got a major sort of high impact news, then yeah, today for me is a no trade day.
Yeah, I don't mind taking trades early in the day or earlier in the day.
The only issue is with that though is that there's just low volume, I feel.
I mean, this is decent enough price action.
True, yeah. Okay,
and this is
fair.
AUD USD. Like it's not even as, let's call it as volumetric as, for argument's sake, Euro USD or GBP USD. I mean, there is moves. So
yeah,
I just closer we're going to start getting to the news, like let's say 2 hours before the news, we're really going to see either like just indecision across the board, like just waiting, or we're going to see just flat. We're just going to see no volume waiting for the news. So it's either going to be a lot of,
or you're just going to see random. Yeah, you're just going to see random, or you're just going to see like random spikes where people are bailing out quick or bailing in quickly, or you know, you're going to see like the last minute decisions.
Yeah, I don't think we're going to see moves like this just building up. I think
maybe moves like what just happened straight after that move.
Yeah. We can see stuff like that. We can just see just good old fashioned, just like very slowed momentum, or we can see like very small like this.
Yeah,
we can see small.
I was literally going to say just a lot of nothingness.
Yeah, just a sheer slowed waiting for the news, because the thing is, the US fund rate is always a market mover, always.
Yeah, 100%.
It's just
it is what moves the market. You know, it's one of the biggest contributors towards market movements.
Yeah. So yeah, as I was saying, with AUD USD, we do have this area down here, which is a breakpoint for me, and a breakpoint for me means that it's effectively just a support or a resistance point. Just as easy as I can play it like that. Right now, breakpoint to me means we've had an establishment, we've had a reaction, we've had another reaction. So it's a support. It's a static support. So it's not dynamic. It's not like a EMA that is constantly changing and then we react off of the EMA. This is a price point that we are reacting off of. So a static area of support. And the idea is if you eventually break through and retest and continue, this is the breakpoint. That's the area where we finally break through to try and push into an opposite direction than what we've had. So support becomes resistance. That to me is breakpoints. So as simple as that. Right now, this is the strongest support on the lower time frame. So this is 5 minutes already, and it just so happens to be the low of the Tokyo as well, which just gives it a little bit more, more attraction in my mind to want to see this area broken, or at least reacted off of volumetrically, and then a new bullish push is established. So this to me is a very nice area of interest right now on AUD.
Yeah, I mean we're in a nice area as well now. If you look to like immediately to the left, we're in like nice area where we could potentially drop lower and go ahead to break. Yeah, bang on there. You know, where we could have the move to break.
Yeah. I mean, much shorter term, but it looks good. The thing that I did like was the fact that we had the high of the day, which was very close to this zone that I marked out. And then we had a lower high with a few bullish candles that tried to push it up. And then we had a nice volumetric breakdown. I mean, if I traded, or if I was trading AUD USD, I probably would have tried to be in on a trade either as we were breaking these lows, so on this candle, or I would have waited for my drop-based drop, which would have been, this is the drop, this whole sequence of candles after a new change in, so you had the high over here, you had the low, you have a lower high, you have a lower low, and then this is the base candle, and then the affirmation of a continuation pushing lower on that candle. So I probably would have tried to be in on the close of this candle. My stop loss, I would have had to have tested this first, like done back testing to know what would have been the best static stop loss that I can have. But let's assume it's 5 pips in this case, and then I would have looked for a 1 to 2 or a 1 to 1.5 as an example. So 1 to 2 is all the way down there. I want to sneeze.
Bless you. Oh, there's never 2 without 3. Is there gonna be a third? That rule doesn't apply when you're sneezing though. So there's never 2 without 3 unless you're sneezing. Oh, is it? No, it's not. Yeah, no, I like that area as a potential, like as a sell. I like that, but why wouldn't you have put it at the swing high? Like, why would you put your stop there?
Like I said, I needed to backtest it first.
Yeah.
To me, if I can just clear up all of this. Come on.
Yeah, no, it's not going to work for you today, mate. You're getting what happened to me yesterday. Nothing, just nothing wanted to work.
So, generally, the way that I look at breaks, or let's not call it breaks, changes in the characteristic of the movement. So if we're having higher highs, higher lows, and then we start changing that to become lower highs and lower lows, generally, your movement is at its strongest when you've reversed, when you've just reversed. So in this case, we've had this upward movement that we've had here, and this was the reversal point. And then your strongest move comes after this has been established. So your first, this is your high, that's your lower high, that's your low, that's your lower low. So your very first lower low after you've established the change. So 1, 2, 3, 4. This movement here is going to produce your strongest push down, I've found. So you'll notice that this movement here is more strong than this movement. So to me, having my stop loss not be too high or even at the previous high is good enough, because let's not say statistically, but like based on my back testing that I've done on EU and GU, when that happens, generally this push that we have from here does not even remotely come close to those points. But once again, with AUD, NZD, all of these other non-euro and non-pound major pairs, I haven't backtested to go and say, oh, I think 5, 8, 12 pips is the perfect
that
stop
makes
loss
sense. That's why I like swing points. You know, it's just a comfortable point where I'm like, you know what, it has to be an invalidation according to, you know, overall technical analysis. I'm like, yeah, I like that.
Yeah, I mean, fair. But the thing is like, I think it's Griff. For those of you who don't know, Griff has got his own YouTube channel. You guys are more than willing to go and check him out there. He had a video that he was looking at. I can't remember what it was called for the life of me, but it basically boiled down to optimizing your stop losses. And there comes a point where you can say, yes, I'm going to have my stop loss up here, I'm going to have my stop loss up there for a movement that's happening down here, which it makes sense. But if you go and look at the data from all of your trades that you've taken, you realize that, like, okay, there's only a small amount, a small data set, or a small handful of trades that actually end up bringing your stop loss and hitting your stop loss over here, where the rest of them maybe goes 3 pips into drawdown and then starts the movement, or some of them go 5 pips into drawdown and then start moving lower. And it's that optimization, I feel like, that he's done that looks so appetizing for trading, because you know on your data set that you've, your backtesting that you've done, that, okay, on average, 80% of all of my trades doesn't even remotely come close to 10 pips in drawdown. 80% of them is 9 pips or less. And then you go and look at what is your average winner, what's your average loss over that time frame, and then you realize, okay, it really doesn't make sense to have a 10 pip stop loss, or let's say in this case a 15 pip stop loss, where the majority of your trades do not even reach 10 pips in drawdown. And then you look at your, the profits that you made off of those, and then you realize that you could have had a much better risk to reward ratio had you not had your stop loss as high and moved it a little bit lower, and then on top of that your return would be better, because even though you're risking 1%, it's now, instead of a 1 to 2R trade with a 15 pip stop loss and a 30 pip take profit, now you're down to a 10, so now it brings you up to a 1 to 3 RR. So in turn, you don't need to win as often because your risk to reward is better. So it's that like cascading effect of optimizing where your stop losses are. So having a swing point is one thing, but obviously then having the idea of having your stop losses be more optimized, potentially it can have an impact long term on your trading. So that's one of the reasons why I would not have it like necessarily at a swing point. But I have to back test it.
Well, it's like the conversation we had the other day. It was the ability to optimize the trade risk reward, the trade entry, the trade exit, and providing you got the backtested data to back it up. 100%.
Yeah. Just looking through chat. For everybody that's in today's, thank you very much for being with us every single day. If you haven't already, please drop us a like, please subscribe if you haven't either. We're very, very, very lucky to have you guys join us every single day, and we would just love to, get this information out to more people. So the more engagement we get, the more likes, the more subscribes, the more the YouTube algorithm is going to try and push our content onto more people, maybe suggest it to more people. So yeah, we would love that if you guys can assist us with that, please.
Yeah, 100%. Yeah, and it is super cool to see you guys join us every single day. We get to know you guys as well. Like a lot of streamers will just. I've seen so many streams on like live. So okay, fair. Guys, I'm really not so well yesterday and today, so I do apologize if my energy isn't there. But I want to show up for you guys anyway, because like I love you guys. You show up every single day for us, so I'm gonna make sure that I show up for you. So my energy may be a little bit down today
Mm.
and yesterday, so I do apologize about that. However, I most of the streams that I have watched in the past, and it's literally this. Hey guys, yeah, thanks guys. Subscribe, guys. Yeah, it's just so boring, and I feel like there's no connection. Whereas, like here, not only do we want you guys to succeed as traders, not only are we, yes, of course, a prop firm, we are also just streamers. We're just traders, also, part of a community. So we want to make sure that we
Mm.
get to know you guys as well as you get to know us. We want to genuinely create that friendship and that bond between ourselves and you guys. So,
Yeah.
we are genuinely passionate about, trying to push out into a bigger audience. It's not a case of, oh yeah, we just want you to like and subscribe so we can get bigger. Yeah, of course, as far as the business is concerned, that makes sense. But for myself, Rich, everyone else behind the scenes as hosts, we genuinely want to make a bit of a difference in this industry.
Yeah. One trade at a time, one trader at a time.
Hmm.
Sincha saying, "Hey Richard, I'm being respectful. Can you tell me how to handle to hold trade for a long time?"
That's a good question.
If you were here yesterday, Sincha, you would have seen that I'm probably not the best person to ask about holding a trade for a long time, because I myself did not hold my trade to fruition as I should have. LJ is going to be on in a little while. I think he's probably the best person to ask this. I can tell you in theory what you should be doing, but I myself do still struggle with the practice. I do still struggle holding my trades to fruition, especially if I'm looking at it. For me, it's the idea of out of sight, out of mind. So if I enter a trade, hypothetically, this is not an actual trade, I'm just trying to use it as an example. If I decided I'm going to take a buy here and that's going to be my stop loss and my take profit's going to be all the way up there, if price were to start pushing up, I'm going to feel like, if I'm watching it, I'm going to feel like, okay, it's slowing down significantly over here. I'm just going to cut my trade short, and then that's going to be my trade. Whereas if I'm not watching it, if I'm not at the terminal or at my PC, I'm doing something completely different. I can't. I don't have it on my phone, so I don't have my terminals on my phone at all. I don't trade when I'm not by the PC. In that case, if let's say I'm at the gym or something and I'm in a trade and I'm not watching this, more often than not, it's either going to hit there or it's going to hit my stop loss. It's going to be one of the two. But if I'm going to be sitting and watching this, I'm going to be like, okay, it's slowing down heavily. Okay, I can see that we're getting this kind of action here. We've made a lower high. This is going to reverse. And then I want to close the trade. So that's what I'm saying. In theory, I can tell you what you should be doing, and that is to find a method to help you not want to micromanage your trade. But I would also advocate that you only do that if you have back-tested data as well as forward-tested data that kind of like bolsters your hypothesis, that basically says, okay, I should be holding my trades for longer. But if you are somebody that struggles, like myself, with micromanaging the trade while you're watching it, just walk away once you've taken your trade. Make sure your stop loss and your take profit is placed properly, exactly where you want it, according to your strategy, and then you walk away. Go and do something different. Like, this is something that Ashley is currently on holiday. When she's back, you guys can talk to her about this as well. But this is something that I like about what she does. She only trades on her phone, and she only trades when she goes for a walk with her dog. So she'll look for her trade entry. She'll put it on. Okay, there it is. There's the buy. She buys. She places a stop loss to take profit. She takes her phone. She puts it in her pocket, and she goes for a walk. And then when she's
Yeah.
done walking the dog, she comes back and she's like, oh, okay, I hit stop loss, or oh, okay, I hit take profit. She doesn't micromanage the trade. She sets and forgets. She does something actively to keep her away from her trading, which I think
Yeah.
is great. If you are somebody that struggles with that, that's if your strategy requires you to be more set and forget.
Especially if it's a mechanical strategy. So when I
Yeah.
was first going full-time trading, I played a lot of golf. I was very bored, and my dad said to me, he was like, "How about we go play some golf? You know, golf is great for getting out and doing something. You know, getting some exercise, especially if you're bored." I was like, "Yeah, screw it, let's go play some golf." You know, I hadn't played golf in like 9 years, so I used to literally say to my dad, right, I'm going to be analyzing the markets now. I'm going to be doing this. The minute I had like a cutoff, and I think it was like 12ish, and I'd be like, let me analyze until this time. If I don't see anything after this time, I'll shut the markets down and then I'll go. And that's when I was trading London only. I would literally place a trade just before going out, and then boom, I placed the trade, set my stop loss, set my TP. I'd set alerts just in case, and then I'd go on the golf, of course, you know, and then I'd have a ping, move stop loss to break even, or for example, break of structure, and then it got to the point where I was just checking my phone all the time on the golf course, and my dad was like, William, look, you know, you've come out onto the play golf to get away from the screens. What are you doing? And I thought that's a fair point. And my ex-partner at the time was you know, for reasons I'm not going to go into, would always call me when I'm on the golf course. And I thought, and he literally said to me, he's like, for God's sake, William, turn your phone off. You've got your partner at the time. You've got your partner
Yeah.
spam calling your phone. You've got you've got your trading spam messaging you with alerts. It's like, you may as well be in your office. What's the point in being here right now? And I
Yeah.
said, that's a fair point. So I thought, you know what? There is no break moving trades to break even. There is no alerts, and there is no partner spam calling me. I literally got into the car park, took my golf bag out, went onto the golf course, and the minute I got onto the golf course, my phone would go off into the bag, into my golf bag. I'd go do 9 holes or 18 holes or whatever I'd want to do, go back to the clubhouse, chill for a bit, have some lunch maybe, go back to the office, and then I would find out whether or not I'd hit TP or stop loss, or whether I was currently still in the trade and how many missed calls I'd had.
Yeah, it's very freeing if you go for a jog and you don't have your phone with you, mate. Like, no
100%.
distractions, nothing to the sort. And even if you wanted to, you couldn't play with your trades. There's a
That's the
question
luxury.
here. There's a good question here from Chin saying, may I know how you guys calculate your risk and reward? As in, my 1% is USD 50, and I am using MetaTrader 5. I always need to use external apps to calculate the risk for my stop loss, or MetaTrader 5 has it. I just don't know. All right. Free advice. And this is all thanks to Victor.
I used to be the exact same as you, Chin, until this absolute legend showed me this.
It's not me. All of the kudos goes to Victor. Okay, so I don't know if you guys can see this. I did change it to dark mode so that it's a little bit easier to see. Okay, so I use a thing called Position Sizer. Now, Position Sizer, it is a free-to-use EA, an expert advisor. It's not a bot in the sense that it's going to take trades for you. It is a risk calculation EA, meaning if you place this on your chart on MetaTrader 5, you have a MetaTrader 4 version as well as a MetaTrader 5 version. You can go to earnforex.com and then search Position Sizer Calculator or Position Sizer EA, and you will be presented with this. So what you have is a position sizer that you can choose how much risk it needs to play or put onto your trade based on A, the asset, B, the amount of money that's in the account, and like whether you want it as a dollar value or whatever you want to do. So in this case, mine is set to 1% risk, and then this 1% risk is going to give me, for argument's sake, a position size on NAS. This is NAS, the NASDAQ, 1.98 if my stop loss is $25 or 2,400 points away from the current entry point. If I drag the stop loss, you'll notice when I drop it that my risk changes here. If I just change it back to $1 or 1%, my position size changes. So have a look at the position size. As I'm dragging it, it becomes larger position size, a lower position size, but my risk in dollar over here stays the same. It remains 1%. So go and get yourself this free to use, easy to install. Just read all of the information on the website on how to use it, and then play around with it on a demo account and see if you are happy with it, and then you can trade it. The nice thing is you can see exactly your risk across every single one of your terminals that has this one on. So not terminals, like if you have NASDAQ and gold and EU and GU and whatnot all on the same terminal, you can see across your whole portfolio what your risk is across all of the assets that you're trading with this risk calculation on it. You can see what your margin requirements are. You can see the swap rates. The swap rates is also directly drawn from MetaTrader as well. So I know if I have and this is per in my current position size. So my current position size is 0.7. This is going to be my daily swap should I take a trade and hold it overnight, considering that Wednesdays on Forex is triple swap rates. Just remember that. So it's going to be more on Wednesdays. That's why right now it's on 3. If this was Tuesday, Monday, or Thursday, this would have been 1 USD per lot. Okay, and then you can have set TPs like 1-to-1s as an example. Let me just do that. You'll see there is the 1-to-1. If I drag this one closer, because it's locked, it's going to stick to that ratio. If I go to 1-to-2 and I just click the 1-to-2x, it automatically updates it. And it moves depending on how far my entry is from my stop loss. And it automatically calculates it for you. And it works on every single last asset that the Fivers trades with. It works with all of them. Free to use, and it's simple and it's easy. It's the fastest thing. The nice thing is I can have an instant, I can have a pending order, or I can have a stop limit. And I can have any one of these formats to trade. And then all you need to do is, once you're happy with your risk profile, where your stop loss is and all of that kind of like stuff, you just click trading and then you click the trade button. You can ask for confirmation. You can make sure that do not apply the stop loss, which I do not advocate. Always have a stop loss. You can say it doesn't need to apply the take profit. You can have an open take profit. And then afterwards, you can go and have your trailing stop as well. So once it reaches a certain limit, you can put in a trailing stop and you can just leave it and it will automatically close the trade once it hits that stop, and it will automatically adjust the stop loss as it needs to. I honestly don't trade without this anymore at all. Earnforex.com, free to use position sizer EA. Free to use. I think this is the latest version, is version 3.13. Dude, I will never not use this anymore. Like, this one-click trading buttons that you used to have here, they're gone. I don't use them at all anymore. There's no thinking, there's no worrying about your position size.
I use them on my laptop.
Yeah.
Yeah. I use them on my laptop, but I know when I get back to the UK on my big setup, in fact, I did it live. I set up this EA live on stream with you guys, with Richard. So yeah, when I get back to the UK, I'll be straight back onto using that.
Yeah, personally, to me,
have I cut that?
I love it.
Yeah, it is amazing.
Yeah, like Quan is saying, he used ChatGPT to code him an EA for MetaTrader 5. That's great. I mean, if you are somebody that has that A, knowledge, B, willingness to spend the time, and then also have it incorporated. But if you're somebody that just wants a very quick plug and play, just go and get it downloaded and install. The earnforex.com one that I've had or that I use, I've had zero issues with it whatsoever. Yeah, okay, I'm lying. We've only had one issue with it, and that was after MetaTrader 5 had an update. And then the way that EAs, or at least in this case indicators, are printed, it disrupted the way that they were printed, and it used a lot more processing power to draw the lines and stuff like that. So it was slowed down. And all you needed to do was just change your display font from the, I think it was Courier, was the default one, to Arial, and it was fine. But since the update that we've had, I think 2 weeks ago, 2 or 3 weeks ago with MetaTrader, that has completely been fixed.
I think about that. Maybe in a bit longer, actually.
So here is the link for it. It's www.earnforex.com MetaTrader Expert Advisors Position Sizer. You have a MetaTrader 4 version and a MetaTrader 5 version. Like I said, they give you all of, you don't have to log in or anything. It's free to download. It's free to use. You can literally read all of the information on the website, and you can go and get all of the, learn exactly how to use it. It's very, very, very intuitive. Yes, it's a bit of a read, but it's great. I would always use this one unless it stopped working.
Yeah, 100%.
Ujawal, issue has still not been resolved yet. It's been 2 days. I lost my account on Monday due to server issues. Okay, so everybody that's in chat right now, they have sorted out the problem. It's not an internal issue with the Fivers. It was an external issue. However, everybody that has lost an account, if you were here yesterday or the day before, I gave you a link, an email that you could go to. It's help@thefivers.com. You could email them there, and they would start working on your accounts as soon as possible. Now, I can't give you the numbers, and I cannot give you specific details because it's private. However, I know for a fact from the information that I've seen that they're working on it as they can. They're going on it on an account-to-count basis, making sure that every account is given due diligence and checked properly before they just scratch it or replace it. They're looking at every single account right now. So all I'm going to ask you is if you have already sent your information, the account detail, maybe a screenshot to help@fivers.com. If you've already done that, all you need to do is just be patient. They will get to your account. It's in a queue. And remember, there's thousands of traders and thousands of accounts that were affected by this. So each and every single one of them is being looked at and being sorted out. So if you've already done that, all you need to do is be patient. If you haven't already sent any information via help@fivers.com, please go ahead and do so now. But do know that you're going to be put into a queue, and that queue is already a few thousand accounts long. It's gonna take time to work through all of it. So that's all it is. If you've lost an account, or you've lost a lot of trades, or you've lost equity in your account on Monday due to the issues that we experienced on Monday, please go and follow that link. Don't do it via Discord. The Discord side is already swamped, and they can't get to all of that information. If it goes to the help@fivers.com, then that goes into a web server where they can get all of the information very quickly.
Mm-hmm.
So like this, they ask for the IDs for the trades. That's why I said take a screenshot of your trade history. It will give you the ID. The number should be there. So if you have MetaTrader 5 open, you should be able to go on your history and then right-click on the top bar where all of that information is set, like start time, close date, or close date, close time, that kind of like information. You should be able to get your ID there. So every single trade has its own unique number. That's what they're looking for. That's why I said take a screenshot and add that to your email. That's the easiest you can do.
Precisely.
Yeah. Now I wait. That's exactly it. All you have to do is just wait. Like I'm saying, guys, this is going to take a while. A lot of accounts were affected by this, but it's not the Fivers' fault. This was an external issue that caused the Fiverr's network to be affected. So, not the Fiverr's fault, but they are working diligently to try and fix this. So, all you need to do is just be patient if you've already followed what I've explained. So like this, for account-specific issues, please use the live chat on our website or the email. The team is working through the request as quickly as possible. So, and believe me, I've seen all of the messages, I've seen all of the communication. They're working as hard as they can. Honestly.
Yeah, I've got a good comment here, which is a comment of the day. Please give me an iPhone 17 Pro Max as a gift. That is the best comment I've seen all day today. That is such a high value comment, which is clearly relevant to everything we've discussed today, which I love. So yes, I will definitely give you an iPhone 17 Pro Max just as a gift because
Dude, weren't you the one that brought up the information about the iPhone 17 Pro Max?
What?
What phone have you got? What phone have you got, Will?
16 Pro Max.
Okay, so you're the one that brought up the Pro Max. So that's why people are asking you for it. Earlier!
Oh, that's fair. No, okay, apologies. Yeah, I did actually. That's
I may
on
be
me.
tired. I may be tired, and my mouth doesn't always take what's in my brain and converse it properly. But my memory, mate. Elephant.
Your ears are fine.
Elephant memory, mate. Hello, LJ.
How are we doing, guys? Yeah, sorry if I'm a bit depleted today. I've had some family stuff going on. So
All good, mate. All good.
Yeah, it's all gravy, baby.
yeah, a bit rough. But yeah.
You are
We
here.
power on. We power on.
Absolutely,
Yeah.
all good and good.
Power on.
I was gonna say, hang on. Let me bring up my screen.
What are you going to show us, mate? What are you going to show us?
I was just going to say some of the Iran updates through here. We got Sri Lanka every Wednesday. They're going to have Wednesday being a day off because of the increase in oil costs, right? So they have a day off. Everyone basically gets a holiday. Very good for them. Thailand urging people to wear short sleeves rather than suits to reduce excess air conditioning costs. Myanmar, they can only use private vehicles, whether it be Uber, taxis, that kind of stuff, every second day. Philippines and Vietnam recommending work from home. We got Bangladesh having introduced rolling blackouts as well. Same with South Africa for the rolling blackouts, and LJ's house with rolling blackouts. So, I don't know if these two are quite related to the current situation. I think,
no, they're not.
Rich, you and
No, they're
myself,
not.
that might just be a bit separate, but we got rolling blackouts regardless. So that's us right there.
Yeah, our
Nothing
rolling
to do
blackouts
with,
are not related to the oil,
current
mate.
situation.
Yeah, not related.
There you go. So we got these guys crossed out, but the rest are all.
The rest is valid.
Yeah. So
Yeah,
I don't know why we're getting it, but it is what it is. Right?
yeah.
So yes. There you go.
Dude, I love that. I love that. I think it's Australia, or at least in this case, it's LJ and South Africa. LJ and South Africa is just experiencing rolling.
Dude, I swear.
We've been experiencing rolling blackouts for years, like literal years. All right.
Yeah, I know.
call it
Yours
low-
is
Yeah,
like,
they were
oh,
doing it
someone
before
stole
us.
our copper.
Yeah, we call it
Oh,
load
damn.
shedding.
The
Yeah,
copper's gone.
we call it load shedding, mate. Like we've had it for years. All right, this is not new. We're used to it. We have an app. We have an app for rolling blackouts. So, welcome to the party, mate. Welcome.
You got
welcome.
the app and the generator over here
Yeah,
waiting,
yeah,
right? Yeah.
yep.
See, for me, it's mainly because we have this thing for the Olympics, the Rugby World Cup next year, that kind of stuff. So, dude, this doesn't happen in Australia. That's why I want to move. like we had the water turned off the whole day today as well, which came back to the problems
Oh my
I
god,
was
you
having
really are
last week.
basically living in South Africa right now.
Which, yeah, I basically am. Right, I might as well be. Right, so
The northern hemisphere has wars. The southern hemisphere doesn't have electricity and water. I mean,
dude,
what are we to do?
I'm right dead center in the city. It should be good. We don't have this here, right? I pay enough money to not have this, right?
Oh,
You know what I
you
mean?
think us South
Dude,
Africans
I,
don't
I,
pay
I
enough
said the
money?
exact same about my Wi-Fi, but here I am using my data on my phone. I literally said to the guys, I was like, I'm paying enough money to have good Wi-Fi. Why don't I have it?
You can't.
That's what I
always
mean.
get
So
what
I
you
think
want.
from the problems
If you
I had
try
last
something
week,
like
they like today they turned off the water, that kind of stuff. They like I'm like, dude, do any of these guys have like the what is it, like the thermal cameras, just to find out where this is going, fix it, then you're done. It's been like a year now. It's ridiculous. So that's part of why I want to move. So you guys might see a new home ground for me later on.
New setup.
But yeah.
Dude, move to South Africa and let me just give you a proposal. Let me just sell you on the idea.
Okay. All right. Sell me. Do it.
Okay.
This will be interesting.
So South Africa and Australia have very similar cultures. Very similar. We're also very sporty groups. We love our barbecues, or in this case, braais. We love the outdoors. We are a coastal country, so we have the same surf, you know. So if you are an Australian, you're going to fit right in South Africa. Same, like, you know, vice versa. We have the same problems, water and electricity issues. So you'll feel like you're right at home. However, South Africa is a lot cheaper. So you get more bang for your buck.
Yeah.
So
I mean-
But also, dude, in Australia, I don't have to worry about my PlayStation getting stolen. What about
dude,
that?
I don't worry about
I mean-
my PlayStation being stolen.
You know what I mean? Like, dude, do I need to put up security bars on each of the doors? Like,
That's the lovely thing. Every
What are we
house
talking
that you
about?
have here already has it built in.
case in point, dude. Case in
Yeah,
point.
dude. Case in point, mate. Case in point.
Or-
You never have to worry about it. You never have to worry
I got-
about it, mate.
I got an idea. You come to Wales. We've got none of that plus rain.
Yeah,
Yeah,
exactly.
so-
So, it's very slippy
you-
for them to come up, and they slip
Yeah,
over,
yeah.
and then you get the AI, and you just yeah, you're done. Or you guys would probably be you guys are like way back then. You're still shooting arrows.
I was
Oh,
like sticks and stones, mate.
yeah.
Dude, we're whittling, like we're there, like
Dude,
whittling
From the castle. From the castle.
Dude, South
Yeah.
Africa's wines are world class, mate.
100%.
We've won many
South
awards,
Africa
mate.
and
Many.
New Zealand have the best wine in my opinion.
And dude, Australia as well. So go like Tasmania, Victoria.
I don't know. Australian wine's okay, but
What
South
Australian
Africa,
wines have you tasted? Because they're in the same region. I've done both. I haven't done South Africa, obviously,
Yet.
but like
Yet.
the south part of Australia, beautiful. Like honestly, that is like food in your mouth. You're not just having wine; you're having a whole meal. It's so good. No,
I find they
seriously,
do better
like,
whites.
I was about to
Oh.
say, you can see that LJ is tired because
Oh, beautiful.
his metaphor and his analogy is just like, dude, it's like food in your mouth. It is food.
But
What do you mean that's
It is in your mouth.
That doesn't mean I'm tired. No, dude, that's fair. It's
like
it's a
food
whole
when
meal
you
in your
drink.
mouth. Like that's just simple. That's more just like I'm Australian. Like it's very black and white. Yes, that's a whole meal in your mouth. Like when you have a perfect. Like,
We have
cab sauv
pinotage,
or
mate.
something.
We have pinotage, which is a South African thing, mate.
Yeah, exactly.
And our Shirazes and our
cab
cab savs are just as great. Merlot, dude, I love Merlot. Merlot.
Yeah,
I do like it Merlot. Yeah,
that's what I'm
to be
saying.
fair,
When you have
I
a
like,
perfect like cab sauv, a certain red, with that in your mouth, that's a whole meal altogether.
Some
Simple
people
as that.
be
would
honest,
argue that beer is the same, you know? It's like a whole bread.
No,
All the carbs and
no.
sugars.
No, get that yeast out of here. Like, what is that?
Yeah, literally.
No.
I'll be honest. Some of the nicest wines I've tasted have got to be like Pinot Noirs from like Loire Valley Way. When I was touring through, like you got to get to some of the vineyards that aren't as big and well known, and they don't distribute worldwide. And some of their wines was just absolutely beyond good.
Yeah.
11 a.m. in the morning, and you guys are already talking about alcohol. Not bad.
Hey, it's
I
hey,
trade
it's
at
5
5.
p.m. somewhere. Yeah, it is 5 p.m. somewhere.
It's
Yeah,
always
I'm not
5
gonna
p.m.
lie, Dirk.
somewhere.
I'm not gonna lie, Dirk. It's a national sport in South Africa, drinking. So
You're talking to a German dude.
I
Yeah,
was
that's
literally
what
about
I'm
to
But
say,
you're
bro,
talking also to Australian. Like, you guys
Yeah.
have nothing on us, honestly.
but
we're talking
honestly
to a Brit.
speaking,
We've been drinking
Sorry.
since it was like
I don't drink
unfashionable.
wine at all, so I cannot add to the discussion. I'm a beer-only guy.
Well, yeah, you're
I think
German. That
only.
makes complete sense. You're not
We'd
you're
have
not
a
a
good-
beer guy. You're a Stein guy.
A what?
We'd have a good
Yes,
competition. Like, South Africa, Brits, Australia, German.
True.
That's a good comp. I think.
That is,
Oh, yeah.
yeah, fair.
I think we'd win.
I mean, I'm British.
Australia
When you
wins.
tourists,
Honestly,
I'll drink anything.
that's fair.
rugby and cricket, mate.
Cricket. The game that nobody outside of India, South Africa, and New Zealand understands, actually.
And Australia, yeah.
Hey!
Hey,
Sri
dude,
Lanka,
it's
West
big.
Indies, Pakistan.
I said, what? Yeah, fair. West Indies are
Cricket is
crap.
massive.
Is it?
Yeah, it is. It is. Not
Again,
not.
You know,
doing
he's
that kind of
German. He
stuff,
doesn't
but,
understand cricket.
dude, that's a major money spinner these days as well.
is?
Like,
Oh, yeah.
legit, it is. Yeah. The same deal. How soccer over here is not so big. Like,
Yeah, but
it
you've got-
is big,
you've got
but it isn't big
Australian
because
football.
we have a weird thing. If you play state, you earn more money than playing for the country.
Oh,
In
interesting.
soccer.
Oh.
Yeah,
Wow,
and
nice.
it's not just you earn more, it's more than double. So if you play for Australia for soccer, you earn like 75k a year. If you play state games, it's about 180.
But don't you do both?
Yeah, but if you go to World Cup or something like that, you forfeit
Oh,
your prior
okay.
salary.
Oh,
So no one's going to do that. So that's why Australia sucks in soccer, even though we're great in every single other sport. Soccer, we suck because we pay them so much more to play here.
every other sport. That's why you were so fantastic at the Winter Olympics. Yeah.
Yeah, we are. Dude, we are, Dirk. Don't worry. Dude, we got like 2 or 3 snowfields and there's like 2
know.
people, but they do well, you know.
Hey, to be
luge.
fair, I have seen a couple of Australian skiers, and they have been fantastic in the Winter Olympics. I have seen a couple, not many,
Yeah,
not many at all. Since the age of 4 when I started skiing, all the way to the age of 24 now, my entire 20 years of knowing about skiing and being passionate about winter sports, I've not seen many Aussies, but the ones I have seen.
I mean, Australia's not known for its winters, mate.
no, but
you that
Hey,
much.
Jamaica had a bobsled team, I'll have you know.
yeah, exactly. We got a bobsled team. But most of them moved to Canada, right? Obviously, with the you move over there pretty easily, and then they run for Canada, even though they're Australian, that kind of stuff. So normally, anyone we do get that's really good tends to move overseas to get the
fair.
like the promo, like to live, that kind of stuff, and then run for those countries, even though they're from Australia.
Yeah, it's the same with the Brits, man. Like, there's a lot of downhill skiers for Britain, and they don't do so great. And then you see like some French teams, and then you realise that some of them are British as well, and you're like, oh, hang on a minute, you're British. Why are you skiing for France? Very much the exact same. It's for that. It's the idea of that you're not getting as much when you're representing GB as you are France.
Yeah.
And then on that bombshell, guys, I'm going to have to drop out. I'm going to...
Yours.
Yes, I'm going to go and do some stuff in the background. Dirk and LJ, guys, have a great session. Everybody in chat, don't forget to drop a like and a subscribe, and drop some good questions for Dirk and LJ, who's probably going to be going to probably the most in-depth macro and fundamental analysis that you guys are going to see today. So have a good time, guys. We'll see you a little bit. Yes, but
do text as well. Don't worry.
Yes. Yeah, you do. That is true. Anyway, we'll see you guys in 2 hours' time. Myself and Will take over from LJ and Dirk afterwards. Guys, have a great time. We'll see you soon. Cheers.
Bye-bye.
Absolutely. I'm also going to drop out. I'm going to go fall asleep for an hour or two before heading back, because I
Bit of a nap.
Bit of a nap. I'm nearly done on my 2 liter of electrolytes.
Nice.
So hopefully, yeah. Guys, I'll see you in about 2 hours. Peace.
See you.
Peace. Good. Dirk, good to see you, man.
Good to see you. Seems like you are back online.
Yeah, I am. Yeah. Okay, so first of all, with everything, I was going to say, I'm curious with if you want to give me like the rundown of what you potentially presented on Monday.
Yeah.
I had a bunch of stuff to say back then, but I had a power outage.
Richard and I, we had a wonderful 2-hour session where we're mainly actually talking about more technical stuff, technical indicators. Had a long conversation about Renko charts, for example, and the technicalities, how you actually can backtest them, because they are price agnostic, but you need to factor in something like slippage and so on and so forth. And so we're talking a lot about that. Obviously, and the 2 trades actually that I did on Monday are also still open. So if you want, I switch quickly over to my screen. Because on Monday I entered a euro-dollar trade. So this one you see right now moving nicely in the direction. Target is somewhere at around 116.40ish, I would say. So obviously I still am in this trade, thinking about maybe, putting my stop loss to break even or something, but it seems to have a good momentum now. So I actually expect that we could still go a little bit higher. Depends, of course, heavily on what Jerome Powell is going to say tonight. Although I do not expect so much from him anymore, because he's on his way out anyway, and I don't think he wants to stir up the pot even more than. Well, the stirring actually has been done by Trump, as always, but I don't expect that this is going to be so much of an event tonight. The interest rate decision, anyway, that is set in stone, in my opinion, that we are going unchanged, but especially the press conference after that. Although it would be nice to kind of get a gist of, is it going to be 1 or 2 decreases in rate. Other trade that I entered also on Monday is in gold. That's this one here, because we were trading underneath the 8 weeks moving average. And as I am not getting tired of telling in almost every stream for the past year, this is always a good, in my opinion at least, a good area to enter another gold long, because since 2023, since this bull market really started in gold, this area either directly around the 8 weeks moving average or further down at the bull market support bands have always been good areas to buy more gold. So I did this. Then what else? I bought a bit of Nvidia because basically you told me they are cheap at the moment, the magnificent ones, and so I switched like on a monthly basis over from buying ETFs, less ETFs and more direct share investments, one of them being Nvidia. I caught myself, of course, kind of thinking like, oh, so expensive. But then I thought, like 20 years ago, when you had a company valuation of like 100 billion, people also said like, oh, so expensive, it's expensive. So what is now 1 trillion is probably going to be 10 trillion 10 years down the line. And then you're going to miss out. I was looking at some newcomer stocks, so to say, but I don't see, when it comes to chip manufacturing, especially for AI, anybody who can really rival NVIDIA at the moment. Maybe some local things like China is getting into this business as well, but this is nothing that's going to be accessible in terms of stocks for us probably. So NVIDIA it is. Yeah, that's pretty much what we were talking about. Then we had a lot of questions that we answered, and so on and so forth. Are you in any trades already today, or are you
Not
sidelining
today
yourself?
so far. So hang on. I think I've got a. I might have to bring this up from my iCloud.
Sure.
Give me a second.
So, guys, I haven't gone through the chat, so a lot about wine. You guys were talking about wine.
Yeah, we were with different areas from the best wine.
Yeah, well, right. Australia.
Yeah, so
There's some
Australia's
pretty
good.
good wines.
What are we
as well.
talking about?
No, I cannot add to that discussion because, as I said, I'm not a wine drinker. My ex-boss, the principal of a family office that I used to work, he had the largest collection of Bordeaux wines in the world. In Europe.
Yes.
So every time I visited him in Switzerland in his mansion, he would go with me to the cellar and get an expensive bottle of Bordeaux wine. I never, of course, told him that I'm not into wines. And basically, I would slurp a glass of wine priced at a couple of €100, and I totally couldn't appreciate it.
You're like, oh yeah, it's fine.
Hints of licorice.
Oh, that sounds good. Yeah, right. Yeah, I love that. Thank you. Where's this? Dude, I had the perfect chart of what you were just talking about. I don't know if I saved it.
Okay. Well, Nasdaq looked interesting. Oh, yeah.
Maybe I didn't. Surely I did.
You saved it somewhere for sure.
Yeah, I think it's in a random folder, which I'm not sure.
Oil above 100 again. Okay.
But regardless,
Nasdaq did what we
do I have the other pieces here? I mean, this is pretty much the same. So this is a different chart overall, but okay. So first of all, I guess
I'm going over to yours again.
Yeah. Okay. So
regime model. Okay.
yeah. Hang on. So this, right? So this is dollar terms. That's the only thing, right? So it's not percentage terms. But we are seeing the biggest net outflows from managers across the board. Now, in order for this to continue, we need a further escalation, some kind of breakdown. We have the Iran situation continue to kick on, and then we get central banks increasing rates at the same time, which means get out. Because that feels very much like 2008. Right? We had commodities start to rise, oil, the rest. We had the commodity super cycle after that, with China benefited massively. Same with Australia. I can't say we're here right now. People are trying to compare the two. I think it's very different. Right? So I think overall I can't seem to think that this is like the same with this, like put skew differentials, like this seems to be the bottom. I don't know what you think as far as indices.
It is. It's extremely expensive to hedge at the moment, and this is, in my opinion, also a sign that we are on track to things normalizing again. Like you said, for really having a further effect on risk-on prices, we would need to see some sort of further escalation in the Iran war. I mean, it's not even called a war, no, they call it like a conflict or whatever, or something
I
happening.
wouldn't call it a war.
Yeah, it
It's
is
a
a war.
conflict.
And something like,
Yeah.
I don't know if China seizes the opportunity now that it seems like the USA have, fired a lot of cruise missiles and can only produce something like 300 or 400 a year, and they see the opportunity now to snatch up Taiwan. That would be, of course, an escalation, but I don't see that. Like, there's so much FUD again out there, and when I look at risk on assets, I mean, look at what Bitcoin has done now. Since the outbreak of a war, Bitcoin has, for example, now outperformed gold again.
Now up. Yeah, it is.
We haven't seen that. We are at almost 75K now. Again, we are seeing the VIX coming down. So that's something we talked on Monday and last week about. Still at elevated levels, but down from this area of super fear above 25. So we are right now today at 21.5. Really, I mean, don't get me wrong, guys, out there, of course, there can always be some kind of black swan event, but it's never good to bet on a black swan event, meaning betting on a further escalation. Because if you zoom out on charts like the one you just showed, for example, I think it was the S&P 500, no? I mean, the trajectory is up. Yeah, there are bends, of course, like COVID and for example, that drive the market sometimes down by 20, 30% or even 50%. But these are buying opportunities. And it's funny again, when we look at the assets managers on the graph you just presented, that they are so pro-cyclic, no? One would think they are the ones being anti-cyclic, meaning they start pouring more cash into their portfolios when markets go down to seize the opportunity. But they are not doing this because they are always measuring themselves against their benchmark. So are they outperform? Is their their alpha higher compared to the benchmark, or are they lacking behind? Normally they are lacking behind because they are so pro-cyclic. They do portfolio adjustment based on what the S&P 500 is doing. This is why you don't need an asset manager. This is why you need an ETF and save a lot of money. So yeah, go up.
Exactly. I agree. So, like it's like you were saying. Like we're talking. So this is the regime model for the US, right? Now we do have the implied inflation pickup.
Of course, yeah.
Again, it's gonna pull back.
Yeah. Let's
like
not
we were
forget.
saying, we were saying it's going to be a 3-4 week thing. We're already we're into the third week. Like we were saying, it's about a 3-4 week thing. We've already seen the de-escalation. It's starting to calm down. People are getting fatigue as far as the headlines, and it just quietly goes away.
And let's not forget, especially when we look at the USA, first of all, only 20% of oil transport goes through the Straits of Hormuz. And basically, the USA are energy independent from Iranian oil anyway. It matters more for the likes of China, for sure, since they have those long-term contracts with Iran. So somebody like China is, of course, also going to push for de-escalation there, in my opinion. Do you have the aircon on in the background? Or?
What was that, sorry?
Do you have the aircon on in the background? Or?
No, that was probably me coughing.
Yeah, no. You have like a background noise, which sounds like an aircon swooshing.
It might be my...
Or ventilator or something.
Computer.
Oh, can also be.
I think that's the...
Man, your computer is like, what are you doing there?
Is it actually that bad, chat?
No, it's just I just noticed when you muted yourself to cough, but it's not that bad. Or maybe we should ask the audience if it's like.
I was going to say because I don't think it's too bad. It's pretty normal.
Didn't hear anything. Okay, it's just me. Maybe it's my tinnitus.
But yeah, like you were saying, so the US, they could 1,000+ days for oil, gas, nat gas, the whole bit. So I think that's the exact reason as well why they've gone and done this. They can sustain it. completely. So the other thing I was going to say to you is that Scott Bessent has been very quiet.
Yeah, there was this weird
Uh,
thing where he was interviewed and then had to get on the phone with Trump and then somehow looked like shaky to his call. I don't know what was going on there. Did they actually say anything? Like, what was that about? Why he was so shaken up and so silent? Why he is so silent now?
I don't know. I can only say that potentially with him being so quiet means this is potentially something outside of their original
scope.
I don't know. What do you want to call it? Like ideas, like their whatever. Yeah, I think they're that's the only thing where I'm very skeptical, right?
But could have been something private also, no? I mean, yeah, but
yeah, it feels very weirdly a bit Dick Cheney, like.
yeah.
You know what I mean? Like, which starts to get a bit weird if you think about the ongoing element from that. I don't think we'll get there. I think we're a bit more calm overall. But still, I must say, I think we're pretty much over the current situation. So we've got stuff like this. So asset managers are net position. Everyone's been selling. It's actually blown out through COVID sales. Now, the point to realize is this is dollars wise, monetary wise. Now, obviously, the market has increased massively from there. So it's not quite the same, right, in percentage terms, but still very notable overall. We've got the call put skew, like I brought up before. That's something else for later. I've got too many bits and pieces through here. This was something else. So Microsoft and Walmart. So this is the same thing I was going to say to you, Dirk. So when we've got a bunch of these tech players basically doing this, and you've got other players doing that, surely you're going to buy Microsoft.
Yeah, maybe not Microsoft in this case, but one of the magnificent stocks, yeah.
Yeah, so this is Amazon as well. So as revenue.
Interesting. That's very interesting.
Yeah, so when we start to look at them all, so we've got that as far as the now we go to, this is Nvidia, sideways, EPS up. That's the current for the start of the year, which is very different to that.
Because that was the narrative since the beginning of the year, sector rotation, sector rotation, sector rotation, and
Yes.
and now everybody has to rotate back again, hopefully.
Exactly. So I was going to say, as far as this, and then you've got the historically, like, geopolitical shocks have had a limited impact on the S&P 500. Obviously, you get the initial shock, and then generally it actually becomes beneficial as far as the monetary impact, inflation, that kind of stuff actually ends up being beneficial as far as stock prices and the rest. So, in this current environment, do you believe that or not? Because it goes back to is this one and done for the 4 to 5, 6 weeks? Or
Yeah, that is
is
one.
that the situation? Because you still got the Mag 7. This is before the war.
Yeah. So actually, probably looks even more tempting now to buy. In terms of geopoliticals. We have a saying in Germany, and if I kind of literally try to translate that into to English, it will be something like geopolitical markets have short legs, meaning like reactions of markets to what is going on a geopolitical scale, and also on a political scale, like local political scale. When markets react to something like this, it's usually quickly digested by the market and back to business as usual. And like you just said, we have seen that in every major conflict. But every major conflict, sooner or later, will resolve itself. I'm not talking about something like World War III, of course. Here, let's not go too far to the extremes. But normal geopolitical events, normal like what we are seeing in Iran right now, can be at a global scale still considered as a normal conflict. Not good, of course, that it happens, but it's nothing like that's totally escalating, although media makes it feel differently, of course, especially when you hear reports about Dubai or what was that, Doha being evacuated because of missiles and so on and so forth. But historically, those have always been chances, to get into some of the stuff cheaper and not be left behind. I don't know if you were still already around when we had COVID. You still remember how, and of course we saw like risk on assets massively crashing there. Yeah, but I still remember I met a friend of mine, or ex-colleague, outside, and he had like piles of toilet paper. I said, like, Daniel, why are you buying so much toilet paper? And he gave me the speech about how the world is going to end now, how we all need to lock ourselves into for all eternity. Nobody can go out anymore. Everything will go down. Everything will crash. And that was kind of, that was coming from somebody who is a smart person. So I thought to myself back then, oh my God, I think the chance is higher that eventually we return to normality, and that buying risk on assets is a good thing right now.
We had the same thing where we'd have a Thai place just near me back during that time, around 2020. You'd be able to order the Thai, but they had like a add-on. You would add on like 10 rolls of toilet paper for $10 or something. I'm like, dude, I'm trying to order like a musman or like something else. Like, why do I want toilet paper?
Would you like a roll of toilet
was
paper
when I was like, okay,
with your curry?
This is ridiculous. Right, this is too much.
Yeah.
Right. So, yeah, terrible.
I mean, like, if we want to get more technical maybe, is like what I see, of course, in the S&P 500 right now is that we have a bit of a market regime change. We are not in an upwards trajectory anymore. We are like stuck in the sideways move right now. So by definition, maybe, something like this that we are looking at the moment. So any strategy that revolves like moving averages or something like this, it's a bit difficult at the moment. It's a sign of the market still tries to decide, what am I going to do with the whole situation right now. But I mean, just zoom out a little bit. If I zoom out until 2017, and I would ask you, is this a chance right now to buy, or are we going to crash? Most people would probably say, well, in long term, probably this is a good chance now. Short term, we could get a little bit lower still. And for that to happen, in my opinion, a clear indication that we are not done to the downside yet. For that, we would need the S&P 500. I mean, if you want to look at the NASDAQ in this case, you can see the same picture on the S&P 500. We would need to go somewhere to this area around 23,800, because that would, just from a sharp perspective, mean that it seems like we want to change from a sideways trend into a downtrending regime. But I don't see that, honestly. I really, really don't see that. I could be wrong, of course. That's a possibility, but I would be very surprised to be wrong on this one.
Yeah, I've got a couple of things. If you can give me a sec, I'll have to jump up. I've got a phone call
Yeah, sure.
start real quick, if that's all right. So
Good. Unbiased trader, unbiased, because you tin pot trader and unbiased trader, their logo looks always the same. That's why I mix you guys always up a little bit. So tin pot trader saying there is a low coming in summer and autumn. I could imagine that as well, just because of what we usually see after elections. Let me get my presidential stock market pattern chart up quickly. Because what we usually see after elections, that was at least the case for the 3 presidencies before Donald Trump, one of them being Donald Trump, is that we have 1 year after the election, so that year started last year in November, that period, about 1 to 1.5 years where the markets go like down, sideways, or at least struggle a little bit. And this kind of fits good in the structure we are seeing right now. So this sideways trending, more difficult phase also began end of October. So if that continues like we saw that in the past presidencies, then we would be in for a prolonged period where we might see action, like this, maybe bounce up again, bounce down a bit here, maybe a little bit more down, and then up again, and down again, and up again, until this year, probably late October, November. I can very well imagine something like this. And because it would be the normal pattern we see in 1.5 years after the election. So election Donald Trump, November 2024. So the period where the stock markets grow usually ends 1 year after the election. So that was around this time here. And then basically we see these 1.5 years of more difficult moves. So I could imagine that, but then also long term, again, this could have been a fantastic opportunity to get into risk-on assets again, right? I hear you talking about gold. We actually talked about gold. But for what it's worth, of course, we can talk about it again. As I said, for gold earlier, where do we have gold? I'm still in a long trade there. The one I opened on Monday, here on the stream, by the way, I opened that one. And I think we are going to, if price behaves like it did in the past meaning whenever we pierced the 8 weeks moving average, latest at the bull market support bands, gold started trending up again. Thus is because of this, I started buying gold here, having a stop loss at 4,830 there at the moment. If that stop gets triggered, the next level for me for buying again is once we hit the bull market support bands down here. This is my trades at the moment on gold. We have a question from the French troop. Why is spread high nowadays in gold? 10 pips in funded accounts, is this normal? I'm a scalper and facing a bit of issue with that. The spread is always adjusting to what is possible on the markets right now. And in times where liquidity maybe is difficult, then you see a widening of the spread. This is how it works. You sometimes will see this also in forex pairs or on indices and so on and so forth. So completely normal. If you see something like this and your strategy highly depends on that this spread is very narrow, just stop trading for a while until the stock sit it out and then come back, when it's normal again. It's the same issue with on Monday. People were panicking in the chat because of some technical issues on the Fiverr side with a MetaTrader 5, where we also said, just sit it out, you don't need to trade every day. If something on the technical level is not working right now, sit it out, wait until the markets normalize again. So question about crude oil, of course. This is one I want to hand over to LJ because if you have been watching us for a while, you know that I'm like probably the most terrible oil trader in the world.
Oh, come on, Dirk. You're great.
No, really. No.
You're great. No, it's fine.
No,
dude.
I hate oil.
Dude, you're amazing.
You should do the opposite of what I tell you to do in oil. And
it's
maybe
fine.
you want to highlight some things for LJ for me.
Yeah,
and
sure.
while you do that, I quickly would like to fetch me another coffee. If that is okay.
Okay, that's fine. No worries.
All
All right,
right,
we'll
Nick.
jump over to my screen just here. Give me a sec, guys. Okay, so look, Brent, pretty much I would prefer, I will say to you guys right now, this is the 4 hour. Let's go down to the 15. So this is Brent right now. I personally would prefer to trade the dollar overall. The dollar is kind of leading Brent. Brent is leading the dollar right now, as far as your risk on, risk off type aspect. So if we go over to USD, so West Texas, that was the trade that I have held from back in October. Let's go back to daily, we can see it, maybe, it's a bit better. So that was back from October, down here, from those lows, right? Now where we are, I would not recommend trying to trade oil. If you want to trade it near term and you want to trade headlines, go ahead, very risky, up to you. But I would prefer to stick outside, because as much as you can get more upside for Brent, you have just as much downside towards like $80 or so. So if we eliminate the risk premium in oil, you'll be out the woods. The only way now you get upside is if the current situation escalates overall. So somehow we get the Strait of Hormuz further closed, right? We had the closure, we've had some workarounds, some ships going around the strait. We had the east-west pipeline, which is about 6 to 7 million barrels a day. We've had some of the other Southeast Asia countries getting their ships coming through. And it's roughly 60 to 70% of the ships that were going through there. So betting on the upside is not great, right? You're pretty much betting on a ground war, and a ground war that will somehow disrupt the strait. Now, obviously, if we did have a ground war of any capacity, it would be to alleviate the strait, not to disrupt it. So I'd say, if anything, I would look for these price highs, say on Brent at about 103 total. If we're talking technically, right? And then shorts from there. So I would not be getting long on this. That is very, very risky at this point, right? We always have the initial shock, which is much larger. Then we have the calm. Just like Russia, Ukraine, everyone, all the supply chains figured out how they could work around it after a while. We're getting the same thing here, right? So if you try to bet on energy in a raw sense through the commodity, you won't do well. If you want to bet on energy complex through certain companies where their revenue, that kind of stuff, has not been updated, that's a good way to play it. But from the CFD, from the spot price of oil, etc., I would be looking for shorts overall from peaks. That would be my preference. So
Looking for shorts.
yeah, overall. So I think the one thing that's underpriced is if we have equities, which we're not trading equities right now. But I've seen a number of those companies, their revenue, their profits, that kind of stuff hasn't been updated by analysts, that kind of stuff. So I think they do have a double bubble effect later on. Right now, I think we're already peaked as far as the spot price.
I would
Right, so
agree with it.
unless we somehow get some kind of escalation, like we were saying, it's probably like a 3 to 4 week type thing. We're now in that 3 to 4 week zone. I think the market also has general fatigue from the headlines, right? We've seen that. What more is there to escalate the war?
Yeah, exactly
Other
that.
than something really, really, really extreme, right? That's it. So, yeah.
And as we are not getting tired of repeating, you don't want to bet on extreme events if you're a trader. You want to always go with like what is the most probable outcome of what you're seeing. You don't want to trade with fat tail. And
Exactly.
good question here from Mixay. Were the markets already affected on Monday and Tuesday in anticipation of today's PPI release and FOCM decision? Of course,
It's very good.
especially when it comes to interest rate decisions, you will see in this week until that decision, especially until after the speech of Powell after the press conference, you will sometimes see the markets moving in weird ways. So price action can indicate X is happening, but in reality, Y is happening. Why? Because especially on institutional levels, so we're talking about the big guns out there, hedge funds, pension funds, and so on, they need to hedge a lot of risk. They don't want the risk exposure for the whole portfolio be reliant on, whatever the outcome is or what Jerome Powell is going to say on economic number. So markets sometimes can move in weird ways. They tend to have, especially in front before interest rate decisions, they tend to become less volatile also. So it's like calming down. This is also for me a reason why I say today, I have the trades I'm in right now, primarily the gold trade, euro dollar. I'm going to keep those open, especially the euro dollar trade is in a good profit zone already. But I probably not going to add positioning until after the press conference of Jerome Powell tonight, because I think after this we are going to see things going back to a more normal price swings. Let me put it like this.
So that's what I was going to say. So from yesterday, this was the options strike prices from yesterday, and then this is obviously today. So we definitely had higher up into that 115, 116 type area. You got that gamma pressure, at least. So I think into the end of the week, obviously we've got stuff clustered lower. So I think from here, we find some kind of peak and potentially draw down.
Yeah, that's a possibility.
Right. Yeah. So because we had this this prior cluster through here, which we did tap through yesterday. Right, but we haven't made substantial progression.
As I said, I could see prices north of 116 still also.
Yeah, I agree. Okay, so that's the other thing. So, Dirk, I will say I think this bottom through here, 114.10 to 20 or so, I think that's the low. I think that's it.
Yeah, I think so too. Yeah.
I think the only way we get beyond there is if the Iran situation escalates.
Yeah.
Yeah. So
because that's the typical risk on move now we are seeing again, no? Isn't it?
Yeah. Yeah. And now, so what do you think with indices with this whole situation?
Same.
Right.
It's like from the fundamental perspective, it's a good opportunity to buy. I stand by this. Does that mean I when you were outside, I was talking about my presidential election pattern? Once again, like quickly switching back to my screen, so that we all seem to often have this 1 to 1.5 years 1 year after the election that are a little bit more struggling, and it fits very well to what we've seen in the S&P 500, in the Nasdaq again. Also, where I said we have this sideways struggle at the moment, which is very typical, really. And it could continue up until maybe November or December of this year, maybe even into 2027. So we could see prices like rallying up again to try to catch the all-time highs or go beyond those, just to come back a bit again. But like long term, if you now are making decisions that might affect you, let's say like 3 or 5 or 10 years down the road, I think this is not the worst time in history to buy stocks right now. And this ties in very nicely also what you told us about valuations. Why should I buy a Walmart if the what is that called, profit to share price, earning to share price ratio, whatever that is called in English, PEE, is so high at the moment compared to something like Microsoft. Now, Microsoft is not the share, as I don't get tired of saying that I would buy, because I think they're very behind when it comes to the AI race. I look at the Copilot; it's a disaster in my opinion, and they are like basically forcing it onto you in the new Windows releases now. And but they'll catch up. I mean, they are heavily invested into OpenAI again, which is losing a bit ground, in my opinion, to Anthropic as well. But different story. Something like, as I said, for me, it's NVIDIA, my chosen stock that I want to continue building up and then hold on to it maybe for the next 10 or 20 years. And this is where the money is at the moment. Trading-wise, so if we look like at day trading now or swing trading, it's actually a nice pattern in the Nasdaq, no? If you're a contrarian trader at the moment, I think this is your time to shine. Because you want ranging markets, and let's be honest, most new traders out there naturally tend to be contrarian traders.
Yes.
Sorry, I'm going back to you.
No, I was just going to say, with this is it's very contrarian, but at the same time, like we've had the drawdowns, right? So if I go back to, okay, let's go with the Nasdaq first of all. Right.
Right now, you're a natural guess, I think.
Oh, sorry, I am. My bad. NAS, not natural gas. Okay. So let's hide that stuff. Here we go. All right. What do you say when you see that? Is there a war going on?
Not really.
Like, honestly, like that's it's pretty chill.
It's pretty chill. Looks like, business as usual.
Same with the S&P. Like, yeah, we had a bit of a downdraft. You start to zoom out. We go to the daily. Right, does this matter?
Oh, nice how it pulled back exactly to whatever the yellow moving average is there.
Yeah, so this is the 200 on the S&P. That's as well the 200, right? So hence, are we crashing? No.
Yeah, massively.
Right?
No, of course not.
Media would say we are. Everything's done. Right? We're out. So, I think this goes back to the same thing we were both saying, where we've both been on the same kind of part of it's sometime in the next 6 to 9 months. right, of peak and then a crash. Does this expand that in a technical sense, or does it shorten it somehow? I think it actually expands. What are we looking at?
Can you elaborate on this? What do you mean by it expands?
So, for instance, with the so various central banks are looking to increase rates. Now, that's very dependent on the entire crisis going on from now, right? I think it will end earlier than people think, just like we were talking about. Regardless, though, the US component, I think, regardless of what happens, they will still be either neutral with a tilt to reduce rates, not increase rates. So I think that creates a very large differential for all currency pairs across the board. So the other things we have is stuff like the dollar yen, like we've talked about before. So 160 is very much that hard level. And so beyond oil, beyond anything else right now, I'm looking at 160 on dollar yen. So pretty much the dollar as the risk barometer for the current situation, to see if traders are actually willing to press that in front of the Bank of Japan. Because that's a very bold move, right? So I think that is my risk barometer. So if we press 160, we keep going. If not, risk premium starts to leave other assets, starts to subside, and we go back the other way. Even if the activity in the Middle East is still active. But clearly, the impetus for money where your mouth is not there. Right? I think you're muted, Dirk.
Yeah, thank you.
That's right.
Interesting what you're saying about dollar yen there. I tend to think the same. You guys know, like I'm a big supporter of the yen becoming stronger versus the dollar. I think we should more be trading at 140 or even 130 than at almost 160 or 159 we're trading today. But in terms of, if you just want to look at it from a pure technical standpoint, and I don't think you should do that with a pair like dollar yen part, but for what it's worth, if we break out over the last highs back from July 2024, that is, so above this structure here, then we're going to continue. And it kind of fits like the market is behaving, you know. As we said many times before, it seems like due to lack of alternative when it comes to carry trades, at every price action to the downside, it seems like traders are picking up this trade again. So they're going long dollar, short yen, meaning you sell the yen and you get dollar for it. You get a higher interest rate on your dollars than for the yen that you need to borrow for that trade. And due to lack of alternative, at least when it comes to major currencies, I don't want to take something like Turkish lira or South African rand, or even some South American currencies like the Argentinian peso and so on into the picture. There is just no alternative. Is this going to implode sooner or later? Yeah, eventually it will, because the trade is not going to be worth it anymore. I mean, we have now yields, 10-year yields, US yields at 4.18. Japanese 10-year yields are trending massively higher.
I mean,
So
we had more jaw burning
yeah,
yesterday.
yeah. So as soon as that contracts, and let's say we get like two declines in the US interest rate, and we are suddenly then maybe at a yield of not 4 points somewhere, but maybe something like 3.5 or something, then eventually this inflection point will come where this carry trade is just not working anymore. And I can guarantee you, once that happens, there will be a storm in dollar yen. This will be massive volatility because everybody wants to get out at the same time again.
Hence, I'm thinking right now, 160 is that bar right now, especially with the dollar positive activity with everything going on. Right? If we can't breach 160, no traders are willing to take that risk. It's a very, very clear sign to the downside.
Yeah.
So I think we're potentially now getting that massive downside potential through here.
Could be. I mean, even
So
without
I
this,
want to take a massive short through here. Yeah, and just
kind of a trade you could take here, something like this.
Yeah, more than 1,000 pips.
Yeah.
Beyond that.
Okay.
Like back to that gap that we had.
Let's go
down towards 146 or so. Like
That's
way down.
Massive
Yeah.
R on this trade. So we're talking about a 5 risk to reward trade.
At least.
If that one works out, you basically don't need to trade anymore for the rest of the year, probably.
Yep, pretty much.
Yeah.
Yep.
But of course, this is something that's not going to happen like within one day, guys.
No.
And if you want to trade something, you need to be careful. It's difficult to trade this with a forex broker or on a prop trading platform because of overnight financing, because that would be a short trade in dollar yen, meaning you sell dollar, buy yen, and then interest rate, of course, the swaps are not on your side. So the longer you stay in this trade, the more the overnight financing is going to eat up any profits from this trade. So you want to have maybe other methods of doing a trade like this, or if your trade institution allows you to trade something like forwards or outrights, you can have the interest already calculated into the conversion rate. I would play it like this. Difficult to play with options as well, by the way, because you also have the interest against you. Buying a put, as we saw earlier, is notoriously expensive at the moment.
Yeah.
So a bit of a tricky one to play. Might be something I play more with, maybe with yield instruments, with bonds, for example.
But in general, okay, so do you agree with buying up NASDAQ right now? And software companies, because we have a massive exodus.
Yeah, that's what I said. I think it's just based on the like that historically they are quite cheap now, especially if you see the forecasted earnings like for the next quarters. They're historically cheap, so absolutely a good time. But I think you cannot expect like these trades to be massively in profit like a week or 4 weeks or 3 months from now. This is like a long-term game. Scoop it up now, and then you'll get
even the other way. So it's a now-term game, right? A trade rather than an investment.
Come again? Sorry.
A trade rather than an investment.
So you would like trade this for the next days to come, for example?
Yeah, near term, the next couple of weeks, months. But 1 year from now, I would want to be out.
Okay, interesting.
Right, so I think that's kind of where we are. It's the same thing when I was talking to you with the indices, with the NASDAQ, that kind of stuff, being higher, that kind of thing. I think they are there's definitely problems, right, with the private credit, that kind of stuff.
Yeah.
So I think that will come to bear. So hence, right now, things are at a discount from those initial scares, plus the Iran situation. You pick them up, gap out the final gasp, do we go on to 2027 or not? Because right now we've got central bank week this week, right? Now it feels like very much the same thing of 2007, 2008 type deal, 2006, whatever, where central banks start lifting rates because we've got the oil commodity increases at the time. We've got other stuff going on, but it's pretty chill. But you increase rates because of these other impacts. Now everything else crashes. It seems very much the same from back then to now. And then you get the private credit type situation like we've been talking about. Yeah. So, because if that's a problem now, if we get a rate hike, like we've seen from Australia, right? They had the rate hike already, plus the prior, so that's 2. And we got oil, which is about 80% of rate hike. It's also like 3 in 1. Right. Now what?
I honestly speaking, I think for me the most probable scenario is that we are trading around levels like this, plus minus 5%, until maybe November, maybe January 2027. And then the market slowly start trending up again. So for me, it's more like what I buy now. I want the fruits of that to harvest maybe in 2028 or 2029 or 2030 long term. Because if like things continue like normal, and for sure the private credit sector, that's probably going to have an impact, because if that starts to be difficult continuation, like newer software companies are going to have a hard time financing their business because the banks don't do it anymore. So they were relying on the private credit sector now. They are hesitant to do that as well because they have so much credits, bad credit they have to write off now. We've talked about this a lot in past streams as well. So we might see like, let's say like technology companies that are in the second row, not talking about something like Nvidia or Microsoft or Apple or something like this, that have like difficulty growing their business if they are dependent on doing this by taking out a loan, for example. That for sure is going to have an effect, but as I said earlier, I'm not an investor in like second row software companies because too many of them fail. It's more like venture capitalism. So as I said, for me, it's more like investing in Nvidia and all the big ones, or Microsoft if you want to do that, Apple for sure, Amazon, not because of the retail business, more about the cloud computing business they have, which is crazy expensive, by the way. I just moved away from them because I can, for what they charge me, I can get my own dedicated server elsewhere that I don't need to share with other peoples or companies. But just as a side anecdote, so that is like my personal trajectory, like more difficult times until October, November, possibly January. So October, November this year, possibly January, first quarter 2027. And after that, we are going like boom, up again. If things behave like they did during the last 3 presidential cycles.
If they do.
If they do. Big ifs. In hindsight, always easy, of course.
Yeah. Give me 1 sec, Dirk. I'll have to jump up for a sec.
Yep, sure.
That's all right.
hedge US to cover swaps. Well, swaps, at least on a level of a forex broker, are for us clients very difficult to hedge, honestly speaking. So you would need to find, if you are, for example, long gold dollar, meaning you then your hedge could be against that you buy dollar yen, for example. Yeah, that could work, but it's probably going to cover your whole overnight financing, because you tend, if you have a pair where you get swaps, I don't even know if that's the case in terms of the fivers, honestly speaking, on the platform, the negative swaps, negative overnight financing tends to be much, much higher than the positive swap you get from a long position. Let's see. Let me go through the comments here a bit. Scribble also was asking about the VIX. Yeah, let's have a look at the VIX. Give me a second. I think I have it down here. So, yeah, if you were watching on Monday, we had a nice discussion there where I basically said levels over 25 in the VIX are usually an indication that things are probably going to return to normal again. Normal being here that the stock markets are going up again. So you can see, and the VIX, for those of you who do not know this, it's an index that measures the volatility of underlying stocks or indices, in this case the S&P 500. And you always see volatility spiking, the VIX spiking, if we are in kind of a difficult market situation to the downside. And for me, the level to watch is 25. Why? Because normally over 25, this is then somewhat the point where things return to more to the normal. We could do an overlay of a stock market of the S&P 500. Let's do that quickly. SPX, here we have it. Let's have a new price scale for this one. So if you do an overlay, you can see basically at times where the VIX is spiking like crazy. These are usually also the times where the market tends to bottom out. So I'm talking about this here, for example. Last time we saw that was last year when we had this big move to the downside in the second quarter of the year. And you can basically go back and you'll find whenever VIX spikes over 25, sooner or later you are at least close to the bottom of the market again. And we've seen that happening not long ago. That was on the 9th of March that the VIX spiked. So over 25, I mean, sorry. This large spike I'm talking about. So that was here. Yeah, we continued still a little bit lower, but you can see that we are coming down from these elevated levels now to, you know, what is like more the median of this. So the median would be somewhere around here. So I'm saying where the market normally trades. So somewhere around 14 to 16, maybe I would say, as a bandwidth. And as we are continuing to these ranges again, you will see that the stock market continues higher. So this is something we could see in terms of risk on assets developing. And stock markets higher usually would mean then that other risk on assets, such as Bitcoin, for example, are also trending higher, although Bitcoin has, of course, decoupled a little bit from what the stock markets are doing at the moment. And you would see euro dollar also going higher because the dollar becomes weaker as a traditional risk-off currency, and so on and so forth. Let's see, what else do we have here? So for this one, we are just going to wait until ALJ comes back, our expert for Aussie. I had a losing trade on gold 2 days ago and I hedged. Oh, that's your question. Okay, I understand. Yeah, nice. Nice. Well done, mate. Bloom Energy. Never heard about that one, Scribble. Sorry. Yeah, guys, important here, please, smash the like button if you're watching this on YouTube. Leave us a comment, subscribe to the channel, and so we can continue to grow and we can continue to have those nice giveaways we have every now and then. That would be very much appreciated. Good and very complex question from Sharuk 7.8. Hi Dirk, is ChatGPT good for backtesting strategies? No, it's not. Or let me put it like this: it depends. If you are using the web interface of ChatGPT, so chatgpt.com, to try to backtest strategies, you will very fast reach context limits for the discussion you have. So the way I go about to backtest strategies with the help of AI or large language models is that I'm a Mac subscriber for Claude Code, so Anthropic for Claude, and I work with Claude Code, and when I let Claude Code design in Python backtesting scripts for my strategy, because like this where I don't need to start for every backtest in new session again and code it like this when I have my mechanism in place, and I can basically backtest almost any strategy I can come up very fast. The important thing here, and I don't want to get too technical, of course, now, is that you force it to use Python. Or if you want to get really technical, if you want it on a more granular level, you can force it to use something like C++ or Sharp as well. But don't just, give it data and say like, hey, can you backtest if a strategy would earn me money? The chance of ChatGPT or other large language models making an error is very, very high if you do it like this. So you need to get into quite the details then. Don't worry about it, and much appreciated, of course, your questions here. Yeah, gold, we said it, but of course, I know a lot of you guys are trading gold at the moment. Yeah, we see a little bit of more action to the downside right now. As I said, I opened on Monday a trade around the 5,000 mark there, a long trade. My strategy going forward is now that usually when we are trading around this 8 weeks moving average, which is the blue line, that sooner or later you'll see price returning to the upside. Again, shouldn't that happen, I will get stopped out at 4,837-ish roundabout, but then I would latest rebuy again and get back into this long trade if we touch the bull market support bands, which is this kind of ribbon indicator you see on the downside. It's also actually just 2 moving averages. To be more precise, it's a 20 weeks simple moving average. We're on a daily chart here, but working with weekly moving averages, and a 21 weeks exponential moving average. This is something that comes from trading cryptocurrencies, but it always works in trending market as a good area of support. So if you go back in time, you can see how often when either the 8 weeks moving average or the bull market support bands were touched, that sooner or later price would pick up to the upside again. That works only in trending markets, of course. If gold should go in something like a sideways range, this trade is of course not going to work anymore. So should we really see price going down all the way to the bull market support band, so currently they are trading between 4,580 and 4,620, then my trade probably would look something like this. This would actually be an amazing trade. Need to give it a little bit of leeway, of course, here. And then I would really target that we attack all-time highs again. So that's a trade with a risk-reward ratio of 3.8. But I wouldn't bet on us hitting the bull market support bands. Could be very wrong, but this is how I see it at the moment. Let me quickly scan through the chat again to see what is important for you. I saw this one earlier. Dirk, what is your favorite pair? I assume, of course, that you mean Forex pairs. And my favorite Forex pair has to be euro-dollar. Why euro-dollar? Because it's the by far largest pair when it comes to the sheer volume. Now, just because it has sheer volume or the largest volume doesn't necessarily mean, it's very good for trading. It makes it harder because it's very competitive. This is where all the quants and algo traders and so on are as well. But for me, what I like to do when I come up with new trading strategies and I want to backtest these trading strategies, I usually, if they are Forex based trading strategies, that is, of course, I usually like to test them on euro-dollar because it's the most effective market. That means if my trading strategy works on euro-dollar, then there's a high chance that it generalizes well to also other Forex pairs, maybe even to something like indices or to cryptocurrencies, to bonds, or whatever you like to trade besides Forex. Most strategies fail this, which for me is always an indication then that I should not continue researching the strategies, because I wanted to work on what is, in my opinion, the hardest trading pair when it comes to Forex trading that is out there. So ironically, because it's so hard, because it's so effective, makes it like kind of my favorite pair as well. All right, let me scan through more. There's something wrong with my chart. Why do you think there's something wrong with my chart? Because I'm using Renko pairs or Renko boxes. Yeah, this is, and Rich and I, we discussed about this on Monday on the stream, so I don't want to bore you to death, of course, with this if you were already there, but just very quickly, Renko, I like to work with Renko charts. Why? Sometimes, I was assuming that you were playing around. Why? Because they are price agnostic, meaning a new Renko box will only form based on absolute price moves. So in order for a new green box to appear here permanently, price would need to move up by 20 pips. If that takes a minute to do that, well, then the next box is going to appear in a minute. If it takes a week, the next box is going to be in a week. This is also why on the time scale down here, you sometimes see like these jumps, for example, from the 6th to the 10th. There were jumps because there was not so much happening, so not many Renko boxes were drawn. And I like to use these because they give a pretty good overview of where, of what the market trend is. And so I'll make an example for you. One thing I like to do, I haven't overly tested this yet, is that I, for example, here for euro-dollar, like to have a Renko chart on the right. This one has a box size, I think, of 2 pips only. And a 1 minute chart or 5 minute chart, so something on a lower time frame on the left. We can, for example, go to a 1 minute chart, and then I want to see if the structure on the lower time frame, for example 1 minute, aligns with the longer term structure. So I want to see these deviation channels, which I use to kind of get an idea what is the overall trend at the moment aligning. When I see, do we have a pair maybe where this is not the case at the moment? Why do I have gold? Here it's also aligning. Nasdaq is kind of... here we go. So for dollar yen, for example, the longer term Renko-based picture is facing downwards now. If I say longer term, I'm not talking about weeks. I'm talking about a couple of hours or days of data, whereas the 1 minute trajectory is more upwards at the moment. So this is a typical example if I want to scalp the market, if I want to day trade the markets, where I wouldn't touch this pair because it's not aligning. The lower time frame either suggests that we are on the higher time frame or longer time frame switching to the upside, or we are seeing like a local pivot point, pivot high or something on the lower time frame. So I want these align, and what I like to do then, for example, on gold is I will pick on the lower time frame at these standard deviation sigma levels. So sigma levels are the middle, of course, here is the 0 sigma. The blue dotted line is like 1 sigma to the upside, 2 sigma, 3 sigma, 4 sigma. And I like to look for confluence. So a typical trade, for example, in gold, if I want to scalp gold, that is, would be if I see it going all the way up here. So where we have the +2 sigma level and this one here, the blue one, which is the 200 moving average aligning, so adding layers of confluence. Then I probably would take a short with the like trying to trade back to the 0 sigma line. So we're talking here about potentially something like $12 or $13 that I would try to scalp out of a market. I hope, I know most of you guys are trading very short term, so I hope that answers kind of your question. By the way, this standard deviation indicator 4x is something you can find on TradingView as well, and it's for free. I generated a script where it's open source, so you can use it and app use it the way you want. Just have to go up here and search for standard deviation channel 4x, and then you'll find it. And I think it's a great tool to kind of keep you out of potentially dangerous trades. For example, if you see a misalignment in the overall trend to the downside and how the structure is at the lower time frame trends, which, for example, for dollar yen is upwards. Richard, an unexpected early guest. Welcome back. How is it?
Well, thank you very much for having me. I just jumped in very quickly. LJ has got some stuff that he needs to attend to, so
okay.
LJ will be back. LJ will be back again tomorrow. I'll stand in for him for a little while.
Okay,
No
nice. Yeah, I was telling LJ earlier, like about our nice discussion and a nice stream we had on Monday that I actually enjoyed that one very much. Yeah.
The one to do with a very, very interesting set of candlestick patterns and candlestick information that I still haven't had the opportunity to go and look at in-depthly. Yeah. But I'll get my moment. I'll go and have a look.
Well, thank you. Abradolf Linsler, whatever, how to pronounce it, I don't know.
Abradolf Linkler.
Yeah. Okay.
Yes. It's I don't know if you know Rick and Morty. It's a show.
Yeah. Now it clicks. Yeah.
Abradolf Linkler is a character from there.
Yeah.
Let's just say.
But what you are saying is this is for me the most important thing that gets kind of overseen by new traders on the market, that they tend to just try to analyze price action candlestick patterns or look at indicators, but they don't look how's the overall market structure and is the time frame I'm trading on, for example, the 1 minute chart or 5 minute. I actually wouldn't touch the 1 minute chart as a new trader, honestly speaking, at least for signaling or for entries. Is that actually aligning with the overall picture and market regime we are at the moment? Because you can make your life so much easier if you trade with the overall trend and not try to force yourself against it. And the standard deviation channel, you can also manually draw this, of course. It's like, I just like it because it's a math-based concept using something like this, and I'm really looking there. It needs to align with the overall market structure, with some exceptions, of course, sometimes. So one of the exceptions was the trade in euro dollar that I took on Monday. There I did it because of other things happening, that we are at very low sigma levels, that we had the stochastic indicating that the market wants to push higher, and but these are rare. I don't like to be the contrarian normally, because from my experience, being the contrarian trader is so much more difficult than trying to befriend the trend.
Befriend the trend. I like that one. The trend is friend is a good analogy that people tend to follow. But I think befriend the trend. It also kind of states that the one side states that the trend is not there to be an enemy to you. It's there to try and help you. But befriend the trend is almost like saying that I myself need to kind of align myself with the trend and realize that it's not, I shouldn't be fighting it.
Yeah.
I know it's going to sound weird, but like mentally to me, it's just like it sounds cool. So in my mind. I wanted to ask you something, Dirk, before you carry on. I saw that you updated one of your the good, the bad, the Bitcoin indicators. Which one was it? Because I saw the email that it's been updated, but I
This
didn't
morning?
actually. Yes, this morning. I
Yeah.
didn't go into the details of it though.
That's a new one that I've been working on. So this one here, where well, basically the idea behind is there's a concept called K-nearest. Basically, it looks at pivot points in the market and then tries to determine, based on a lot of criteria, which you can find if you open the settings for the indicator, what is coming next, so to say. So it not just identifies a pivot, but it tries to identify, is there a reasonably high confidence to project what is probably going to go next. So for example, for this last signal here, it says has a quality score of 55.4%. And it says there's a reason to believe that the market is going up now, this is for Ripple, to somewhere above 152.40. There's more to it, and this one I updated because I noticed that the projection where price is going was like upside down. So it would, on long signals, show you a target zone beneath the signals, which was just a conversion error. I used a plus where I should have used a minus. And
Okay.
and this is something I updated there. This indicator called KNN Pivot Nexus, you can also find on TradingView. I'm actually tomorrow going to record a video where I explain also in detail what is this all about, why does it make sense, what can you use it for, what shouldn't you use it for. One of the things I'm very happy that I implemented here is an automatic backtest of the signals. So whenever you apply it to a chart, it will determine, are these signals at these time frames actually profitable? So you can see, for example, right in here, and I mean, we're on a 5-minute chart, the signals have a profit factor of 1.06, which is not high, so I wouldn't trade them. So I need to tweak my settings a little bit to find inputs that work better. And so it's kind of like a reality check. Is this market regime on this asset right now, historically speaking, does it make sense to use the signals, or should I be a little bit more careful? And I'm going to make a video about this one tomorrow. So if you haven't done already, head to the description of this stream. You'll find a link to my YouTube channel. And then, as always, I'm going to roll this out for free. For this one, I rolled it out. Everybody can use it, but I don't share the source code for this one because I've been working on it for quite a while, and it's a very long and very complicated source code, which I want to
free to use.
But free to use, absolutely.
Okay. So where can they get it? Because I'm on your page right now on TradingView on Crypto for Money, which is for those of you who don't know, this is Dirk's one. I see you've got 154 followers and you're following 3 people, and I see that you have 9 indicators that you've already created. So stemming all the way back from 2024. So how can people find your...
Search for Crypto for Money. So that's me on TradingView. And if you are on my profile page, you can go to scripts. And then you'll see all the scripts that I have released since a very long time ago already. And the latest one is the one I was talking about. It's called KNN Pivot Nexus. I have a couple of others also that are released, obviously. But that's the latest one. And then tomorrow, latest on Friday, there will be a video on my YouTube channel explaining this beast really in detail, because there are a lot of settings, different settings for crypto, for Forex, for indices that you can use and apply. And I want to provide some settings which I think work quite well. It's not a holy grail indicator, of course. Yeah, so it's, again, something that you should use in scope, in confluence with other stuff out there. There is, of course, nothing like a holy grail out there.
No, obviously.
So, use at your own risk, so to say.
I mean, that's definitely the disclaimer that we will always give for, for any indicator, but still, I think this is great. I've went through your which one was it? Bifurcation or bifurcation, early warning one. Looks pretty cool. Unfortunately, I won't be using it because it seems very, very complicated to me.
Yeah, it
It's
is.
all over the place, and I was like, this is too much information.
This is like one of those indicators where I always wanted to go back to simplify it a little bit, because it has a lot of noise showing you. It shows you like everything, when in reality it's not good to see everything. You just want to focus on the stuff that's important. But as always, it's like on my to-do list, which is very long, and I hope in the next months I will get to that again. But it's nice. Like nowadays, I also don't need to take the brunt of coding anymore. Like Claude Code or ChatGPT not so, but Claude Code works very well, where you can just type in, hey, I have this indicator of this idea and strategy that I use maybe in my own scripts with Python, and can you like translate that code to PineScript, which is the coding language of TradingView, and see if it works there. Many times you cannot do that because PineScript is very limited in what you can do and cannot do, and but sometimes it works, or you can get like an idea out there and visualize this idea quite fast. And I'm always more than happy to share that stuff, because I think there's so many indicators out there that people have to pay for, where it absolutely makes no sense to pay for. So I don't want to go down that road. Whenever it's doable, I like to share it for free.
No, I think that's great. So for everybody in chat, if you want to go and have a look at Dirk's Crypto for Money page, give him a follow, and let's see if we can get these of his trending a little bit.
Yeah, that would be nice.
I see that Martin was asking, Richard, are you in this sell on NQ? I am indeed.
That's very interesting. Can elaborate on that a little bit?
Oh yes, let me just bring up my screen and then I'll show you. Very, very simple trade idea so far. Very typical for me. I look for let's call it a regime change. I just want to see a change in direction. I want to see either slowed momentum, or I want to see lower highs, lower lows, higher lows, higher highs, that kind of thing. I want to see a slow change and then a continuation. In this case, we had this whole segment over here that was really struggling to push up. We had the high of the day, which when we did come to it, we really struggled. It was very slowed. We broke that most recent swing point. So you can imagine that this was a upward trajectory movement, but very, very slowed. We eventually broke volumetrically through it, and then we attempted to retest it, failed, and then we printed another bearish candle, which to me is, this is my sequence. Establishment, reaction off of an establishment, change of direction, in this case from higher highs, higher lows to lower highs, lower lows, a drop, a base, and then another confirmation of a drop, in which case it's just the follow-up bearish candle after the first initial drop, which is this whole segment here, after reacting off of an established area. And yeah, got in it, got slipped ever so slightly. The moment I saw the candle close, I went to go and enter. I already had my stop loss ready and waiting. It was actually a little bit higher up over there, so I just dragged it down after entry. But yes, I got slipped ever so slightly. That is my entry point. This is a 1 to 2 right now. I am waiting. It is currently looking decent. I would like to see follow through. So I don't mind this candle over here currently closing as a bullish candle. I just don't want it to completely take up the full 5-minute candles movement in one candle. I don't mind if it tries to pick up a little bit and then starts going down. But if it's gonna pick up in one moment, let's say this one candle, 37 seconds left on this 5-minute candle, I doubt that it's going to take up this whole movement up to there. but I would like to hold this one to full fruition here, which would be nice because then we're coming back into this area over here, which was closer to a swing that we had from yesterday's highs, kind of like that last attempt to try and push price up during the day. So we've come back into that area here. So that's roughly where this take profit is. So I would really like for this trade to go there. If it doesn't, it is what it is. I don't have a lot on this trade at the moment. It is only 0.25%, not a half or a full percent on this one. So looking to make 0.5% on this trade. If I lose this, it is really not the end of the world. So
that's a lovely trade, man. Really.
We'll
I very much like this concept of break and retest. This is how I also exactly trade. I like to see the break, and then I like to see the retest of, the resistance or support, whatever direction you're trading in, and enter on there. Sometimes, you miss out on the trade then because momentum is too high and the trade the market immediately starts going into the direction. But this is a solid setup, really a solid setup. It's simple, it's beautiful, and it really works very often. You just need to, like you just demonstrated, need to have your risk management in place. Yeah, and by the way, 0.25% is like my maximum exposure per trade. That's as high as I go. I don't feel comfortable trading like 1%, for example.
I mean, I think I used to be exactly like that. I used to just 0.25% was fine. I was never comfortable doing a lot, but that was quite a while ago. Until I got really comfortable with my risk plan, which was I don't know if you remember. I used to be the best of 3 is me. That used to be my moniker, and it was because of my risk profile being I would only ever trade the best of 3 outcomes on a day. So that gives you 4 potential outcomes of the day. So I know it's best of 3, so it's the best of 3 trades. You can only have 4 outcomes. You can either have 2 wins and then you're done, whichever comes first, wins or losses. 2 wins, 2 losses, 2 wins and a loss, or 2 losses and a win. That's the only outcomes you can have on a day. And when I really focused in on that, I kind of got to the point where I was like, well, if I'm going to be risking a maximum of 1% a day, I can go up to 0.5%, and that would make a little bit more sense. I would at maximum lose 0.5% on a day. And I was like, well, if I'm going to get to that point, why don't I just go to 1%? And then I can lose a maximum of 2% a day, and I'll still be within that idea of I'm not over risking, first and foremost. Secondly, I'm sticking within the rules of the prop firm, which is the daily pause rules that some of the accounts might have. More than 3%, 5% loss on a day, I'll never get close to that. And then that kind of like built the idea of like, well, I'm getting more comfortable with the idea of risking 1% per trade, or in this case, 2% a day. So this, because it's the equivalent of an NFP day. It is a high news impact day on the dollar. It's going to be within the next hour. We're going to have the new interest rate data being released for the USD. So I thought, let me not over risk. 0.25%, I'm happy with that today. Let's go for it.
Yeah. Actually, that drove me also to deciding not to open new trades. So I'm only really in the gold trade and the euro-dollar trade that I opened on Monday because of price, especially on those interest rate decision days, plus the PPI that's coming in 1 hour from now or 50 minutes from now. Markets sometimes tend to move very, very weird. And since I'm heavily rely on some of my indicators, I have to take into account that the indicators do not show me the real picture at the moment, because on an institutional level, there's a lot of shifting, hedging, and so on going on. So price behaves not like on a normal day. And as I don't want to bet on an outcome of a release, which I think nobody should do, it's basically just gambling, in my opinion, I tend to stay just sidelines and enjoy that I have like maybe a day off, or that the working day starts after Jerome Powell tonight is done with his speech.
I do like the idea of not needing to trade every day.
Yeah.
I used to trade every single day or at least try and trade every single day. And that idea of forcing yourself to try and find a trade, I think it was a net negative at the end of the day.
Yeah.
Even though I do have the best of 3 rule, where I never trade more than 3 trades a day, I rarely get more than 2 trades a day now. Rarely. If I get a really good trade, generally the majority of my trades are roughly around this area in the morning. And then I have one generally just after New York Open, like yesterday, somewhere over there is what that would be the area where I would generally be looking for a trade. So overall, just this segment and that segment. And I rarely find myself trading both of them unless I see something that really, really interests me. Yesterday, I only had the singular trade during this section. I got in it late. I got in over here. Held it just up to there almost. Closed it a little bit earlier than I should have. I didn't even look at the New York session at all. I'm getting more comfortable not needing to trade often in a day, or even every single day. So if this trade does not go in my favor, so what? It is what it is. I'm not gonna be too worried by it.
I think you're doing it exactly how it should be done, honestly speaking. Don't trade for the sake of the clickety-click action. You know, like you would run a business, you also would just concentrate on what actually earns you money and not jump after each opportunity. And usually the traders I know that are successful fall exactly into that line, that they are very, very picky about their setups. But if they trade, they have a very high confidence level. Still not guarantees, that you are earning money, but, while hunt gold sprayed shit, if you can aim to hunt gold itself.
Yeah. I had this as the original trade yesterday. I closed it while LJ was on stream with me, but I closed it for just shy of a 1.5 R trade. So let's say somewhere over there is when I closed it. And yesterday I was very annoyed with myself because I think I mentioned it earlier. I've always struggled with the idea of letting a trade just be.
Yeah.
I think that background noise that we're getting, I think, is from LJ's mic. So, in general, I used to struggle with, if I'm looking at the trade, I'm probably going to try and micromanage it.
Yeah.
And I was annoyed with myself last night. I told everybody in chat, I told Griff and whatnot, this is my biggest nemesis in trading, is trying to micromanage a trade. Where all of my back testing, all of my forward testing, and everything was done with the expectancy of a set and forget strategy. Yeah. This is 1 to 2, this is a 1 to 1, and then I would always try and look at my results and say how far I was from expectancy. Now, obviously, there's always going to be a margin of error above or below expectancy. You can overachieve and you can underachieve. That's completely normal. But yesterday with this, looking at this trade, I was like, excuse my French, this is BS. Why am I allowing this to continue happening? So today, even though the price action wasn't the greatest when I came to the charts, I just decided, screw it. If I'm going to enter a trade, I'm just going to leave it. So my terminal is open, and I'm looking at TradingView right now, and it looks like it's going to go back to break even and potentially push up higher. I'm not going to bother with it. I'm just going to let it be.
It's going to retest the trend line again there.
Maybe reduce the risk a little bit helped. Yeah. Going from a 1% trade yesterday to a 0.25% trade today. But it is what it is. I'm just going to let it be. LJ, you back, mate?
Welcome back.
Yeah, I am. Good. Yep.
Are you sure?
Yeah, I'm good. It's fine.
Okay. Because you're more than... Dude, like... If you need to, you can. You don't have to be
good.
On your.
I'm fine. That's all right. Cool. I'm good. I'm here.
Awesome. All right.
Yeah.
Cool. So yeah, I was just explaining
And
to Dirk.
Nasdaq, did you so you shorted, right? Yes.
Yes.
So
Yes. So I was explaining to Dirk why we did have this long upward push during the whole of the Tokyo session. We do have the options expiry level all the way down here. When we came out of
24799.
247.99, yeah,
Yes.
all the way down here.
Right,
So
yeah, good. Yep.
when we did exit the Tokyo levels, there was a little bit of an attempt to try and push back, but it was very, very slowed. When we did eventually come back to it, it did really struggle. And then this movement down here broke that recent low swing. And then when we tried to push back up, it failed. And on this candle over here, on this bearish candle, I decided, you know what, this is good enough of a base drop after a reaction off of an established level. And I just decided to enter. I did reduce my risk though, from 1% to 0.25%. So I'm hoping to make 0.5% on this one. So
Yeah. I mean,
that's all.
I think that's fair. Like you've got the break, right? That's fine, and then you got the low before, like below with the options level. So
Yeah.
my voice is terrible right now. It's on the phone before, so That's a
I'll
bit
be right
better.
back, guys. Sorry.
is that a bit better? Bit better.
But better.
There we
But
go.
better.
There we go.
But yeah, so
Dude, I think that's pretty good. I think that's a good trade. Like that plus, like to be honest, if you didn't TP already, to be honest, I would say hold.
I'm gonna try and hold this one. Like that's one of the
To the
reasons why
extent.
I dropped the
Go to
risk
the-
from 1 to 1/4 was I really thought long and hard last night about the discussion that we had yesterday, and talking to Griff, talking to Anastasia, and I just decided, you know what, let it be. Start walking the talk, you know, not just talk about it, walk it as well. So there it is. I'm just gonna let it
Yeah,
be.
so sometimes it's very like other times like where you have the 1-to-1 type thing. Yeah, bang on. You're in, profit, crystallize, good. All right, with this, if you've made that distance, but now everything
Yeah.
is pulled back up and you're waiting for it to like it's come partway, you're better off going to the 2-to-1 or the 3-to-1. So
Yeah.
the
So
base below that.
I'm happy with a 1 to 2. I've come to realize that that is my comfort zone, and I'm not gonna try and stray too far from that. Yes, it's always a good thing to challenge yourself, and it's always a good thing to try and improve or learn to do things different than how you've done it. But at the same time, if it ain't broke, don't fix it. And in this case, this is my quote
Very
unquote
good.
bread
Very good
and
point.
butter.
Yes.
So
Definitely. Yeah.
I would love to be that kind of person that I would say, you know what, I'm going to just hold this thing from level A to level B, and then just, you know, I would love to be that person. However, I'm not comfortable with it at any way, shape, or form. I can
That's
test
fine.
it and I can play around with it, but I shouldn't be trying to change over to that and then just take, you know, this is now my new way of trading. This is my
Yeah,
comfort.
all I'd say with this current construct, because we didn't hit that level for you, right?
Yeah.
So within that, would you reconsider something else? So we didn't get that right away. So would you consider that further drawdown?
I mean,
Deeper
it's
profit.
a 0.25%. It's a 0.25% risk, which by no means is going to harm my.
So would you reduce the risk from here? Like say to that prior top, now that we have had the drawdown, you're not to your TP, but you can
So-
reduce that down to the prior head level, right?
So saying something like having my stop loss basically be over here now. So do something like that,
No, higher than that, higher than that.
like even like up here, or here.
So the price header. Yeah. So yeah, down there. Yeah. That's it.
I mean, I could. That would reduce it down to, 1/8%. So
Yes.
you can do that. But it's always going to be the problem of the locking up of profit. That's the thing I want to do. See, that's the thing. Like when I'm in profit, I want to lock up the profit. So moving the stop loss. Yeah. Yes, it does. It does because it's guaranteed. Right now, it's all in limbo. It's just like nothing is guaranteed right now. But what if I were to make the move down to there as an example, and then all of a sudden it just goes, then I'm going to be annoyed. I think that will annoy me more than the fact that if I moved or if I left it where it was and then just leave it to play out, I think.
But you can adjust it then.
Yeah,
right?
that's true. Yeah.
Yeah. Like, that's the point. So you have like a relative level, higher relative, extreme above that. So you can adjust it between those levels overall.
I was telling Dirk, like, even though I got in a little bit later, a little bit slipped, my stop loss was up over there initially. And then I adjusted it to be the 1 to 2 because I didn't get it exactly 1 to 2 on the stop loss and the take profit lines. But this to me looks good so far, so I'm willing to just let it be.
It looks like it wants to continue into your direction, actually.
I mean, if we were to come back down over here, we have basically entered this small little area of consolidation. We literally just wicked it. So I'm interested to see whether or not, if we were to come back down here, whether or not there's going to be a attempt to try and push through, or if it's just going to start pushing up from there again. So I think if I were to potentially close the trade earlier, it's going to be on the idea of the reaction over here.
I'd be curious what Dirk has to say about that.
Well, I said actually initially already, I think the trade setup itself is very solid. I like those break and retest structures a lot because I think it tells you a lot of what's really going on under the hood of a market. So I would have, honestly speaking, taken the trade if I would have seen that, and if I trade structures like this also. I think it's solid, and I can very much relate also to like closing out, taking your profits too early because it feels good. This is the reason why I try to automate as much as possible because I want to take myself and my stupidity out of the equation, and let it run. And if it gets stopped out, well, then it gets stopped out. I am though a friend of, when you have hit almost your take profit, of putting your stop loss to break even. Not too early, of course, because then you're going to very much skew with your statistics. But because I hate those trades, that come like 1 pip close to your take profit, and then they reverse suddenly all the way back to your stop loss. I'm sure everybody who's trading has had a couple of those. And this is why I like to sometimes put my stop loss at least to break even, or take profits early if I manually do it. I can super much relate to that.
Yeah, the take profits to break even thing is something that I've never truly understood, to be dead honest. Like,
fair enough.
To me, it's just like, yes, you're preventing a loss. But then it makes me feel like I'm afraid of losing.
Yeah.
Where there should be losses in your trading plan. Yes, obviously, the idea is also that you always want to see how much alpha you can get. You want to see how much profitability you have across the board, and whatever adjustments you can make to try and do that, I'm 100% for it. But in my mind, it's always been like, I've decided that this is the price. This is the price to play. And maybe it's a poker mentality where it's like you've got money in the pot. You're either going to fight for that money, or you're gonna lose it by having you folding because it's obvious that you're beat. In this case, I think that's kind of like where my mindset is like solidified around the idea of break even. I've already decided this is what I'm willing to lose. Should we, you know,
For,
I don't
for
know.
me, for me, it's
Another
more
thing to
like,
work
you
on.
know, a trade that has already gone like 75% or 90% into my direction. I feel personally, on a personal level, that is, I feel stupid if I end up still losing money on a trade like this.
Okay, all right.
This, for me,
Okay.
the reasoning, no? If you've gone like 75% of the way already, don't lose anymore on it. But I get where you're coming from, and it's by the end of the day, kind of a psychological thing.
Yeah, because like at
All
what
right, guys.
point do you say? Oh, sorry. You can go ahead, LJ.
I was going to say, either way, I will see you guys tomorrow. I'll be refreshed. Everything back to normal. See you guys tomorrow. Ciao
Take
for
care,
now.
man.
Adios.
All right, LJ. Have yourself a
guys.
good day, my friend. Good luck. Yeah, that was LJ. We'll see him tomorrow. Just wish him the best of luck. He's got some stuff going on. So good luck to LJ, mate.
Yeah.
We'll be thinking of you. To get back to this idea, to me, it's like always the question of like, where do I draw the line between the set and forget and me trying to micromanage the trade? And if like everything that you're saying like makes 100% sense to me, but like in my mind, I'm like trying to think about how would I approach it practically. How would I approach it practically? And then it's like, okay, so for which trades am I going to go to break even? Which trades am I going to close at 75% and so on and so forth? And then I start thinking about, okay, so how is my expectancy going to be impacted by this? Do I need to go and recheck my expectancy? Then it's like extra levels of, okay, so if I continuously do this at 75%, I may as well just make my trades, in this case, be a 1 to 1.5 or 1 to 1, you know, that kind of like thing, which is 75% and so on. And then my brain keeps going to that idea of like, okay, so if I'm adjusting this thing, I should be adjusting that. And if I'm adjusting this, I should be adjusting that. And then it confuses me.
Of course, you need to backtest that. No, you cannot just do that by
Obviously.
feeling.
Obviously, yes.
In my case, I backtested it. You're absolutely right. The trade-off is that your expectancy is a little bit lower.
Yes.
But of course, your win rate is going to be a little bit higher. So by the end of the day, actually, you know, it kind of evens it out. And I think you have to decide for yourself what is for you on a psychological level better to handle. A win rate of, let's say, 40%, but a higher expectancy, or a win rate of 55% and a little bit lower expectancy. And somewhere around this, you need to find your middle ground. What is important, of course, is you need to stick to the plan. And also, you cannot just say like, "Oh, today I'm going this way. Tomorrow I'm going to take my profit already, or put my stop loss to break even when I reach 50% of a way to my take profit." So you need to be consistent. And I discovered for myself that I'm willing to have a little bit lower expectancy, but a higher win rate. It makes me just feel better. That's all it's down to. It makes me feel better. I feel more confident.
That's the thing. It's like it's the confidence. I'm the inverse. For me, it's I don't mind my win rate being a little bit lower. My expectancy to me is everything. That's the metric that I use to determine whether or not a strategy is successful. Is if I have an idea and I've tested it and I meet that expectancy to a degree, obviously margin of error, both sides. So to me, the expectancy is the thing that I really strive to try and get, because for me, if win rate was important, I would have to have it be in the 90s or the 80s or the 70s. I would have to be like a really high win rate, and then I can say, yes, it's worth it. And then at the same time, I'll be like, okay, but what is the equivalent risk to reward for that high level of win rate? And then I'm like, okay, so a 1-to-1, that's great, that's amazing. A 1-to-2, that's phenomenal. I can even go slightly negative risk to reward, 0.9, 0.8, and it might even still be break even or profitable. And in that case, I just thought to myself, like, it seems silly for me. Being a poker player and having a poker mindset, I would say the expectancy is kind of like the thing that I've been taught to become, well, to be the metric above other metrics. Even though all metrics are important, this is like just that one step above. So that's why I try to keep everything as close to, or at least if I measure something, it's to see how far or how close I am to my expectancy.
Have you ever worked with trailing stop losses?
I've attempted it with backtesting, and I've done it when I've traded with a personal demo account. So not a prop. I haven't done it on a prop thing. I've done it on a demo account, and my problem was always, even if I pull the stop loss, I want to close the trade early. That's the thing. It always defaults back to that idea. So to me, it was always the idea of just kind of like step away, don't look at it, don't think about it, let it just play out. So
I think trailing stops are really very, very difficult to get right. In my opinion, I'm yet to have to find a strategy where I can say with a high level of confidence this actually works, because market regime always changes so quickly. So a trading strategy, usually you see something like multiple of ATR, or trailing by 4 candles behind your entry, or whatever, or it's getting activated if your trade is a certain percentage in profit. When the trailing mechanism activates, there are many, many roads to success and losses when it comes to trading.
Yeah.
But I'm I kind of like the idea of having, like, because for me it makes sense, the concept of a trading stop loss. But from making sense to actual implementation that works, I have yet to find a way, honestly speaking.
I mean, what means more to you? The idea that you at least prevented a loss, or the idea that you lost out on better profits? Like, imagine this. This is my original stop loss. This is my original take profit. Right now, logically, according to the way that the trade is going, I should theoretically be putting my stop loss in line with just slightly above the most recent swing point. Now, taking that into consideration, what if this, being a almost 1 to 1.5 trade right now, what if this starts to push back and it knocks me out there for a 0.2 or a 0.3 R trade? Would I be happy knowing that, well, at least it wasn't a loss? Or am I going to be upset that, like, wow, why didn't I just close it there? And then I could have, I would have made 1.5 R versus my 0.3 R that I made over here. That kind of, like, I wonder from your point of view, which one of the two would bother you the most of those two?
The latter would bother me most, exactly because of what you are saying. I could as well have it closed down there for 75% of my initial profit. So I was thinking more of preventing a stop loss. I mean, it's a way, kind of like I'm thinking, actually, thus putting the stop loss to break even. However, with this trailing concept again, is I like it also because it allows you to really write out trends. How often do you see something like in this example, maybe your take profit gets taken out, but then eventually the market continues more to the downside. So there was much more upside for you to be gained. And I backtested this for some of my strategies also. As I said, I haven't found a good combination, but some gave me like an indication that with a strategy like this, with a trailing stop, sometimes you can get these immense trades of 8R or 10R that you normally, if you manually immediately select your stop loss and take profit, you probably never would like aim, oh, this trade, I want an 8R. Oh, I think you are almost there. See, one of those things where the reverse is now a pip before hitting your take profit, or what?
So I'll tell you this. All right. If it doesn't hit take profit now and it starts to reverse, if I get a candle closure above, well, I think it might not even be necessary.
No. But no, don't do the thing you didn't want to do now. Don't micromanage your trade anymore.
So, yeah, it's just taken profit. So
nice. Very, very nice.
Winning trade.
And
Thank you
guys,
very
you
much.
have seen it live here on the fibers, how this trade developed over the last half hour or something. So really well done. Nice trade. Congratulations. If that is not worth leaving us a like and subscribe to the channel, I don't know what isn't. What is.
Thank you very much for that one, Dirk. Martin, yes. For those of you who don't know, Martin and I, we talk quite a bit. Well, he talks more, I listen, and then when I'm on stream and he's on stream, I kind of like engage with him a little bit more. When it comes to NASDAQ, we both have a very similar idea around trading the NASDAQ. Question, Martin, did you drop your trade in the Discord so we can have a look at it? Because generally it's just like, oh yeah, no, I agree, I disagree, and then he's right, I'm wrong, he's wrong, I'm right, and it's just it's a fun back and forth between myself and Martin. Yeah, thank you for that. Thank you for that one, Dirk. I appreciate that. I think generally, if you want to improve as a trader as a whole, you need to find something that works for you. You need to stick to it. And when it stops working, only then potentially consider adapting instead of just disregarding your strategy. Or what, in my case, this is my quote-unquote bread and butter. This is how I trade. I just need to make sure that I stick to this. Because this works for me. And it's the thing that I'm the most comfortable with. Even though right now I'm looking at this and I was like, I really wanted to close it here. Like, no jokes. I really wanted to.
I
So
totally get it, really.
So yeah, just getting back to, let's call it fundamentals. The basics, not fundamentals. Getting back to the basics. And for me, it's doing this. All right. Dirk, I'm going to ask you, is it lunchtime yet?
It is lunchtime. I actually forgot to order some lunch. I just realized. So I'm going to do that very soon. Somebody else coming and joining to
Yeah.
be with you?
It's supposed to be Will. I think Will is just currently joining us.
Joining and enjoying.
Yes, enjoying his lunch, but joining us as well.
Okay.
Yeah. Dirk, you are more than welcome to head out, my friend. Thank you very much for keeping me company.
Yeah, my pleasure, and welcome back, William. Good, guys. I'm going to see you again next Monday. Let's see how tonight, how the world is going to be then. I don't expect very much turmoil from today's interest rate decision, and then we'll see how everything plays out. And congrats to you again for your nice trade.
Thank you very much for that kind word of yours, Dirk. You go and have yourself a lovely weekend, and we'll see you again on Monday.
Bye-bye.
Cheers, Dirk. Awesome.
Good night, Dirk. Have a good one, man.
Yo.
It was good, broski. Sorry, man. I was having like really weird Wi-Fi issues. I joined, and then it said that I joined, and then it like kicked me out. Like, it was like reconnecting, so I thought I'd just reset everything.
Well, glad to see your pixelated face right now, my friend.
Oh, am I pixelated? Am I?
Don't worry, it's gonna sort itself out in a moment.
I was gonna say it will sort itself out. Don't worry. At least I am here.
Awesome. Lexi asking news soon. Yeah, dude, you enjoy that. Lexi saying news soon. You will be covering. Yes, we will be covering the news. We are going to in 25 minutes. We will have.
20 minutes. Yeah. I thought
25
so.
minutes
soon.
25 minutes. We should have core PPI as well as the PPI month on month. But this to me is not the how can I put this? This is not the main event. This is the main event.
This is like an undercard.
Yes. It's bound to be a good fight, but we all paid for this main event over here.
For the Fed fund rates.
Yeah. So even though I think the expectancy here is indicating that let's not call it unlikely. It's less likely that we're going to have a rate cut. It's more the FOMC statement and the press conference that I'm a little bit more interested in terms of its movement. I think most people are kind of aligned with the idea that we're not going to have a rate cut, but you never know. we can have we can have that rate cut decision be sent out right now. The idea is that I don't think that Fed Chair Powell is really going to be introducing a lot of new information for us, because his term is coming to an end very soon, and he will be handing over
Or
his presidency
go
of.
out with a bang.
I was literally about to say that, mate. Like, my expectancy is gonna be the former, that it's gonna be like a whimper rather than a bang.
Yeah.
However, I would not put it past anybody in America, to not take the
So just
opportunity to.
absolute rinse it and
Yeah.
just go
So,
like mic drop. I'm out. I've ruined all of your trading accounts. I'm off. See you later.
so we'll have a look at the core PPI month on month and the PPI month on month change in the next 23 minutes or so, and then we'll see what happens there, Lexi. So we will be covering that. Dude, did you check my trade?
Bro, nice.
How do you put it? Le Bosch.
Le Bosch.
Did you? Okay, never. I was about to say something. I was about to say something, mate. Like you look like I'll send you a message, and then
Yeah.
you.
Dude, you needed to send me a message from that joke from yesterday. You didn't do that in the end.
I forgot.
I'll tell you what. I'm gonna say hello to chat, and then you are going to DM me right now in our private chat that joke from yesterday.
I can't remember the joke.
Oh, you idiot!
Yeah. I forgot the joke. It was a good one, though.
I can believe it. It was good enough for you not to say it on air and to say that you're deep.
I almost slipped yesterday. I was about to
I
start.
know, that's what I mean. Like, it was that good, and oh man,
I forgot that this is a PG stream.
Yeah, what's the one just above PG? You got like PG something, and then you've got like 12, 15, 18. Do you know?
It's parental guidance, and then I think it's 10, then 30. I can't remember, mate.
Oh, is it? Oh, fair. I was gonna say it's like the one just above parental guidance. Like, you can maybe watch it on your own, but you need to be aware. I could be completely wrong. Maybe there's not anything. William, please give me an iPhone 17 Pro Max as a gift. Bro, I'll tell you what, I'll do your deal. You buy me a Lambo, and I'll buy you an iPhone 17 Pro Max. Dude, I haven't even bought myself an iPhone 17 Pro Max. This is the 16 Pro Max. But I will buy you, I promise you, I swear to the gods, I will give you an iPhone 17 Pro Max as a gift if you buy me a McLaren 720S. But it's got to be the Cabriolet as well, so it's got to be the Spider. And then you've got a deal.
Okay, so it is G for general audience, then it is PG for parental guidance suggested, then it's PG.
Oh, okay, so maybe we're PG then.
Then it's
G.
restricted, which is under 17, requires accompanying a parent, and then NC17 says no one under 17. That's the.
Oh, okay. I don't know.
MPA
Would we say
content ratings?
Would we say we're just
G? Dude, we're G, general audience.
Dude,
general
we're top
admission. G. Oh, dude. Nope. Just nope.
I'm so sorry. I know. I threw up in my mouth a little bit when I said that, but you kind of laid me up for it. I kind of had to, didn't you? So. Yeah,
I mean that's true.
Sorry, mate.
Come to the pixel dark side. Let me talk you through my trade, mate.
Dude, am I still pixelated?
No, dude. You're back to your.
Oh, that's right. Then. I was gonna say that would have been really annoying.
No, you look your perfectly sculpted self, mate.
Well, I wouldn't go that far, but I'll just okay. I'll take pixely okay.
Yeah, it's just not pixelated. Anyway, so the original idea of this trade was quite simple. We had, I'm going to use this arrow. We had the whole day's movement be very nice and bullish. We eventually reached and created the top of Tokyo, which we started to push back a little bit from the high, but then eventually went into this consolidator phase. Eventually, this consolidator phase presented with slightly higher highs and higher lows in relation to how it was moving initially. And then we didn't even test the high of Tokyo. We came tantalizingly close to it. And then what we eventually did was we started to push a bit more bearishly in relation to these previous points, these previous swing points basically that we had, the lower swing points. So we had the break lower. So I took it as if we had tested the highs of Tokyo. So you can almost think, so this was something like that. So the last candle before we eventually stopped trying to push up. So I took it as this is an established area. This was effectively the test on it. And then we started to push lower than these recent lows, which happened to also be a bit of a channel that got broken and then retested perfectly, like perfectly retested. Okay. And then it just followed up by another drop. So a drop after an attempt at an established area, a base, which need to have been less than half of this full movement from the top down to here. So if I do that and moved it forward, you'll see that we just touched the 0.5 to 0.16 area. We just touched it. So golden zone effectively. So you come into a golden zone and then from there on started pushing lower. So a drop, a base, and then another drop. I got slipped a little bit on it as I entered. My original stop loss was somewhere up over here. I got slipped a little bit. I moved my stop loss down a little bit after entry to have it full 4,000 points according to MetaTrader, but it's just like what, $40 on the Nasdaq price, and then a full 1 to 2. Eventually, what we did was we came down to here, and we literally just wicked the top of this area of consolidation that we had. Just literally just wicked it. If I go to the 15, you'll see that there was a singular base, almost like a doji candle over here, and we literally just wicked it and then started to push up again. So I was talking to Dirk about this, and I was like, you know, I don't know how much we're going to have in it. What I will do, however, is if we break into this area, into this box, so the top and the bottom of this consolidative section, if we just react off of it and start pushing up, I'll close it when we get to that price line again. And then it just wicked through, and then since then it's been pushing even lower and lower and lower. Right now, we are at the expiry options price for the Nasdaq, which is also the top end of this consolidation at rollover this morning. So the low of the day, we're currently at that area to test it. So news is going to come out in the next 15 minutes. I'm done trading for now. I'm probably done trading for the rest of the day, considering that we have the USD news all until like 6:30 in the evening GMT. So for me, I think I'm done trading for today. This was good enough. It was, however, a 0.25% trade. So
Nice.
I reduced.
Yeah, I was going to say you reduced. How come?
You remember yesterday I had this trade here that I ended up closing earlier than I was supposed to. This was a 0.5% trade for this one. And I thought, okay, I'm just going to reduce my risk so that I can leave this trade to run, to take profit or stop loss, and not feel like I've lost all of my gains from yesterday. That kind of like thing.
Okay.
Bit more of a psychological thing to just kind of...
That's fair. So sometimes you got to adjust your risk to how you feel, and you know your mental
That was
state.
the one side. That was the one side. The other side was I'm under the weather. I'm a little bit sick. I don't want to go into full risk mode knowing that I don't make good decisions when I'm sick or I haven't slept well or stuff like that. So I'm just giving
I was gonna
myself
say,
the opportunity to, just don't over leverage over risk.
Yeah, balance yourself out a little bit. I do remember you saying a couple of weeks ago now, in fact, it's actually become quite a regular occurrence where you've actually regretted something or you've done something or you wish you hadn't have done something, and the main contributing factor has been because you're ill. So it's good, and this is perfect for every single person who's viewing right now, watching this. It's perfect to see you have implemented the acknowledgement that you've had. A lot of people will actually say, I know what I've done here. I shouldn't have done this. I shouldn't have done that. I was ill. I've messed up, yada, yada, yada. And they won't do anything different. You've done that a multitude of times now. You've done that more than once. You've done it more than twice. Third time was the last straw for you. This is the fourth time, and you've executed exactly how you wish you had of prior, which is exactly what you should be doing. And people will say, how do you deal with this? How do you deal with that? How do you deal with losses? How do you deal with stressful situations? How do you deal with personal issues? Exactly like you have just done. You just said yourself, you've executed according to your plan to perfection. You're not ill enough to question whether you should be trading, but you're under the weather enough to know that perhaps you're not firing off all four cylinders. So therefore, what can you do? Just reduce. You know that just put yourself in limp mode. You know that the engine's still running. You know that the car's still drivable. You don't want to be throttling it, full power in it. Just chuck it in limp mode and get yourself to a a garage. So it's cool to see that. I actually just took a look at NAS right now because this morning, I'm just gonna bring my chat up real quick before you do have a look at gold, because I know you want to look at gold.
You do that. I'm just gonna hop out for 2 seconds, mate. I need to do something about this crazy amount of light that's pushing through.
Yeah, no problem. So like I was just saying, guys, I did take a look at NAS this morning. I wanted to see what was going on. We had this area of consolidation over Asia. No, sorry, it wasn't over Asia. This was Asia here. So we had this sort of consolidation here. We had the breakout, the break and close above this prior high as well, putting in a new higher high. Guys, like I said, I am still ill, so every now and then you'll watch me gasp for breath. Yeah, it's using a lot of energy to talk. So just every now and then I may go quiet for a couple of seconds. So we had this prior high taken, continuation. Then we had this consolidation here after taking the Asia highs just around here. So we took in Asia highs just before the rollover into London session. Then we had London highs up here, consolidated, dropped down onto the 5 minute. I wanted to see if we can get a break of structure to the downside, and that's when I wanted to be selling. I didn't see this, of course, because I wasn't at the markets. I was trying my hardest to get some rest. Wasn't able to rest, unfortunately, but nonetheless. However, we did come under this area here. We didn't close, but we did break, which to me is actually a rejection and a potential sign due to the fact that price is so heavily bullish right now as well. It's a potential sign that price may want to continue. So what I did then, or what I would have done, is wait for a close underneath this low here. However, we got an area of confluence to signify a stronger lower low with this wick rejection. And then we've got this lower low here, this big bearish candle here, which Rich fantastically executed on. So what I'll do, I'll just draw Rich's sell position up, because he took this gorgeous sell position, which wasn't, he did have it here, he said he reduced it, so I think he reduced it down to he said 4,000,
so my exact point was 24,931. So slightly lower, 931.
Why is it not loading? There we go. So TP, no, sorry, stop loss. 24.
No, entry.
Oh, sorry, entry.
Yeah, 24,931.
Stop loss.
Stop loss was 971.
And TP.
TP was 851.
Boom. Perfect. So this was Rich's trade, which was, like I said, absolutely gorgeous given his strategy here. However, what would I wanted to look for? This wasn't an entry point for me, unfortunately. I would have seen this and thought, okay, I need to wait for a break and close under here now. Unfortunately for me, this candle was so deep, so therefore I wouldn't have entered here. I would have waited for a pullback, and therefore I would have wanted to see a pullback into this zone here. I wouldn't have taken the wicks into consideration. I would have wanted the body, because the body would have also played as a confluence into this break and close below. So therefore I would have wanted pullback, continuation, pullback, continuation. That's what I would have wanted to see. So we've got Rich's banger over here. My trade, had I have seen this and wanted to trade this, I would have been about here. Stop loss on the high, TP probably around. I would have tried to aim towards Asia lows. So a little.
Yeah, I'm interested to see how we're going to react where we are right now.
Yeah, well, we're at that sort of perfect point of rejection here. So it would be super interesting. You know, we're at a higher time frame area plus a lower time frame area, all confluencing to see what's going on here. So it wouldn't surprise me if we held here. Plus we got news in 4 minutes. I certainly wouldn't still be in this trade. I probably would have cut. What are we on? 5 minute time frame. I probably would have cut around about here, if I'm being completely honest with you guys, just due to the fact that, you know, it would have been as close to half an hour before the news as possible, and I don't like holding too close to the news, so I probably would have cut around there somewhere. So yeah, that would have been my trade. Unfortunately, as you can see, if I just zoom in ever so slightly, you can see I wouldn't have been tapped in. So even though I still would have actually missed this trade, so bravo, Rich, your strategy wins again today, because I would have been missed.
I mean,
but yeah,
you've had your like really amazing trades recently as well. So
yeah,
your strategy, I feel like, is, even though it slipped a little bit, and now you're back to your following your strategy as you normally would have.
Yeah, I think
yours
I'm
is gonna. Gold really wants to dive. So I see that we had news that came out about 54 minutes ago, saying parts of Iran's South PARS petrochemical facilities have been attacked. So what happened 54 minutes ago, let's say about an hour ago, in terms of gold's movement, if you don't mind looking at a gold, mate.
Yeah, absolutely. Let me just try and attempt to load it. Here we go.
So about an hour ago.
Wow, it's dropped.
Yeah. So
about an hour ago, that would have been about 11:30 a.m. UK.
Yeah.
Bosh about there.
So even before then, gold started to drop a little bit.
Yeah, gold for me would have been an indicator that it's going to start dropping around about here. It would have been at this point where I would have been like, that's where we want to move. You know, we had this wick above this high here. Not much happened when it came up to this level. You know, we didn't show any indication of attempt to break above. You know, we had a 3-wick rejection and a very low candle volume around this area as well, showing me that price really didn't have the strength to push up above this area. So instead, we started moving back down. Again, we dropped quite a bit of volume here, and then we started to pick up that volume again as we broke and closed under this low. So for me, that would have been an indicator that price is wanting to continue a little bit lower. But that's super interesting that we had that geopolitical move happen around here.
I don't know if it was the driving force behind the gold dropping off like that. Let's have a little gander at...
Perhaps the acceleration. For example, like, we've all seen Fast and Furious. I hope, if not, you haven't lived. Fast and Furious, you have nitrous oxide, NOS, it isn't the driving force of the car, but it certainly accelerates it. It certainly helps it go faster. And I think that would perhaps be the catalyst towards what's happening with gold.
So if you have a look at the DXY, and you have a look at the VIX, you'll see that both the DXY and the VIX spiked round about that time that the news came out. So, speculatively, the dollar is strengthening because of the, let's call it the strike that happened. And in turn, now more capital is being drawn towards investing in the dollar, and more is removed from investing out of gold. So they are like inversely, let's not say proportional, but like inversely correlated. If people, and once again, if I'm referring to people, I'm talking about all traders, like big and small, all industries of trading. If you want safe haven assets, you'll be looking at gold as a, let's say, risk-off investment. Where dollar is a little bit more risky. In this case, it seems as though there is this potential for pushing more into the dollar and removing more from gold right now. So in theory, we should be seeing EU and GU also plummeting. Yes, EU.
Yeah, well, that's literally what I did now. I just went on to
GU dropping.
EU. You can see here, it's not too bad with EU. Try that again.
And then US CAD, US CHF, and US JPY should all be climbing. Yeah.
Yeah.
So this is seen as dollar favored. What happened now? So I'm not entirely sure why the Nasdaq is falling, unless.
Same with the US 30 as well. US 30, you can see here, it's plummeted. We got this again consolidation, and then in fact this would have been a textbook trade for me to trade. Consolidation, break and close under, pull back into this area. This would have actually, wow, perhaps I really should have been trading this. Where would I have targeted a low?
I wonder how correlated the VIX is. I mean, that's like, it's inversely correlated to the S&P 500. Because the one is the volatility index of the S&P 500, and the other one is the S&P 500, but they're inversely correlated. Yeah. That is quite the drop, mate. Like it's
a significant hammering.
Yes, that indeed it is. I think it was Anastasia yesterday that said she was looking for more upside on oil and more downside on gold. So I wonder if Anastasia did eventually get in on this trade.
Interesting. What's oil doing? What's the WTI doing right now?
Should be climbing, I think. Yeah.
Yeah, that looks quite nice actually as well, doesn't it?
Yeah. Brent as well.
If you wanted a complete, if you feel that you missed your chance to get in on that rally up on oil, you had a complete BEV, a break-even bounce on that consolidation zone. Yeah, bang on where you are now. on that level. Yeah, you had a complete break-even bounce there, like a literal exact break-even bounce before continuation higher. That was really nice for any of those investing. What is the what's it 102? Yeah.
Yeah, so 93 on WTI was the break-even bounce, and then 102 on 100. Let's say 100 all the way up to 102 now.
Yeah.
Fair. Well, that was definitely an escalation. Nasdaq still continuing to drop through this area of consolidation, continuing to drop.
I was going to say it's now continuing to drop beneath prior session lows. So like Asia lows, it's now tanking under as well. It's heading down. That's really interesting. I thought it would have held up at that consolidation zone there on the 1 hour.
Yeah, I mean, we do have on the 1 hour a potential area to test down here. However, there is some areas just above it that we could potentially test. Where we are right now does feel like there is a potential for the... Where we are right now, it does feel like there is a potential for something like this to be a reactionary point. Though it's not crazy, it's not an amazingly good area in my opinion. There's a lot of price that's happening, but like this reaction seems nice from it, but that's more of a reaction on this base area over here, and then we have this price action there. There's a gap underneath that. We broke through it. There's down here there's another base, which is what this one reacted off of. We had a slowdown over here straight within that base area. So even though where we are right now doesn't feel like a super strong area of interest to me. I think if we're going to continue lower, this reactionary point there makes a little bit more sense.
Yeah, it does, to be fair, doesn't it? That or maybe a couple of pips above, like around that area.
I'm gonna just sit around and wait and see what Nas is gonna do. I'm pretty much done trading today, but like you see now, it's hindsight is like the most dangerous.
Just come out as well 6 minutes ago.
Didn't even have a look at that. So that ended up being favorable for the PPI. So it's slightly more than forecast, but it's slightly, well, the core PPI is slightly less than previous, but it's still more than what was forecasted. Whereas the month-on-month PPI was more than both the forecast and the previous. So, but once again,
at least he didn't decide to drop the mic on us.
Yeah. I mean, that being positive for the dollar, just if we go to any of the dollar pairs, EU as an example, that was the news event right there. You would assume that this movement that we're having right now, this would just kind of continue pushing it in the same direction. Yeah. So all of this was a geopolitical event, whereas this down here was a US news event. So the US news event is probably just going to continue this geopolitical event, let's rather say. Excuse me.
Abadov Linkler, I hope you don't smoke.
I don't.
What are you on about? What? So when people ask me, are you a smoker? I always say no.
Which is a lie.
Smoker. But but that's what I mean. Chat, let me know. Am I lying?
Are you vegetarian, mate? If you every now and then have a steak? No, you're not.
Yeah, fair.
You can't call yourself a non-smoker if you have a cigar every month, once a month. That's
once a week.
Okay, once a week, dude. You can't. There's a camp, and there's prerequisites to be in this camp.
I got an entire drawer dedicated.
And you're up over here. Here's the camp of non-smokers, and you're up over here, mate. Like so. There's.
Yeah, I suppose. But I'm not a daily smoker. I'm not addicted. I don't think I'm addicted. I can
Have you,
quit.
have you seen that meme where I think it's Victoria Beckham is sitting on a couch and she's saying something, and then David Beckham's head comes out
Yeah,
of the door,
yeah,
and he
I've seen
says,
it.
"Tell the truth, tell the that kind of like thing."
Yeah,
I feel like I want to be honest, be honest.
yeah.
There we go.
Okay, fine. Yes, I'm. No, it just feels wrong. Like none of my family are smokers, and they hate smoking. Uh, so I've been brought up like you are not a smoker. So I am not a
I'm not a
smoker.
smoker. I'm not a
I'm
smoker.
more
I'm not smoking.
elegant than that. I'm a cigar smoker. Okay, fine. Like, no, no, there's no way I could. Yeah, fair. No, I'm a smoker. Yeah, fair. There's no way I could try and find a way to dig my way out of that one.
I view it as you
I'm a
either are
connoisseur.
you either are or you aren't. However, there is a line in between how much you are versus how little you are. So in this
Yeah,
case, you're more on the I'm less of a smoker, though I'm still on the
yeah,
I'm smoking section. Whereas I'm a non-smoker. I
yeah.
don't
It's
smoke.
like, yeah, yeah. So I
Dude,
smoke
where
Jamaican
is
cigars. Yes, Louis.
dude?
Legend.
Where is gold going to stop? I missed the melt and waiting for the retrace. Your question
Bro, I don't think
is
it's
as
gonna
good
replace.
as ours. Right now, we have come into a much further back area of resistance that we had. This resistance point is all the way back to the 18th of February.
Yeah.
We'll see whether or not this sell-off that we're having right here is more of an impulsive reaction rather than a long-term follow-up. So we'll see how we react around this area. This is the 4-hour chart, by the way. So potentially, if we do see a
I was
rejection
gonna say, yeah,
and then attempt to try and push up, that would be in line with what you're looking for, a bit of a retracement. However, that is quite the sell-off like we've had over here, which was this was Friday last week. That was followed up by some consolidation and now some more sell-off. So what if we just kind of like enter a little bit of consolidation and then a potential push lower? I don't know. We'll see.
yeah, I was gonna say I was on the hourly and I have to like scroll left quite a bit as well. So yeah, the 4-hour you can see that we've come into that zone there, but I don't know. Where's it going? Well, I reckon it's going to the area that's currently at. Is it gonna hold there? Hopefully. Otherwise, like the next area will be the 6th of Feb low at
Yeah.
4657.
4657.
That's the next low. That's the next area we'll go to if we cannot hold this zone that we're currently just entered into on the 1 or 4-hour.
Yeah, so this one where Primal Light is saying this is impulse, I think. Yes, it is an impulsive move, but an impulsive move can just as easily become a continuation. So
A weighted move. Yeah, exactly.
yeah, so that's there's the saying, don't try and catch a falling knife, in the sense that if a move like this is happening, don't try and get in on a sell down here and then have your stops there. Like, there is always this potential that price can try and retest the area where it was prior to the news, or the area where it was prior to the impulsive move. That's always a possibility. So I like the idea that Ciano Leary is saying, I'm waiting for the retrace. I agree to that. I think that would be the smarter, more structured trade.
Yeah, don't
Wait
just enter
for-
in now
Yeah.
and hope. No, don't
Wait
FOMO
for-
in and
yeah.
be like, oh, it's sinking. We must now get on that ship. You know, wait for something to happen first. Wait for a retest, potential continuation, or wait for something. Wait for something to happen that's weighted in the direction of your strategy.
Yeah.
100%.
So if we are going to see a retest, I would like to see the lows of Monday, Tuesday, and the Tokyo session of today. This would be the area where I would rather want to see a bit more of a test. because that was the consolidative area, and now we're having an impulse, and this impulse is due to news. So a geopolitical event with news that came out, and everybody's like, crap, sell. So in this case, I would like to see a bit more of a retracement to come and retest this area and then decide whether or not this move that we had here was indeed what the market wants. It's indeed in the direction that the market wants to go. And then you will see whether or not this area over here gets respected or rejected. If it's rejected, it's going to push straight through it. It's going to disrespect that level. If it respects it, it means that we're going to just hit into it and then start producing lower highs and lower lows. Then you can look at getting into. But before then, I don't think that there's a selling trade on gold right now. It's already moved. I mean, what's the size of this move just from there to here? $118. Where the average movement for this whole week is pretty much $65. It's twice that in the space of 3 hours. Yeah, I'll wait.
Yes, I wouldn't just go jumping in now willy-nilly and hoping something's going to move our way. I think that would be a very silly thing to do.
Yeah. So, yeah, John Essex, or John E. Essex, that is the general idea with gold and dollar, that they kind of run against each other. If, let's say, the most invested assets being dollar bonds, that kind of like stuff, gold being on the opposite side of that. If we really want to reinvest in the dollar and all of the assets associated with the dollar, gold is really on the other side of it, because gold is also heavily dominated in China, Russia, India. They're all very large gold holders as well. So you're not just investing in the US with US bonds and stuff, like you're investing against whomever else is holding gold when you buy gold. So in this case, from what we can see, if the dollar is pushing lower, generally you'd see gold react oppositely. In this case, we're having a strong reaction trying to push the dollar up. Gold itself is pushing lower. So even though on the DXY, what is this? Last week, this whole week, we've seen this attempt to try and push price lower on the dollar. Gold has been flat. So they don't run together all that much, in my opinion. I can be completely wrong, though. Just my opinion is that they don't really run all that much together.
I was going to say, it doesn't mean that we're right. It doesn't mean what we're saying right now is, gospel. It just means that this is what we're seeing. This is what we like the look of.
The remember, we're still Richard.
Yeah. You gotta remember,
we're talking about gasping for air. Yeah.
Oh, fair.
Yeah.
No. Okay, fair. No, it's because I'm still ill. So, dude, I went for a walk earlier, and literally I was walking downstairs, and I just got so out of breath. But don't worry, it's not due to smoking. I'm a cigar smoker, not a cigarette smoker. So my lungs are still super healthy.
Super healthy.
Yeah, I run pretty much every day as well. So
Did you run yesterday?
Oh, I sure.
You ran yesterday.
I ran yesterday. Wasn't very far, but it was very fast.
I set records, mate. I set records.
Yeah.
All right, so mate, let's talk about this. Let's. What is our expectancy now, considering we've had this impulsive move on pretty much most of the major assets? I'm sure some of the exotics may have moved as well. Yeah. So anything that is connected to the dollar has moved now, I'm assuming. Like even, what is this? The Norwegian krone and even the Swedish krona as well is reacting. So, in my opinion, I want to see, and this is going to go like across the board to all of the assets that has had this reaction that we're having right now. I want to see whether or not this move is indeed just an impulsive move, or whether or not this is the beginning of a new trend. So obviously, we have been quite, on Euro as an example, over the last few days, from the beginning of the week, we have been quite bullish. So low of the week, making higher highs and higher lows across the board. Yes, impulsive move, not really breaking any of these previous points. However, it is an impulsive move. And an impulsive move can either be followed up by a correction and then a recontinuation of the original trend, which was in this case a little bit bullish on the week. Or what it can be is a retracement and then a establishment of a new trend, which is counter to what we had this whole week so far. So if we go on to the higher time frame, it might even look like it is a re-establishment of this whole higher time frame downward trend that we had. So let's say in this case dollar appreciation rather than depreciation. In this case, dollar is appreciating. It seems as though this escalation has been, on a trading point of view, been good for the dollar. So people want to invest more into the dollar. Will this escalation that we had now, will this be a continuation of this 4-hour downward trend that we've had? Or is this pullback that we had here indeed the stronger convictive move or convicted move, and that this impulse itself is just a, let's call it a rebalancing before picking up more orders to try and push higher?
You're on about Euro.
I'm pretty much on, it's in regards to any of the US connected assets. So I'm referring more to the impulsiveness of this move. Is it a complete directional or bias changer, or is it just a rebalancing and then affirming an old direction? So that's kind of like what I'm like, on which side is this the change, or is this just impulse? I
mean, when it comes to the technicals, I think this is a continuation of that bearish trend. Two areas, it's now reacting at the exact area, the exact area, perfect on the 4-hour to continue lower. However,
4-hour base.
Perfection. However, I would like to have seen it move up a little bit higher to that 4-hour high.
Yeah, this area that I had
no,
higher. I think it's on the higher, even higher, like up the way.
That area that consolidation on the 4-hour looks delicious to come up to, touch into, and then continue on lower for a deeper low. That would have been nice. But so for where we have moved up to, I'm not sure how high we're gonna. How deep of a low we're gonna imprint. I always find like the deeper the pullback on the higher time frame, the deeper the continuation on the low as we go down.
You're talking about a lot of stuff that's deeper.
Go deep or go home.
In this case, it makes a little bit more sense if you look at this downward channel that we had. Obviously, establishment, and then that's where you basically confirm the direction. So you need 3 points. You need a high, you need a low, and you need another high in order to have a channel. In this case, we just wicked above it with this news event. Interesting to see whether or not we are going to indeed continue to a lower low. Divine Equan is saying, I need it to take out a major low first then. Agreed. However, testing a high and then producing a lower low, even on the lower time frame, like taking out that low over there as an example, could be a signifier of a potential push lower. I mean, it is impulsive once again. as always. Impulses kill accounts very, very quickly because people want to try and catch it as it's falling instead of doing as was explained earlier. Who was it that said that? Ciano Leary saying, I'm waiting for a retrace. Me too. I'm also going to wait for a potential retrace. However, I would really love to see at least price push down, take out these lows, try and push up. That's the retrace, and then continue lower. That I would love to see. And then I'll want to get in on a trade there, aiming to reach these lows down here as an example. But I won't do it on the 4 hourly, obviously. I'll wait for a lower time frame reaction. So wanting this to be retested and then continue lower. That's what I would like to see. Wow, thank you. I was already in a Euro USD short. I did forget to check the 4 hour and now I closed it. I mean, you were in a short.
What?
You should have kept it open.
Yeah. Don't close it.
No, I mean the news itself.
Just
the news itself did not
trail
much.
the stop loss.
That was the news candle. That one. The news candle itself did not do much. The initiation of the move itself was started by Iran being bombed at one of their petrochemical companies, one of the largest petrochemical companies in the southwest of the country. So there you go. The news itself didn't end up being the catalyst. I have $5 in my wallet and I have a free challenge gift. Nice. Go ahead. Trade it. Trade it. Trade your $5.
Full margin. I'm just trying to look at...
Abradolf Linkler 22 is saying, you were talking with Dirk about market continuing after taking your TP. Have you considered pyramidal trading, letting winners run and adding on to new trades? I'd like to hear your take on it. So, great question, by the way. So if I were to go to NASDAQ and in hindsight, obviously, in hindsight, it would have made all of the sense in the world to kind of either do one of two things. Either have the trailing stop loss where every time you have a swing point like this and then a continuation, you just drag your stop loss to the prior swing point or just above the prior swing point. Wait for another retracement and then a confirmation of pushing lower and then you drag your stop loss. That would have made a lot of sense. However, like I explained earlier, for me, the idea... The other option is that you can, as you're pushing lower, every time you come up to retrace a little bit, you step in an order, as an example. Let's say hypothetically another quarter risk or something like that. But the idea is that you have to continuously take out the original 0.25%. Let's say it was 1%. Let's say this was a 1% trade. You take off a quarter of your risk. And then you re-add that quarter as you're pushing lower. So every time you have a swing point, you add another 0.25%. Like let's say every time you reach a new swing point, like this one pushed down, it came back up, it confirmed somewhere over here that it wants to push lower. Maybe there you add another 0.25%. So you remove a 0.25% from your first trade. So now you only have 0.75% on the table. You add a quarter here. You've already locked up that 0.25% worth of profits that you've taken off, and then you re-enter it here while leaving your take profit to just run. And you take off 0.25%, and you keep adding it as you keep going lower. Every time there's a swing point, maybe somewhere over there, you have another 0.25%, and you just keep on letting it push lower. That's the other option. So you're reducing your risk you're locking up profits. And even if one of these trades eventually start pushing up and knocks you out, you still have all of the previous other swing points and profit points that it can take out and sweep, and you'll still be fine. You'll still be deeply in profit. My problem is that I don't want to look at my trade as it's going, because I want to micromanage it. I want to close out the whole trade instead of taking out portions of it. And it's because, for me, the expectancy is the thing that is the most important for me. I want to see how close or how far I am to my back-tested and forward-tested expectancy. So that just means that I'm not comfortable letting trades run continuously. But once again, if you look at it in hindsight, it makes perfect sense. But in reality, for me, it's difficult. It's difficult for me in reality to try and manage a trade to that point. That's why I will always advocate to people, if you're going to learn to trade, find something that you are comfortable with. Don't try and emulate the way that I trade or the way that Will trades, because it might not necessarily be according to what you're comfortable with. So this is my comfort, and I can find ways to test my comfort level and be comfortable with being uncomfortable is one of the things that I'm trying to do. But it is a difficult task. It takes a long time to get used to being uncomfortable in the market. This has gotten me paid. Yeah. This is my bread and butter. This is the thing that I know I can do well. I don't want to let go of this just for the sake of doing something that I'm uncomfortable with. But yourself, Aberdolf Linkler, if you want to go and test this, I would seriously advise you to go and test this theory first off in a risk-free manner. Don't go and spend money trying to test something. Just find out if there's efficacy to it for you specifically. See if you can do it on a demo account. And then when you eventually try and implement this in a, let's say, either a live account or a prop account, start small. Start with a small prop account. Not a lot of investment on your part. You can do a 5K or a 2.5K Fivers account, which is going to cost you a small amount of money in relation to the amount of capital that you'll have. Or you can take $100, £100, 100 whatever currency you're trading in at home and try and trade that then. And once you get comfortable with the idea, then start scaling it up. Then you can say, okay, I'm comfortable with this. I like this style of trading. I resonate with it. It makes sense to me. I'm going to try this now with a larger account or with more capital. Myself, I don't have, I'm actually quite risk averse. So I want to manage my risk as much as I can. And this is the best way I've found to do it without screwing my expectancy, which is something that I do by closing trades earlier and so on. So bit of a psychological burden that I have, a little bit of a roadblock. I need to work on my roadblock. But it doesn't mean that you cannot go and test it for yourself as well. So for me, I'm not comfortable with it at all.
Yeah, exactly. That's fair, man. You gotta find what works for you. I was a bit quiet then. I do apologize. My partner just sent me a stock, a HK, a Hong Kong stock, and said, "Can you check this out?" And I said, "Yeah."
Dude,
yeah,
you're
cool.
breaking up a lot, mate. Like
said,
you're.
He goes, "What does that mean?" I thought, "Oh, this is a good start." So, oh really?
Yeah, you're breaking up a lot, mate.
Let me just try and put my phone in a better spot. Is this better? Can you hear me a bit better now?
I can hear you a lot better. Your camera's also reacting a little bit more.
Okay, sweet. Yeah, like I was just saying, I do apologize. I was a little bit quiet during all that. My partner just sent me a message on WhatsApp saying, "Can I check a stock out?" And I thought, ooh, how exciting. She never sends me stocks to check out, so I thought, let's have a look at that all together on stream, thinking that it would be a good stock to look at. It was a Hong Kong stock, and she goes, "Can you check this out?" I said, "Yeah, sure. What's the ticker?" She goes, "What's that mean?" I thought, oh, okay, we're in a, this is a good start. I was like, "What's the name of the company?" she sent me some gibberish, and I've never heard of this company before. And I was like, right, okay. So I was just doing a bit of googling, and I still don't have a clue what this stock is about. But I did, however, get the chart up for this particular stock. And I don't know if she wants me to look at it on a fundamental, because I certainly can't look at it on technical. Let me go to the... It's been open, it got launched in 2024. Let's have a look at the 6th monthly chart.
What's the point of looking at a 6th monthly chart if something is less than 2 years old, mate?
Well, look at... This is the daily chart, man. How am I supposed to look at that on a...
Go to the weekly. Let's start on the weekly. Yeah, start on the weekly and then see whether or not you can see something there. Okay.
No.
So new company established. This is a pretty standard initiation of a company that's less than 2 years old. Not a lot of upside. Still gathering a lot of investors. Still potentially trying to build its repertoire and whatnot. So, yeah. And it's paid out dividends.
It does pay out. It's got a yield of around... I've actually got some information here on it.
Dude, you should go join Trade the Pool with this.
Yeah, fair. Yeah, fair. Maybe trade... Guys, if you guys at Trade the Pool are watching right now, and I'm cringing you out, I'm sorry. I have got some information. This is not financial advice. This feels a little bit more serious than usual. It was launched February 27th, 2024. Its expense ratio is 0.75 per annum. That's not too bad, I suppose. Dividend frequency is monthly, and it's got a yield of approximately 17 to 18% per annum, but it does vary. It specifies varies.
I mean, it's only had 2 annums upon which...
Yeah, I know. That's what I was a little bit concerned about as well.
Yeah. It's at annum 2024 and annum 2025.
And 2025. But, you know, 17 to 18% per annum. 2 annums isn't enough for me to confidently put my money in and say I'm expecting about 17 to 18%. But... No,
I honestly would really go and do my homework and see in which field this stock is. Is it one of those stocks that is more hype than substance? Let's rather say, and then decide from there.
The last price was 9.73 Hong Kong dollars. Wow, that's like 0.09 pence, something like that.
Okay, so what? When, according to this, is that the start of this chart? Is that when the company went public?
90 pence, sorry.
Is that when the company went public in March 20?
No, this is the last price. This is the most updated price. Was
no. When did the company go public?
Oh, sorry. It went public in 27th of Feb 24.
So when did it get its first listing? Its price listing or share listing.
I'm trying to find that now on it.
Try and have a look at what was its initial public offering, so its IPO.
Yeah.
When it was released.
Yeah. I'm on Yahoo Finance Singapore, so hopefully I can find the IPO release on it.
And then correlate the current price to the IPO price, and then you'll see whether or not there was actual growth over the last 2 years.
I can give you current price. I tell you what, let me see if I can Google the IPO price. Do you reckon you should give me that?
You should be able to if there was an initial public offering. If there wasn't, then it would just be whatever was listed on whatever stock exchange it was listed on.
I tell you what, I can go into trading.
Because from what I can see now is that the price after 2 years is pretty much where it started in 2024 in March. So
this is as of March 17th.
Very little growth over the last 2 years. An attempt here and there, but effectively were trading two weeks ago lower than the initial stock release, so the initial investment release right now. So
Yeah, I'm trying to find.
do you think that it means that
April.
this company is undervalued, or do you think that in the last 2 years this company has seen very little growth? That's kind of stuff that you need to go and have a look at.
I'm gonna go with the latter.
Yeah. What
I'm gonna go with the
sector is it?
latter. I'm
What-
gonna go with the.
Yeah.
Okay, I can find you. I can find. No, I can't. Exchange, Hong Kong Exchange, ISN. I got the management fee. Board lot size 500 units. The total net asset value. Wowzers. Okay, that's in Hong Kong. Let me try and find that in GBP. Yeah. Let me translate this. In fact, no. Let me translate this to US dollar because we talk about the dollar a lot on here. So let's go with that. So 21413410961.
While you're doing that, Abradolf Linkler is saying, so it's purely up to everyone's discretion. Thank you for your answer, Rich. I'm actually backtesting this on a 2.5K and I got to say I like it. See, that's the thing. It's just like, it's everyone's own opinion around it and how you resonate with it. If it's comfortable for you to do this, it's going to be easier for you to execute. If you're not comfortable doing it, you're going to struggle with your execution. So it's kind of like that balance between pushing yourself out of your comfort zone and not having to fight against yourself every time you have to take a trade. So there's going to be a bit of a balance there.
Okay, so it's
dude,
got
no. Your English is
21 billion.
perfect, mate. Dude, your English is perfect. Where are you from, by the way? Just for the sake of interest.
Abradolf Linkler is French, is he not? I think.
Oh, yeah,
I'm sure he's
you're
from
right.
France. Yeah, I'm sure he's from Normandy.
Yes, you're right. Sorry. Yesterday, I think you mentioned it yesterday. I was tired yesterday. A lot of this information that entered my brain, exited my brain yesterday as well. Disciplined trader asking, check my entire plan in EURUSD. Is it good or bad? What is your... Oh, here. Okay. Have a little look at EURUSD. Let's see. Okay. First of all, I'm going to remove all of my drawings and then let's just have yours. Entry 115.20 a sell. Okay. All right. 115.20. 115.45 is 115.45 your stop loss. $45. Okay, and then with bearish engulfing liquidity sweep above high, rejection wick with a stop loss is 115.60. What is the 115.45? Stop loss of 115.60. 115.60 is like above the daily high, effectively. Like, it's 150.60 is high up. Are you intending on swinging this trade, or is this an intraday? It does feel like it's more of a swing. What are you aiming for? So, disciplined trader, where are you aiming for? Awesome, France. Viva la France.
Vive le français.
So what are you aiming for specifically, disciplined trader? Because you have a reasonably wide stop loss, which generally to me indicates that you are going to give your trade room to breathe, much like the way that Will trades, giving it like room to breathe. But then that equally means that you need more space for your trade to play out as well. So your take profit is going to be significantly further away as well. So this might be more of a trade. Is it on the 4 hourly? Is it on the hourly? So it's above the 4 hourly candle. That looks great. What are you aiming for? Probably aiming all the way down to about 114.16, I would say. And that would give you a 2.6 hour trade, if not wanting to hold it more. What can you aim for below that point? I probably would not aim further below that point, to be dead honest with you. If I just bring my screen up, you'll kind of like see what I mean. On Euro USD, you've already had this reaction point over here, and we've had a singular reaction off of it already. So if we are going to come down, I'll probably want to have it be at the top of this box, or at least not lower than these recent swing points, that kind of like thing. But do tell me, what is it that you are aiming for? Because if your stop loss is all the way up there, I think it's a good area for a stop loss if you are potentially working on the idea of price maybe coming back for a bit of a retest before continuing lower. I think this is good for a higher time frame trade. It's above the 4 hourly candle. Makes sense. You had the sweep here of the previous 4 hourly candle. If I can just zoom in here, then you can see it. So I'll move that out of the way, and then I'll just hide that. You have these two. If this was the high, oh, did I miss it? Yeah, there we go. This was the high of the previous candle. You've had the sweep. I need a new mouse. You've had the sweep over here, and you have pushed lower. However, you would not have known that it's pushed lower because your entry point has not yet been triggered, unless you preemptively entered knowing that the sweep over here was exactly what you were looking for, and that you would have entered close to this low point of the previous candle. So I think the trade idea looks good. In terms of holding it, if you're going higher time frame analysis, you're going to have to, or in this case 4 hourly or 1 hourly time frame analysis, you need to do the same thing for your take profit and your swing points. In this case, you need to have this area down here be swept and closed. So I'm just going to call that was technically the previous day low. So let's say that the previous day low, you need price to push into it and close below it. Then potentially you can have a bit of a retracement and then a continuation lower. So that area there is going to be pivotal to your longer term trade. I mean, if it does end up going there, that's a 1.35%, 1.35 R trade, which is not bad. So far it looks good. I honestly would not hold my take profit beyond 114.15 for now. But it's like I said, it's because of the fact that you've had already a singular reaction here and another one there. So if you come all the way back here, you'll notice that we had this little bit of a consolidation and then a volumetric push up. So if I were to drag this all the way to the left, you'll see that it comes around that area where we've had the consolidation. Obviously, you can widen it a little bit, but still, it's around this area of consolidation before we had this nice volumetric breakout. So just I would be careful of that. But so far, it looks good. It looks like a good trade.
Yeah, Abdullah Linkler saying buy Logitech, buy Logitech gear, my friend. These things last 10 years, and guess what? They're 100% French. Allez français, allez. You got Logitech? I don't think I've got
Logitech mouse, mate. No, I've got one. It's the G Pro, the older one, not the new one. But I've had it for yonkers of years, and I've already had to replace the clickers on the left click already. So and it's already double clicking again. So it's just old, mate. But yeah, I love Logitech gear.
I think my brother's got Logitech mouse. I think it's T-Dagger, and then I've also got Artec keyboard. So yeah, Also, I found the exact ticker for that company. It's IPO. I've actually got the IPO here. The IPO was 9.88. So we've had pretty much zero growth. It's now 9.9, so we've had 0.1% growth. Oh, 0.1 growth. We've had the daily return is 0.25, the 5 daily return is 1.5, the monthly return is -6.5, or minus 2.65, sorry. The 6 month is minus 8.33. The year to date, so this is, financial year to financial year, is minus 5.17, and its yearly is these are minus 9.25, and its all-time growth since beginning is 0.61% growth over the whole
So
2 annum.
for a 2-year investment, you would have been chewed up by inflation.
Yeah,
So
you would have lost money. You would have lost a significant amount of money on this stock.
Well, not yet, because it's unrealized, but
Okay, yeah, fair. Okay, depending
right
on when
now,
you're taken out.
yeah,
As you stand, you would have lost money.
Yeah, your account would be net negative.
Yes, yeah.
Would be net negative.
However, I haven't actually looked into what this company actually is, so perhaps, in the next couple of years, it may see some significant growth and then some huge upside potential. But if you look at the technicals that it suggests, according to the oscillators, it's neutral. The summary is neutral, and according to the moving average, it's suggesting you offload.
Yeah. Once again, but that is because it hasn't seen any significant growth over the last 2 years. It is still very close to its initial public offering. It's paying out monthly dividends. On what growth? Weird, mate. That's kind of weird. Anyway, I'm not a stock expert. I'm not gonna act like I am one. However, I'm also not a gold expert.
Yeah.
I'm not a gold expert either. However, I do have opinions on it. So in this case, Divine F1 is asking.
Let's move back to what we do know.
Gold, she has taken out a major low on the daily, so we are waiting for a potential pullback for a retest. Right? Question mark. Okay, so that box that I had drawn out on the 15-minute and on the hourly, that has already been swept right now. And you can almost... Oh, come on. Zoom in. There we go. It seems as though it might be rejecting the push through. However, we still have 8 minutes before this 15-minute candle closes. On the 5-minute, however, it has rejected the bottom. Now, that's no guarantee that we're not going to continue plummeting lower. I'm just warning that there is a potential for it to maybe start pulling back. Okay, so let's just give it some time. On the 4-hourly, we still have 3.5 hours before this 4-hourly candle closes. Once again, still very much an impulsive move. We want to see two things now before we see a retracement. We want to see a significant slowdown on the lower time frame. So let's go down to the 5 as an example. We want to see price significantly slow down its descent. So something like that. So you start having more of this kind of like price action. And then you want to see it start volumetrically push back up. So you want to see larger bullish candles than bearish candles, and you want to see follow through. You want to see multiple bullish candles, maybe 1 or 2 bearish candles, and multiple bullish candles. That would be the retracement. Until you reach a point where you do the inverse. You either slow down significantly and start getting smaller and smaller and smaller candles trying to push up, and more larger bullish candles, until you eventually start getting a full-fledged push down lower. Then once again, I would consider then selling, trying to retest this area down here again. Right question mark question right, right question mark right. That is the general idea. Gold waits for news right now. I guess there's still plenty of data to be dropped within the next few hours. Yes, that is true. However, when we did have the news drop, which was here, you already had the majority of your move playing out due to the geopolitical unrest, the geopolitical event that happened, the bombing of the Iranian petrochemical company. So this news event that we had here was just in line with this geopolitical event. So let's say hypothetically, because this is going to be hypothetical because I have no way of knowing, but hypothetically, let's say we did not have any of this news event, any of this geopolitical unrest, and it was doing this slightly sideways action, and then the news came out from the dollar and then started pushing it lower. Then I'd say, you know what? No problem. We're waiting for more news. In this case, this move happened prior to the news even coming out. Slow down, yes. I want to see it push up a little bit. Try and get to a point where we had recently some back and forth. Slow down at that area nicely and then start pushing lower. I think that would be a good attempt. I think you were muted, mate. It looked like you wanted to talk and then it just went quiet.
Huh. Can you hear me now?
Yeah, I can.
Oh, that's okay. I have no idea what I was going to say if I was going to say something, I'll be honest.
I'm currently rubbing a ginger kitty cat.
Okay.
The weather has turned and it's becoming a bit stormy. So when it becomes stormy, they kind of like start gravitating towards my feet.
Nice. Do they ever walk across your keyboard?
Nope.
Do they not? Dude, you're so lucky.
No, dude. It's just they're trained. They're just trained.
Okay, so no, at home,
we don't give them food on the table. We don't give them food on the table. Whenever they jump on the table, they get cussed. Get off.
Oh, okay. Yeah, that makes sense. So when I'm in the house, and like if we're all working in the house, let's say it's like raining outside, like maybe my dad's doing work on the table, maybe I'm not in my office, maybe I want to socialize with the family, so I've come into the like shared space, and then I'll come to the table. I'll be on my laptop, and like the cat will jump up, and like my dad will start like giving it a bit of a fuss. It'll come over and just walk straight across my keyboard, and I'm like, brilliant, gee, thanks, like fantastic. I've now just written an email that started off in English and finished in gibberish. It's one of my biggest pet peeves.
Abradov Link was saying, "Let him walk on your keyboard; he'll make you a billionaire." Dude, I know one trader that's going to fight this statement with every fiber of his being, and that's LJ.
Yeah,
LJ has lost a significant
that,
amount of money because of a cat. So,
dude, I'd never have a cat again if I was LJ. Like, I'd be cat phobic, feline phobic.
The thing is, he likes animals. It's just that the cat itself was the cat itself was neglected by its owner. LJ wasn't the owner of the cat.
Yeah, fair.
So the cat got neglected by the owner, and then the cat just wants attention. And look who's around. Oh, it's LJ. LJ, give me attention. LJ is always at his PC, so the cat's just like, okay, let me just walk on this. So yeah.
It's fine. I've said to the missus, because she got two cats, and I said to her, like, I'm gonna get a bed for my desk, so like I attach the bed at the side of the desk so it can literally hop up into bed as I'm on the computer. Oh, that's pretty sick. But it's not allowed on the desk.
Yeah, that's how it should be. Just like.
Yeah.
You don't give a cat food on the table, because every time food is served, the cat will be on the table.
Yeah, exactly.
So
yeah.
You want to say, okay, cool, if you're going to jump on the table, if you're going to give food to it out of your hand, just, do it on the floor.
No, I don't even believe in that. Like, food doesn't come from a hand, it comes from a bowl. I'm super strict, especially with my dog. I'm super strict with that. No tidbits, nothing like that. My missus comes in, instantly tidbits. She comes down with a bag of dog treats for him, and I'm like, wow, gee, thanks. Just
It's for that one day where she decides he's dinner.
yeah, and it's like, oh my god, brilliant. So, but when I'm in the house, like, no dog gets fed from the hand. It goes straight to the bowl, and yeah, it's just I'm super strict with my rules and my training for my animals. But no, apparently that just goes straight out the window when Cece comes into the house. Just
Until
complete
you
spoil.
see a dog or a cat just taking the teeniest, tiniest little bite to take a toy or something, just like takes it and then walks away. Then that changes. So, by the way, this is an earplug, all right? It's one of those like ones that can collapse and then it inflates
Yeah.
eventually.
I was going to
Okay?
say you twist it, put it in, it expands.
Yeah, so this is my one cat's favorite toy. And she'll call me. She'll pick it up in her mouth and she'll start calling me to come and play. And if I don't answer, she plays with it herself. She picks it up, she slaps it, she throws it around. And there's always one of them sitting here ready for her to play with. Always.
Dude,
Cutest.
I never believed this was possible. And so my partner, she's got, like I said, 2 cats. One of her cats is the most dog-like cat you could ever imagine. Like, it plays fetch. And like, it's a cat.
Yeah.
It's a cat that plays
think-
fetch. I never believed this. Like, for as long as I knew her, I completely disregarded this idea. I said, "Nah, you're full of rubbish." She literally recorded herself with a tin foil ball, like you know, like tin foil that you wrap over your food, like a tin foil ball, and she threw it down her hallway, and it chased it, picked it up, ran back, and dropped it. Legitimately
Marbles, mate.
played fetch.
Marbles. A little glass marble. We used to have a cat that you could throw it down the hallway. He'll go and chase it, pick it up, and literally come and drop it by your feet, waiting for you to throw it. It's the same with this.
That's nuts.
My cat brings it back to me, wanting me to throw it for her.
You
Anyway.
strange people, strange cat people.
Selfie is asking, can you take a look at Forex Factory and let us know your opinion on what's priced in already and could shift the sentiment even slightly? What watch out in general? That is a good thing. That's a good question. Let's look at this. So,
Show me the LJ.
yeah, but LJ, why are we talking about cats?
Because why not?
Because, dude, we're in charge. We get to talk about whatever we want.
Yeah, you want to talk about cable? Well, we want to talk about cats. Next
So,
up in topic of conversation is giraffes.
Okay, so I'm going to be dead honest with all of you. I think that most of our interest rate information is already factored in. I am of the opinion, and I'm more than happy to be proven completely incorrect. I'm not stating this as fact, but for me, the idea is the war, or at least the impact of this geopolitical event between Iran and the US is the biggest driving force behind the movements at this point in time. It also has the highest impact down the road. You can imagine if a full-blown, let's say, world war picks up, what that's going to do to trading. Do you honestly think that the interest rate decision today is going to move the market when everybody's sitting on the edge of their seat waiting for another world war? You kind of like it what I'm saying. So the idea is, I don't think that all of it is completely priced in right now. I think there is some fundamental aspects about the, let's say, war related stuff that is still of importance, that is going to be a long-term driver should this war escalation eventually play out. Okay, so in that case, I do think that the US federal fund rate right now, which is going to come out later today, I think that's pretty much already priced in. Because why would you be changing the fund rate now, knowing that you're going to have a new Fed chair in the next few weeks. So I don't think that Powell is going to change anything right now, and I think that even the FOMC statements are going to be quite uninspiring. But that's only because I think that they're waiting for the new Fed chair to come in and really rattle the cage. To really, like, as they say, a new broom sweeps cleanly. And that's the idea. So, new broom, they're waiting to see what he's going to do. That's my personal opinion. I think in that case, it makes a little bit more sense for me as to why today's information might not necessarily have the long-term impact, or at least have that much of an impact when you compare it to the amount of impact that this escalation in the Middle East has caused. So I'm not saying there's going to be zero impact, just rather that I think it's going to be much less. So that's kind of like my viewpoint. Hello, Victor.
Thank you very much. Thank you.
Hello
How
there.
are you?
Will, how are you doing? And everyone watching as well. It's
Not too sure, my
hey,
friend, not too sure.
trader, isn't it?
It is. It is a very
Yes.
interesting day.
I was just waiting for you guys to not agree to start a debate, but yes, we are all in agreement. We have lots of happening. PPI shocking all those breakout or reversal traders that are expecting. We're expecting EU, for example, to continue higher, and that turn around, and it's completely the opposite. We have
Yeah.
gold. Last couple of hours just melting down. What is it, like $140 plus. So everyone who was, thinking otherwise is, anyone who was thinking that was just a retracement, probably got a little spanking there, to
Spanking.
say the least. So how are you guys looking at the charts? I mean, where is the opportunity according to you?
So myself, I'm looking for a potential continuation on this movement that we're having now. Yes, it was a volatile movement. So I'm waiting for that confirmation to say that this is indeed the direction we want to be in. So like I've marked out now on Nasdaq, it was an impulsive move. So I'm looking to see whether or not we're going to have a retracement, which we're busy having right now after we've missed the zone that I marked out down here. It just missed it, but we're having a retracement now, and I'm going to wait to see whether or not we're going to continue bearishly. If we do continue bearishly, then I would definitely try to get in at some point, maybe around this consolidation area, if that's an area where we start reversing from, and then potentially look at taking a trade down again to this area that I have, which is down at 24,632 to 24,567, and that's basically just this area yesterday where we had a little bit of consolidation and then a breakout. So I want to see whether or not this area itself is going to be respected or rejected from. So right now we have rejected off of it, even though we didn't quite touch it. We got very close to it and then started reacting. So that's what I'm waiting for.
Yeah, actually, NAS is a bit, or the equities in general, but NAS specifically is a bit tricky, I think, today, because we've had 2 days of up days, and we just retouched. Maybe I should I should show my screen a little bit.
We can do
Is
that.
that even possible? Can you share your screen a little bit, or a bit more?
You
That
either
doesn't
do
work
it in its
right?
entirety or not at all.
Exactly.
Do or do not. There is no try.
There is no partial showing, right? So what I was talking about was that we created that order block. We came in, had that retest. This is the daily, so this is the bird's eye view, and we had we went on and reacted upon the bearish structure that we had. So we completed, to me, the first target for the bulls, which was just reaching this area. And the question is, are we doing a retrace for a continuation, or is this we're flipping back? We're going from one structure to the next one again, and that
Yeah.
and we're right there in the middle in no man's land.
Yeah.
And I think now is very tricky because it can do both basically.
Yeah.
So if we go
That's
three
why I'm like saying I like the idea of it retracing and then deciding what it wants to do. I don't want to be in any trade right now on NAS.
on the short term, it looks like it's going to go south since the next structure on the lower time from the H4, it should respect it. Should have respected if it was going to continue, or at least it made more sense, and it didn't. So what does that tell us? If it closes below this level by in about 20 some minutes, 20,
Yeah.
20 and 15 seconds, then that break of that H4 would be official. And to me, that means that that's an extra argument to think or to expect that price is going to at least go to the next H4, but probably to the next daily before anything else. But we'll have to see. I mean, that was a cruel kind of a gruesome move there, not to be ignored at all. And if you look on EU as well, we had. Let me show you guys. We did have a very beautiful. We talked about that yesterday extensively, as well as on the Discord. How we bounce on a daily structure very, very beautifully right there. But so far, we're expecting, or we're looking for, at least I'm looking for that daily conviction price action, and I don't see it. I just see a pop, I just see a reaction, but I don't see buyers really taking over. So what does
Yeah.
that mean? We're still left in the limbo. Probably we need to either go back and retest this area again, and then get some more clearer picture if we're gonna respect it eventually or not, definitively, or create something else, another structure that will make us continue higher. But so far, it's you know it seems to be at the end of a little bullish pop, but that's it. That bullish pop doesn't need to, last for any more than what it had. And actually, we have, if you look at the moving average, for those who love using that, that's a very, very, very clear sign that we rejected it. Look at that outside bar created on the H4, very significant if you're an intraday trader. We rejected that. That is, I don't actually use them, but I do have them on. I do have use them for my trading signal, but this is let me double check. I never know in advance what the one that I'm showing is. It's the 200. No, not really. It's the 50. I don't
Yeah.
actually use them. That's why I don't know. That's the 50 EMA. It's not even EMA, but that doesn't matter.
Yeah.
The point is, it's a very clear rejection of that level. And to be fair, we just touched the next level. If we switch back that reversal and push us to the demand zone, the next demand zone is just here. You can see how the market reacted to it. That's the level, right? From this point to that's the order block, and you can see how the market comes in and moves away very beautifully. As always, as the market loves to do these moves when it gets to these areas. I think either you caught the move, or you're on the sidelines waiting for some clarity, because I don't think right now is very clear what we want to be doing. And I think NQ or NAS would probably trap people today a lot,
Yeah.
because we just had the open. So everyone who's trading these opening
Or
uh, orbs, right? Range breakouts will, since the market is in the middle of nowhere, is likely to go past each side before it actually chooses direction. And that means that, if you're trading an orb, today is a day you want to be extra careful with those signals.
yeah.
Yeah,
I did get a sell on NAS though, which I'm quite happy with.
you did.
So
Okay,
yes,
nice.
I did.
Cool, cool,
I
cool.
want you to guess well, you can see my screen, but like, I want you to guess where I got in.
Um,
I'm giving you a clue. It was a sell.
I would say up on here, right after it had this. Well, I don't know. I don't remember what time frame your bases were, but I suppose it was on that breakout. Would it
Yes, it was on that breakout, but
breakdown?
it was slightly earlier. It was on the
Okay.
5 minute. The entry
Oh,
point
okay.
was 24,931.
Okay. 24.9. But that's not NQ. That's on the NAS.
Yes, on Nasdaq.
Okay. So let me double check here.
Right next to your NQ one, just below it.
Oh, thank you. You're fasted, and it's my list. Thank you. Ha, you're on fire today, Richard. Why don't
I
you
am.
come in and do my taxes as well while you're at it?
That would just be irresponsible of you, Victor. You know this.
Yeah, so you said 24, 900, and what did you say?
931.
31. Okay. So was it here or was it
Yes.
before?
On
Okay, right
yeah, on
here.
that one. Yes.
Oh,
Yeah. Right there.
oh, that's a beautiful breakdown. Yeah. And you held it how long?
I held it for 80 points, so I held it down to 24,851.
51. 851. Okay. Yeah, that's and you're trading 1-to-1, right? If I
1 to
remember
2.
correctly. 1-to-2. Okay, all right.
Yeah,
So
it was a 1 to
it
2.
would be
Yeah.
something like that.
Yeah.
That's a beautiful. Don't you have remorse that you didn't hold this? Of course, you didn't know it didn't want to, but you follow your plan. I suppose you're gonna say.
I mean, in hindsight, yes. I was like, look at that. Can you imagine?
Mhm,
But I had this same discussion yesterday with
mhm,
Griff and Anastasia because I had a trade yesterday that I closed instead of at a 1 to 2, I closed it at a 1 to 1.5 R, slightly less than a 1.5 R. And I was thinking about it the whole night last night. And as you know, my whole idea is
mhm,
be as close to as you can to expectancy. There's a margin for error around expectancy. You can overachieve or you can
mhm,
underachieve your expectancy, but the idea is to
mhm,
be as close to it as you can be. And my whole back-tested strategy has always been on the idea of setting and forgetting at a static take profit and stop loss, and then seeing
mhm.
how close or how far I can be from expectancy based on that strategy. And yesterday I took a trade. It was a buy. I ended up closing it a little bit earlier, and it bothered me. And I
Mm.
just decided today, you know what? Just enter, set and forget, and carry on with your day, kind of like thing. So,
Mm.
yes, on the one hand, looking at it in hindsight, I'm like, yeah, there was a lot more on the table. Could have made quite a bit more money. However, I'm happy that I stuck to my original plan and my original strategy, and I'm satisfied with the result.
Oh, nice,
Ah,
unbiased trader. One of those traders and viewers that is, very often with us on the stream here, getting funded on his futures account. Awesome, man. I like that.
hang on, I
We
got it.
definitely congratulate you and want to hear more about how you did it, where you. There's uh, that's a nice one. Yes. I'm gonna come back just in about 2 minutes. Have to do something before I come back. Right? Be right back.
No problem,
Not
Victor. You go do that.
sweet.
Yeah. So yeah, making sure that you follow the process, I think, is ultimately the aim, and then stuff like
Yeah,
this will happen.
100%.
And by the way, unbiased trader, awesome. Do 7.5 hour trade on Nasdaq. That's great.
That's amazing.
For those who don't know, unbiased trader is also part of our poker community as well. He's also joined us for Friday Night Poker.
Big congratulations, brother.
Yes. There we go.
We do like our poker.
Yeah. we haven't had poker in a while. There's been some unfortunate things that have happened in between that have made it very difficult. But I'm pretty sure we'll have another night of poker soon.
Yes, well, this week I'm definitely going to be there. I was supposed to be there last week, but I fell asleep and I didn't wake up. Because poker starts for us now, for me, at 2 a.m. and I put my alarm on for 2 a.m. I thought I did, but just
Oh, dude, for LJ, it's 6 o'clock in the morning.
I know. No, it's
No,
not.
4
It's
o'clock. 4 o'clock. 4
o'clock
o'clock in the morning.
Yeah.
Yeah.
Yeah,
Dude,
nuts.
let's just have it earlier, mate. Like,
Thing
let's
is,
just
that
have
when
it
I
earlier.
I can't have it earlier when I get back to the UK because,
Dude,
like,
not everything is about you.
well, it is.
Anyway, so
Like,
right
all
now
the
on
guys
NAS,
finish work at like 5 p.m., aren't they?
yeah, but then it's only LJ that's gonna be like, oh, it's 4 o'clock in the morning, guys.
Yeah, at the moment, it's only me and LJ that struggle with it.
No, it's only you that struggle with it. LJ is a machine,
yeah.
mate.
Yeah, LJ is absolute bonkers, to be fair.
On Nasdaq, we did miss that level that I marked out. We did indeed start retracing. So this is that slowdown that I'm talking about. We have wicked into this consolidation section, which happens to also be the low of low of the Tokyo session. Let's see how price develops in this area. Are we going to have a heavy slowdown and then a potential push lower, or are we going to see a full-blown retracement trying to come back to this areas up here prior to the news, prior to the sudden volumetric movement that we had due to Iran's petrochemical company getting bombed? Let's see whether or not this area. So I'm going to, first and foremost, I just need to do this.
In fact, while you do that, Rich, I'm going to take this opportunity to head out as, like I said, guys, as you're well aware, have not been very well the past couple of days, or yesterday and today. So I'm just going to go to bed now. Literally, I'm going to finish up, brush my teeth and go to bed. So guys, hopefully I can get some good sleep, fully recover, and be back in my normal energy, ready for tomorrow's trading, which is the last trading day of the week for myself and for the stream. So guys, thank you very much. I'm going to love you and leave you. Enjoy the absolute words of wisdom and the fantastic trading that is coming up next with Victor, and I believe Samir is coming in soon. So guys, thank you very much. I love you and leave you, and peace.
Enjoy, Will.
Better soon, Will. That's our wish for you. Thank you very much. I will zoom myself out a little bit because I feel my head being a little bit bigger than I want it to be. And I can,
Better.
Are you moving or are you zooming in?
No, I'm moving. Mine is just a regular webcam. It does not have zoom function. So as
yes,
yeah,
go ahead.
I just wanted to say quickly, like we are seeing a touchback into this area of consolidation right now. However, as I was saying, if this gets disrespected and we start pushing above, there is a potential base to be tested on the 15, as well as an area of consolidation also to be tested. So I'm just going to wait and see how price reacts where we are right now. I want to see on the lower time frame a serious slowdown. I want to see it slow down and then start presenting a new downward structure before I would reconsider entering for a sell. So I'm just going to be waiting for that. Even though I'm going to be honest, I might not be entering another trade for the rest of the day. Just purely sheer amount of red folder news. It's getting later in the day for myself as well. I generally have one trade before New York and one trade after New York session or during New York session. But if it's like high impact news day, I don't want to accidentally get triggered on a soft breach on an account because I'm trading during news. So just kind of like sit it out.
Yes. We also had Bank of Canada releasing its statement on interest rate. We can take a look at that as well on the charts. Dollar CAD, for example, that happened like the 7th. Yeah, unchanged. How the reaction is on the market, but of course the big headline in terms of macroeconomical news releases is going to be in about 4 hours almost, which is the federal, FOMC, the Feds bring out their interest rate decision, which is today. That's a major red,
Event.
burning red, sizzling red kind of news. Usually, there's nothing happening, even because it's all about expectancy, expectations being met and not being met, and as long as they give the public in their speeches and things like that, sneak peeks into what they thinking about. Usually, there's no surprises. But the thing
Yeah.
is, it's the dollar, it's the interest rate, and there's a war going on, and there's Trump. So all of that put together in a melting pot is a combination for a potential move. Typically, the market reacts, but a little bit like anti-climax. It is afterwards, like in the last the hours afterwards, that somehow people there's a directional move and
Mm.
not necessarily in at the release, but you never know. It's it can be potentially a big driver for prices. Even though
I
it
mean, would you want to play that game? Would you want to go on the
which game?
idea the game of it may not? Are you really going to
No, no,
are you really going to play that game? I don't think so. So I think in that
yeah.
regard, it's better to rather be cautious instead of being proved right. That kind of like thing.
Mhm.
Yeah.
I baked the in my trade plan already. Uh, uh, steps that will keep me from trading. Right at the release, anyways. So
Mm.
I just follow the plan, and the plan tells me that I shouldn't be taking any trades. I should actually
Yeah.
be taking positions off right before the news. I
Mm.
should only leave in a certain occasions, and because I have, there's plenty of things that need to happen before I can enter. You know, it's not going to happen on a little move that I get triggered. Many things need to fall into place before I can actually start getting into the. That's the opening range of NQ for those who are trading. Opening range breakouts. The market is being very, as you can see, weak, bearish, very bearish, and it's only logical. Actually, let's go to the. We don't have the close yet, but the market seems
Mm.
not at all interested in not breaking this order block. This
Mm.
is a fresh order block on the H4. That's very significant for your intraday decision making process because it
Mm.
means that the market is preferring to just break this major intraday structure, likely just continue lower. And actually, if you go to the 1 minute, you can see how the market came back and retested from below. What does that tell us? That's a very clear sign that the market is not in. Actually, look at this. This is so beautiful. Look at that. I mean,
Mm.
I cannot make that up. That's the power of these order blocks, right? Market breaks it and it comes back and on the dime, look at that, look at that, look at that beautiful retest from below where the market comes back and retest. That's the indication, you know, if you're trading this, the break of the low of these candles, that's your cue to get in, right? Whenever you can literally just put a stop order there, a stop sell order that would be, and get into the market, get triggered in because it tells everyone if they're not able to break this flipped structure, then it's obviously going to continue. And this is happening the same thing, just on a bigger time frame, right? Just in a bigger time frame, breaks it, comes back, retest, and likely, not always. Basically, this is the idea for those who are wondering. That's breaking. It's supposed to bounce off of it, but it's
Mm.
not. It's breaking it, coming back from below, and likely, we don't know that, but likely have that continuation move. But it can change. I mean, the
Yeah.
market is dynamic. It doesn't have to always follow the same script, but
Nothing is set in
it's
stone.
exactly. It's fluid, right? This can change
Mm.
depending on what happens out there and the headline news coming in, as always. So we
Yeah.
can take a look on EU. what do we have? We do have. I did take a couple of uh, scalps from this level. I was shorting this all along. We hit this area. I took one one entry, got like a couple of pips there, and that's it. That's the scalping. Uh, all of the scalping that I needed for that
So,
time, at least. Go ahead.
so Victor, I know you're an absolute savant when it comes to trading, but like, which do you prefer? Which is your, if you had to choose, doing the short form scalping or your order block quasi reactions? Like, let's say a
I
little bit higher
Yeah.
time frame.
Well, I enjoy. It depends on the situation because there's something to be said for both of them. I mean, the scalping, I can get in, get to the charts as long as the market has volatility and there's movement in the market, and there's a couple of things that I need to check before. But as long as the market is presenting itself well, and that can happen multiple times a day,
Mm,
sometimes 20 times a day. I'm not trading all of them. But
mm,
there's plenty of time, and that's very flexible. That's very comfortable because I can just move away, come back, and continue. But that I can say that about the main strategy that I use with quasi and order blocks, which has a specific fixed sequence of things that I need to go through. Like I compare it to something like a checklist that a pilot
mm,
on a commercial airline has to go through, right? It really has to go through all of these checklists, checking if everything is done before he can actually press the throttle and start the takeoff. I compare that to my normal strategy where I have multi-time frame analysis and all of that, um, uh, everything aligning perfectly, and then I can take the trade. But scalping
mm.
is way more flexible and easier on that front. And I think the my main strategy is more elegant, uh as my opinion, right? Because it's beautiful how it seems not to work until it actually everything looks like it's not going to work until it works, and it's of course it's going to work. It's elegant how it captures
Yeah,
the move, not always, but I mean when it does.
yeah.
And but scalping is it's like um
It's
I would
brutish
say it's
almost.
like more shooting from the hip, right? I
Yeah,
don't have an exact area where I get in. It's much more uh, discretionary, I would say, not so fixed.
yeah.
Yeah.
Less
So which
refined,
one
a
are
little
you?
bit more brutish.
Yes, but
Not as
actually
elegant.
very profitable.
It's
Very
like being.
because you have. Go ahead.
I'm sorry. It's like being in old Roman era, being part of the Senate, and then going outside and seeing, they're all wearing their togas, and they have their wreaths and whatnot, and then you go and you look at this is elegance, this is opulence, and then you go into the Colosseum, and then it's absolute chaos. It's like your one trade, or your one trading style, let's rather say, it's like more of like the
That's
decadent, opulent, well thought out, well structured, and then the other side's pure chaos, brutish, but still effective and still profitable.
actually that's not a bad comparison at all. And the well, yeah, sure.
Whatever floats your
Yeah,
boat.
I think
Whatever floats your boat.
it's the thing is the uh on the metric sides, on performance and sense, in the sense of effective capturing the move, the quasi and order block combination with the alignment and all of that is way more efficient in the sense that very selective, but
Mm,
it's very efficient. And scalping it's not efficient at all, but because it's like a blunt blow, because you're doing a lot of it. In the end it can really push the needle, because
yeah.
you can just continue on and on, not not indefinitely, but I mean you can, it's not like one single and that's it.
Yes.
There's so many things you can, so many times you can get in and out, because it's scalping, right? It's a couple of minutes, usually sometimes longer. But anyways, yeah. So on EU, let's take a look at the chat. Richard, how are you doing? I like seeing your face, my friend. I do like to seeing your face.
Well, that makes one of us liking to see my face. Um,
It makes me glad. It makes me glad to see you. Just want to say that.
well, well, I am very happy that you are happy to see me because I too am happy to see you, Victor, because we haven't had an opportunity to let's call it spend some screen time together. It's been a minute, so I'm reveling in this experience. So, thank you.
Well, it's good that we both having some intimate time right in public. Let's see.
Yes, yes. Holding hands and whatnot, you know.
We're joking about it, but I truly think that that the world would be a better place if everyone, including male macho figures, would be just a little bit more in touch with their feelings, and it would make world such much a much better place. Uh,
I
period.
mean, pink drinks are tasty. All right. I'm not going to lie. Having a cosmopolitan every now and then is tasty. I don't always have to just drink beer. I can, I can go into the other side of the fence and be like, I'm enjoying this. This is fun.
That's
Yeah.
exactly right. It's actually a real thing. Brotherly love. I mean, it's not so
Yeah.
popular, but I think it's a. I mean, it's a beautiful thing. Don't want to
Yeah.
be too you know romantic, but it's a beautiful thing.
Love is
Anyways,
love, man.
that's
Love is love.
yes. All right, so
And that's the wife, by the way. That's my wife. Just checking in to make sure that she still has a husband.
and yes, on EU, changing subject to something a bit less romantic. On EU, we have on the higher time frame, the market clearly not interested in reacting and respecting that monthly structure. You can see how far we went through, way below that structure. That speaks volume because it means that the place where the market is supposed to be, buyers are supposed to be coming in, they're not. Um, so that sets the tone for well, we have to wait for the close yet. That's the close, that's the line in the sand that we need to be watching to see if we can recoup or not. Even if we recover and close before this level, I'll be very careful into believing that this can continue, because that big wig has been quite cruel to that order block, if I may say so. So on the weekly, let me take this away. On the weekly structure, that the same thing is can be said, right? The market did not regard the structure at all, and close below, it's actually a invalidated structure. I still have it on for the reason that we have that flip behavior. The market is fractal, and it does this
Mm.
on every time frame, on the 1 minute as well as on the weekly or the monthly. It breaks the structure, and a couple of candles thereafter it comes back, and that structure can be used as the opposing direction, meaning a supply zone. So this is a bullish structure. Used to be actually an invalidated bullish, but now can be a nice area for us to take a short from. So that's why I leave it a couple of candles after its invalidation sometimes. But on the
Mm.
weekly, there isn't anything else. On the daily, however, we had that the thing that we just talked about, that reaction, but it's not convincing me. It's not showing us that the market really, that the buyers really came in and they are completely in control. I don't see it. So I want to see more information from the market before I take a swing trade.
Mm.
I want to see the market either come back to this lower order block, this entry order block, which is a beautiful area, very tight area, and see what it does there before I can make up my mind and take a long from here. And or it needs to create some other structure that I can base the strategy on my entry on. So all right, so that's one thing. So the um, we do have a fresh order block, right? If you look at the H4, that's where the market reacted. But to me, it didn't get to the area that I was interested in. If you take a look here, we have 15 candles, and to me, that's 4 or 5 candles too many to take the trades. That means that I will just let it go and I'll pass. And of course, that would be didn't even have an H1 structure for me to enter. That means that I need to wait for the market to come back to this area. Otherwise, I'm not going to be doing anything. And if you look at the market, considering everything, let's take a look at the ATR, how we're doing so far. This is 64 on the average being right now, the average ATR, so the ATR is 86. So basically you can expect, today's not a regular day though, but you can expect if this were a regular day about 20 pip more expansion, and you can guess which side that's going to be. That's unlikely going to be to the upside. It can happen, but it's unlikely. It's likely to be on the lower side. So you can already show this. Hi, Samir. How are you doing? You can
Hello,
show this.
guys. I'm sorry I'm
I
late today.
No problem, my friend. No problem. Um, 20 pips lower, that would be the area, and you can already see how this um, uh, fits with the the expectation of that area being a nice area to go long intraday in any case, because it's at the end of the ATR range as well, right? Based on the ATR, what the range of today could be. But we have the big if or X factor, which is the FOMC.
Yeah.
So given
The
that,
big question.
it's I would say that's not something I want to be. Uh, I don't want to be. Well, if the signal comes in my trading time, I will take it, but I will take it off anyways before the news actually hits. So
Okay.
I'll just follow my plan and get the signal if it comes in earlier. Likely it will kind of coincide, right? The market will slowly go there, and then the news will come out, and it'll go whatever it wants to go. But if that happens, that means that I probably will not be able to get in, or it could be
Yeah.
something for tomorrow. I don't know. We'll see. So that's EU, at least on my part, waiting for the market to to react. This is exactly the trade that I'm trying to get in. At least I'm waiting patiently, but because of the news, I'll have to wait. I may not be able to get in, or if I do get in, it will be just a little move before the actual news comes out. I was NQ. I see. We know Samir is laser focused on his
I'm in
graph. That's
trade
because he's
actually.
looking at the Dow 30 to get some money from the Dow.
He's in a
I
cell.
saw him.
Yeah, I'm in a cell, and
Yeah. Also.
Maya just paused the meeting. Then I just punched the trade, and I was like, I had a trend line breakout, and let's take a shot.
Actually,
So
yes,
yeah.
that's we all are dying to see your chart. So let's
Okay.
go ahead and see it.
Before you go into too much in-depth analysis there, I am going to take this opportunity to love and leave you guys. Let's put it like that. Samir
Yes.
and
Thank
Victor,
you.
it
Thank you so much
was
for.
lovely spending a bit of time with you
Yeah.
guys again. So I will see you tomorrow, Samir. I won't see you tomorrow, Victor. So good luck and have fun. I'll see you all tomorrow. Cheers, guys.
Same to you as
Thank you,
well. And
Rich. Take care.
we all here at the Fivers, including the audience, we're sending a huge hug to Richard. He's in the
Yes.
background making that gesture of a hug, and he's receiving that from all of us here at the Fivers, as well as from the audience.
Yeah.
I can we can assume that he's feeling that blanket of warm love covering his soul. Take care, Rich. All right. Um,
Hello,
someone
guys. Hello, chat. Yes.
Samir, I've read somewhere, I think it was in the chat, if I'm not mistaken, someone thinks there's at least one person who thinks you look like Johnny Bravo. Do you know that cartoon figure?
I think when I will, let me just do some research about it. Maybe I've seen
Of
it.
course, yeah.
Yes, I've seen it.
There's
Yes.
there's something, I don't know. Someone said that, and of course you have different color of hair, but apparently, they think you remind them of Johnny Bravo.
No, guys, I'm not. I'm not Johnny Bravo. But yeah, if you
Indian Johnny
guys,
Bravo.
yeah, Indian Johnny Bravo.
All
All
right.
right. So I was in a meeting actually, guys. So I'm sorry I'm late little bit, but I spotted this opportunity. I got a better entry. Why? My original entry was somewhere around here. I took a engulfing and price, got back a little bit here. So on futures account, my entry is a little bit better. But let me do the analysis with you guys why I took this short. For that, I have to go to uh, let's take a look at daily time frame. So observe this daily candle, guys. What it is telling you. What it is telling you. It is rejecting from here, and if you uh, I'm sorry, guys, having little difficulties in using this platform. Okay, if you see here, we have a very decent level right here. Let me draw it this way. So price rejected from there. So in the back of my mind, my bias was on the I wanted to take sells for today, and we have this level. As you can see, we have a couple of support and resistance areas. So right here, it is my target. Now, if we go to the smaller time frame, let's go to the 5-minute time frame. And what you see, EMAs are bearish. If you go on to the 1 hour time frame, let's go to the 60-minute time frame, or maybe the 30-minute time frame. Observe this area. Let me draw this. So I saw this trend line breakout also. So I was like, maybe today there can be a selling day. Why? Because price is under the level, daily is rejecting from this level, EMA is bearish, trend line has broken. Now it comes to the entry. I have done my research where there is more probability for the price to continue. For me, it was to the downside. So now it comes to the entry. What I wait for? I wait for a consolidation so that I can see if price is showing some kind of pause before a drop, or it can also go to the upside here. But here saw a pause and price broke out this trend line, took a short here. My stop loss is above the 15-minute, this level right here, which I have. This is 4-hour level and above that area, and it is also above the EMA. So this is my stop loss placement. To me, it is logical. If price has to, break this level, it is gonna hit the stop loss anyway, or it can breach this high also. So that was the thought process behind the trade. And my TP is also very logical. It is the near the daily low. And on the other account, my TP is here because the entry is a little bit below, but I got a better entry, so I am placing my TP a little bit above. So yeah, that is it. Trend lines, some levels, EMAs, and some patterns, trend line breakouts. These are the things. I combined these things and took a shot. And also the momentum, look at this momentum pullback, another impulse. Maybe we can impulse at least to here, but I'm not looking for that. I only want my 1-to-1, which is around this area. Actually, it is a little bit above. Yeah, it is here. So yeah, let's see how it is gonna go. By the way, guys, this is the Fiverr's futures platform. So that's why I'm showing you this platform. So yeah, now let's just wait. Seems like this candle has closed really nice. I just want a one push and TP will be smashed on this account, but on the other accounts I have TP somewhere around here. So yeah, let's see. He's a anime character. I don't know why, guys, you are linking me to some kind of anime. I'm a trader. I'm the fibers guy, the streamer, live streamer. So yeah, I saw a gold was also showing a very decent momentum to the downside. I have posted a reel on the Fibers India channel. Based on some levels, I was anticipating a move to the downside. Let's pull out gold here. I think it is GC, if I'm not wrong. Yeah, this is gold. So look at this breakout and we impulse to the downside. Let me go to the 30-minute time frame. I was talking about this pattern yesterday. If we break this pattern, then definitely there is a chance price is gonna dump crazy, and we happened. Right now we are on the support. I do think we can react from this support. This is the support area. So I think this can be a good area for longs actually. Let me see what is going on the 1-minute time frame. Okay, we was having a very beautiful inverted head and shoulder. I would have taken a trade here. My stop loss placement would have been let's go to the 1 hour time frame again. Okay, my stop loss placement can be somewhere around here, because if price breaks this area, it is gonna come back to the next area, which is here, and my TP can be somewhere around here, which is gonna be 1 to 1. So oh, I think I triggered the TP or what? Let me see. No, it is still running. Okay, I think if I go to the another asset, it disappears. Yeah. Okay, so this is a decent support to me. So if you want to buy from here, I can buy, but as it is gold, I am from the day one I'm unable to understand the nature of gold, so I don't trade it. But if this was US 30, I definitely would have taken the buy, because US 30 do reject from these kind of areas if we do see some kind of pattern. So yeah, but on the US 30 side, we are showing some kind of pause here. If price breaks to the downside, that will be good. Let's see, guys. I'm gonna take this futures account slow. I was calculating, if I risk around $200, I will pass it in around 1.5 months or close to that. Probably like
That's nice.
4, 5,
I mean,
6 weeks, I think.
I think that's a decent duration to take to pass an account. There's no time limit, and it's much better to do it slowly, but surely, instead of going all out and risking losing it.
Yeah. Let me ask you: are you in any trade, or any asset class is
No, I'm
interesting
waiting
to
on
you?
yeah, I'm waiting on EU to get to a bit lower, but that's likely going to happen at the end of the day. I'm going to show you guys. Before you came in, I talked about it. I'm looking for price to reach this level. I I'm not gonna if I'm going to be trade scalping, I would be trading my way to the area, right? Because that's the direction that I expect price to be going. But actually, for my main strategy, this is the area that I'm interested in to go to have a reaction
Okay, you
from,
wanna
to have
take
a reversal
longs
from.
from there, yeah.
Yes. So I don't have any scalps on now. I had
Um,
you know
it is
five.
around 1.148 area.
Yes. Let me see. This is the area. So it's
One
about 1480 or
seven. Oh yeah,
79.5, and then
around 800.
about for 8 pips lower the area is. So it's that's the the area that I'm expecting. But I mean, price can change and reverse before that, because we're already in the H4 order block, which is still fresh. And if you go to the H2, there is, but it's not fresh anymore. So maybe on the 1 hour, I don't see that happening. But maybe on the 1 hour, it can create a fresh structure and then bounce off of that and continue higher. If that happens, of course, it will not need to come much lower. but I don't think that's a likely occurrence. That's not too high of a chance. I think it's likely that it will likely continue lower as the day progresses. Not too fast because of there's news coming up, FOMC funds rate. So but it's likely just continue lower. You can see how beautiful. Look at that on the 5 minute, how it reacted,
If you go to
and
the
could not.
daily time frame, I'm seeing it my way.
Yes.
That area
Okay.
is close to a support area. You can just zoom out a little bit.
Okay.
Just yeah, that area.
This area.
No, no, the up, the it is little bit above, around
Okay.
1.148 only. Yeah, yeah, this area. So
Okay.
I just wanted
Okay.
to tell that your strategy is little bit different, but the
Mm-hmm.
area is somewhere similar.
Mm-hmm.
So
Yeah, we can
yeah, I
see
think
reactions, multiple reaction of that level, and probably if you go
yeah.
left, we don't have anything. Well, but we have enough reasons to understand that that level has been. You actually have two, three, four reactions to that level. So as a horizontal level, and actually you can see that the market has reacted recently to it again, right? So it's a pretty obvious reason, obvious line or
Mhm.
horizontal line to take into consideration. So I don't use horizontal lines, but I mean they are something. They can be very powerful when you have the market reacting to them multiple times, and you have them on your screen. You can wait and see how the market reacts to them, just like trend lines, right? They don't always. The market doesn't always respect them, but you can use them if you've seen market reacting to them before. Then you can use them if when you see the market acknowledging them. Um, I would want to see the market continue higher, but I'm expecting price, not expecting, I'm waiting for price to come back to that area, and then I'm gonna be considering taking a long, depending on how the market goes. So that I'm not in a trade to answer you. I had I think 5 or 6 scalps this morning. Um,
I'm about to hit a TP actually.
let's show your chart
Um,
then. Let's
oh, it
go
is
and
already. Oh,
go
why it
on.
is not? Why the trade hasn't closed yet?
It's a little bit lower, I think.
How to close this? Okay, let me close this. I just closed the trade because it got to that area.
Good stuff, man.
So
178, I think I see, or 76.
the TP I made around $278.
Mm-hmm.
So according to the account, I have divided it in a way that 250 points, or sorry, $250 risk is okay to me. I can handle that amount. So that's why I'm
Mm-hmm.
risking $250 in this futures account I have with the fibers. So yeah, execution is smooth. I'm liking this platform. The design is decent.
Very
It is
sleek.
easy to use. Yeah.
Yeah, it's nice. It's nice to the eye. You know how it looks.
Yeah, yeah.
It's very sleek, I would say. Very nice. I like it.
Uh,
Yes.
yeah.
So looking at NQ as well is breaking down. Is continue to break down. If you go to NQ, you can see that the market broke
We
the
can.
opening range. Maybe I can switch to mine
Yeah.
and we'll come back to yours. We had an opening. This is a 50-minute opening range for the NQ. That's where the open was, and this was the 50-minute. You can see the market broke it, had a little hesitation, but rejected quite clearly right there on a lower time frame, and just tanks all the way to the next structure, which is that daily order block, which sits at 24,700 and actually, to be precise, at 782 and a half. Price likely is going to gravitate at least to that level
Yeah, it's a
because of
very
that daily order block.
decent momentum we are seeing. And once
Yes.
we get the momentum, these indices do like to follow that momentum. I've seen this
Mhm.
indices have this kind
Yeah,
of nature. So I do think,
very
yeah,
directional volatility.
yeah. Yeah, my position on CFD accounts is still running. By the way, guys, my
Mhm.
TP was a little bit lower, so let's see. I'm still in the trade.
Yeah, was a nice your two trades in a row you're winning. Yesterday you won as well.
Yeah,
Yesterday was 125, if I'm not mistaken, something like that. Nice trade.
yeah, it was around
Uh,
that. I think I would like to touch this point. On Monday, the
mhm.
price reversed from my TP. I think I should have moved my stops to break even. I think this is the mistake that I did. I am a
Okay.
profitable trader, but still I make these kind of mistakes. So on Monday, I think I could have avoided that loss. So I should have been in little bit more profits. So the point here that I want to convey to our viewers and to myself here is, when price comes near to your TP or my TP, I think I should move it to break even. So that is the thing that I can do better in near future. I think if I journal myself,
Mhm.
if I look behind and if I see kind of my performance on Monday, so maybe I can note this thing down somewhere, and let's see, in a week or two, if I implement this thing. Right now I'm just using TP and SL straight up. Of course, if I'm having the live account, I would have closed the trade, to be honest, or maybe would have taken the break even. But as it was the evaluation, I kept it running. But I think this is the thing that I can focus on in near future. So yeah.
That's actually a very very fair point. If this is the intra trade, so not intraday, but intra trade, so while the trade is still open, this is the equity curve of one can recreate and plot the fluctuation of a trade as it is open. So what we can do is, let's say if this is TP, let me mark that. That is TP, and this is equally your stop loss. Let's say it's 1-to-1, but I think you do trade 1-to-1. Actually, it doesn't have to be exact, but doesn't matter. It's only to give an idea. What we can do is plot every trade, 50, 100, 200, on a graph, and what we will see is that the market, you know, it depends on the strategy, the timing, and things like that. The market will go up, right? The trade will go up, and eventually hit the DP. Some trades, and you're gonna see a lot of lines. Some trades will go a little bit in our area in our favor, but then eventually will go to TP, to stop loss. And equally, these you will also have trades that right from the get-go never really does anything, seems to be eventually doesn't really have any particular preference in the direction it goes, just goes sideways and then slowly goes to your stop loss as well. And if you plot these a lot of your trades, and if you're systematic, you're following the same strategy, what you can do, and this is why I'm saying this now, you will see that most trades, right, if you look for only the losses, you would see that uh, they never. Let me move this again. Right, so by analyzing the equity curve as the trade is open, you can actually find the when the market goes in your favor, the trade goes in your favor, and you're very close to your stop loss, I mean to your TP, you can find how likely, by looking back at your trades, how likely, where should I start putting my break even. For example, if uh, like if it goes 50% in my way, let's say this is 50%, right? And this is your entry. And this would be your TP, right? This level. And you can get, it may be 50, maybe 60, maybe 40, maybe 70. It doesn't matter. You have to find that out for your own strategy. But how many times does a trade that reaches this level no longer reaches break even and still hit a TP? Right? I'll say it again. The trades that hit TP, at what level they no longer revisit break even?
I think for that I should have a proper journal, where I take the screenshot of every trade. Right now I'm doing a
Exactly.
mental journal type of thing, where at the end of week I reanalyze my whole trading performance. I'm doing that. I think if I have to follow this practice, I should have some kind of data in a proper way. I think that
You do.
yeah.
So you go back and look at it and say, well, whenever I hit a 70%, let's say, uh, the distance from my entry to my TP, 70% of that distance, all of my TPs that they no longer go back to break even. Let's assume that's a pattern you see in your data, then you could definitely should you move your stop loss to break even, because if it goes to break even, it means that that's not going to be a TP.
Yeah,
You understand?
makes
So
sense.
it's you're eliminating a loss, because once it hit a certain level, it's supposed to hit your TP. If it's not hitting your TP, then something is wrong. It means that's going to be a stop loss, and you want to avoid that. And so and this is just by looking not at price action, not at anything external, just looking internal to what your data, the information you already have. You don't have to buy anything. Just looking at your data, and tells you, is there a level where all my TPs, whenever they reach this level, they no longer revisit break even? If there is, that's where I want to use as my break even trigger line. And that may be 50%, that may be 60%, it may be 70, maybe 80, it may be whatever level, whatever your data tells you. But if you're able, just think about it. If you have let's say 100 trades, and you are, I don't know, maybe 30 or 25 are in profit, after 100 trade, 25 are multiples. Does it matter that you had one extra win, which will put you at 26 R, or that you avoided a -1 and you're also at 26? So a loss avoided is just as good as a win executed.
Yeah,
You
this
get
is
the
the
point?
good point you mentioned.
So avoiding, if we're able to, if you look back, and there are things that we can look at our data, and we can, using our data.
Uh, do you make a journal like in some kind of Excel or use any software?
I use multiples, but I like to work with the data myself, so I use Excel for that. But I
Okay,
use
okay.
my FX book, and I have another software also to use on MT4 for analyzing backtesting and things like that. MT4, MT5. But this can be done with Excel. Doesn't have anything there. Of course, you can make it easier. You can automate many things, but the basic premises can be tested on Excel. And so if there's anything we can do to avoid a trade, a loss is just as good as having a winner.
Yeah,
It has the same
you are
effect.
right.
It's plus one. Either you add +1 or you subtract -1. It has the same effect.
Yeah, that is a really a good point you mentioned, and I think I should take the journaling thing seriously, and I should have a proper data of my trades and all my performance. I was doing some kind of a week type of journal, going back to the performance and seeing where I could have done things better. But I think
Hmm.
having it somewhere in a sheet or Excel, like you have mentioned,
Hmm.
it will even make me a better trader. Then I will know what kind of mistakes I made in, let's say, in the last 6 months, or in last 2 months, or even the last year. So I
Hmm.
think that is a good point you mentioned.
And you say mistake, and maybe they are, but if you don't know about them, I wouldn't call them mistake. They were just things that you could do better. Simply, like for example, knowing where to start putting your trace in break even. That's in my, in my book. That's, if you don't know it, that's not necessarily a mistake. It's just simply, it's something you still have to do and
Yeah,
find
it
out
is.
about your
We can
trading
call it
style.
like optimizing the plan, I
Yeah,
think.
like improvements that you can
Improvement, yeah.
yeah, that you still have that are pending to be done. Someone in the chat, thank you, Aryana Huja. I'm not sure if I pronounce your name.
It's
uh
Aryan. I think he's from India. That is an Indian name, yeah.
Aryan. Yeah, okay, Aryan Huja. Thank you for those nice words. It's we have a great team working constantly for, I suppose you're talking about the support from the fivers. Maybe you're talking about the charts. Like, there's a great support area here. Maybe, who knows? I don't know. But I thought it was about the fivers. So thank you for that. There's a team working around the clock to service to serve the traders. So, and it's not easy always, right? Because the market can do all kind of crazy movements. But thank you for that, acknowledging at least. All right, so there's something here. Someone said, Victor, could you share some reason for the entries on the trades you took? And I'll show you a couple of them. Let's see. All right, so one thing is, for example, uh, right here, right before when you had this trade, this was at the beginning. Let me see. I'll have to check my terminal to see where when you have a bullish order block, right? You have a bullish order block, and to me, right. So you have the market is doing this, right? It created. Actually, I need to put it the other way around. It created the order block by doing this kind of price action inside of these two candles, right? And the next time it comes back, I expect price to bounce, right? So either the scalps that either they are the market retesting a structure or invalidating a structure, because this is a demand zone, right? So I'm expecting to go. So one thing that I could do is, on the lower time frame, look for a long, right? On much not that much, but I mean just a couple of pips, uh, looking for a long, and that's just one idea. However, it depends on whether I'm looking for multiple time frames. And let's say I have it here, right? So let's say this one. If you go lower time frames, you would see that when the market came back right here, after it had reacted so nicely to that moving average, you know, I was waiting and watching the market break down. And as it broke down, I start taking shorts right here. And these are scalps, right? So I go to the lower time frame, right? So that level. And squeeze it. And I wait for the market to, let me go to the 1 minute, because the trades were on the 1 minute time frame. And I wait for the market to retest that level. See that? Right there. Right. So once it breaks it, it comes back, and that's where I would wait for the reaction. I see it cannot continue further. I want to take the short. Why? Because on the higher time frame, you have a structure that is being broken, even though we don't know whether it's going to close or not. But that's this area. Supposedly, the market was supposed to bounce off, And you can see that it was so weak, so weak. All the area broke it without anyone coming into the rescue, right? So to me, it's breaking of a bullish structure where your expectation, the normal thing would be that the market reacted and had a little bump here, but that's very insignificant compared to the move it had. And once it broke, I understood the market is weak. We're likely going to break and go lower. And I wait. I don't go in right away. I wait for the market to come back, retest, and that happened here. And I took a short here, and just a couple of pips, and closed it again. And I believe when the market came back, retested this, perhaps I'll have to check my channel. I took perhaps an entry here short and close it again. So you go with the same idea of the higher time frame, what is happening, and you wait for the market to actually tell you, all right, it's following the same script. It's not breaking, coming back, but it's leaving that. Let me zoom in and tell you and show you how, right? You see that pin bar where the market was supposed to, here was a chance for the market to go in the opposite direction, break and come back, and it didn't. That's a rejection. So once it breaks, that's your signal, right? Because it's likely the market has already told you it wants to go lower, and whenever it's failing to change direction, that means that it's going to continue go lower, right? And you see it again here. Creates a bearish order block, a bearish one again, and then continues lower. Those are easy entries that you can easily take a couple of pips, because before the market, even if it doesn't really break down, you're already in profit. A couple of pips is easily reached. All right, let's zoom out and take a look at the market. Hopefully that helps. Anto Cahoro. Basically, with the scalps that I'm trying to do is, what is the likely direction that the market is going to move? Trying to find out what the market is trying to tell you, what it's trying to do. Respect an order block, for example, and it fails doing that, or it actually respects. You can see the bigger the candles starting to reverse, creating those reversal patterns, and then you can trade the reversal or the break of the whatever structure you're looking at. All right, let's take a look. We have still about 45 minutes into our session, our live trading session. Let's take a look. Let me take a look here. This is EU. I'm waiting for price to reach that level. Not happening. So that means there's nothing really to do. I could short this level. Right? That's a fresh order block that was created, but the price is not there. Right? So it's either long from here or short there. Neither of them is presenting. Is in the middle, and that to me is a reason not to trade when we are in the middle of two zones on the H4, right? It's no man's land, and you're better off just sitting on the sideline, waiting for price to reach one of those levels before you do anything. Weakness on gold as well. Let's take a look on the higher time frame. Nothing here. On the daily, we have the market retesting a level and actually rejecting the breakdown. That's a nice area, nice reaction. We have that makes this a quasi now. So that means that for the swing trade, although this has an uptrend, you can see it has an uptrend. So you have to be careful going against that. But there is a quasi now created because of the break of that line, that level, right? So you have this happening. So you have a reversal pattern, breaks it even by a little bit, and you can look back to see if there's any area. There's one order block here and another one, and these can be used for price to go lower if it is going to reverse. Doesn't mean it's going to reverse, but if it's going to reverse, then these are the high likely places, high probability places to go short. That's one, and now this has become another one. So basically, there's a short entry on gold. You got to be careful. Gold has been very, very bullish. So this reversal will not work. Obviously, it will not work if the market will continue its path, its previous path into continue higher. But that would be something that I would be looking for to short from the higher level or maybe from the lower level, and then targeting the lower entry order block and targeting the lowest point of the structure from this point onwards. Meaning, if the market continues to go much, much lower, and then before it comes back for this retest, then I'm going to be targeting that low or something in between. That's nice. Let me go to the H4 to see if we have a reaction or a level where we can use. Let's take a look. Do we have one? Maybe. We have, actually, we have too many. That means that the structure is too big to be considered an H4. That is true, right? Let me double check. Yes, it's too many. So that means these are to be taken off. These are just regular. Well, we can still leave them, but they're just regular H4. They're not entry order block, right? So they're just regular H4. That means I cannot take an H4 signal. That means that it needs to create a new structure when it gets there, something like this on the lower time frame, that I can be able to take that short as I'm putting it right here. But we'll have to see. We'll have to see if it's how it behaves when it comes back. On the recent time frame, on the 4-hour, what do we have? Really, there's no trade for me here. There would have been a trade there when this was retested. Didn't trade it, to be fair, right? This order block created, retested. That could have been something. No, not on the H2, and it would have been on the H1. See that? Would have been on the H1. This already happened, of course, but that would be the H1. You can apply this all and look for that short on the lower time frame, meaning between this line and that line. That's where you want to be looking in here. The next time, of course, right? So you'd be looking for, I don't see anything on the H on the 5-minute, but maybe on the 3. Actually, there is one, and that's right here. That's one entry order block. And the proper way to do this is by using and counting how many. Yeah, so this would be a valid area to go short. So on the 3-minute, you can looking at the 3-minute to see if it would have triggered you. That's a bit early for my taste during the day, but if it's yeah, I think there was a there's, you can see here that the market so far just followed price action. This is impulsive to the upside, retrace, impulsive, still bullish. The bulls are in control. This is the first sign that something might be changing, right? That pin bar right here, it rejects breaking that level, creates a bearish engulfing, comes back, big wick to the upside, goes back to the right. You can follow the narrative. This is the bullish order block, right, on the 3-minute, not the 5, but the 3-minute, right? So up to this point, it is still telling us that it's not an entry, just a regular order block. But that's the entry, right? The price is still reacting to bullish structures. Even though it started creating bearish ones right here, and price goes back, and when it fails, that could be this is number 1. Number 2, this actually is a bullish sign, but this is number 3. Unable to break it, and this is actually your confirmation. It's, this is the break of the structure. Then you wait for the reaction. There's actually a beautiful outside bar here, right? You can see that outside bar, and when it creates it, that's all you need to get in short. For example, that would be something like around here, putting your stop above the last swing high or above the whole structure, depending on how aggressive you are. And you target something like the lowest point before that area, and it would have been easy to just picturing. I don't want to say easy, but I mean, if you follow the plan, you look on the higher time frame, there is an H4 order block that might be retested. So let me clean this up and put it bigger, right? You have an H4. That's the H4. When they get retested, you will likely have a reaction, and you couple that with an H1 as well, which is also fresh, and you see that on the lower time frame how the market reacts to them with price action. I mean, this is a clean break of structure, and it did it at a specific time, a specific area. That's all you need to understand that the market flipped back into bearish order flow, and you take your entry and you target something that makes sense based on previous price action. That's even without, and if you had, and this is powerful, if you have an entry and if you can leave a portion for the daily structure, for the daily ATR, you can actually have a small time frame trade and actually, take it to the end of the range. Meaning, if you go to the daily and you look at the market, right? If you zoom out, and as you see that the market is going the same direction that it has been going from before, also following those straight line, those EMAs. I mean, you can go and check the ATR, what the ATR is doing, and on today or before, at the beginning, it was doing 124. Right, so if you can leave a portion of, and you take the high of that day, the high was here, and you project that 124 lower, right? You actually already have this high. You can see that you would be targeting 124 would be around this. Right, so you can leave a portion, take your profit at the first trouble area, and then leave the rest for the daily move. And you can trail this with some EMAs. That's up to you, and actually catch a much bigger move. But only when you have the higher time frames telling you, there is a possible move in that direction. Meaning, you can see that the market has been pushing lower, right? Pushing lower, consolidating. So if it breaks, it's likely to have something similar to this, another leg down, because that's what it's been doing, following that trend of impulse and consolidation. Beautiful trade. I didn't take it, by the way. Did not take it. Let's check the chat. How long do I trade? I don't know if you mean how long I hold the trades, or do you mean how long I've been trading? If it's the first one, I hold the trades. When I scalp, because I was talking about scalping, it can be as little as, sometimes 10 seconds, but that's extreme. I give you that. Sometimes you get in, you have a reaction, and the market boom moves in, seconds to your target. But it can vary a lot, because I will still keep reading the market, and maybe 20 minutes, maybe 10 minutes. I think it's more usual, and sometimes it keeps on playing with it, and I will just since the scalps have a negative risk reward, it can go against me, and I'm trading small, it can go against me a little, quite a bit. For example, in the case of the H1 that we talked about, right? So I have this whole area. Let me go to the 1 minute. See that? I think it was it? No, it was in the morning. Yes, it was this. So I would have, in the case of, I would have a bigger area. Let's say, in this case, I don't know if I had one. I think I did. I would go for a structure on a bit higher time frame and use that as the invalidation of the scalp. So that could be this whole area. Right now, this whole area, and whenever price breaks below it, and I take a trade, or I see an order block being retested, the invalidation area would be the other side. It's not supposed to be that high, right? If it's, because if it breaks up again, it means it actually did what it was supposed to do, which is being a demand area. And the whole premise of the scalp is that the demand area is not a demand area. It's failing, right? So if it's failing, it's not supposed to be going above this level. So it can still stay there, half an hour, sometimes even longer, before it resolves. Either I go to stop loss, or it will go to TP. So, a couple of seconds doesn't happen very often. Most are, I think, 10 minutes, 15 minutes. I should check the average duration, but it's I would say like a dozen minutes, something like that. Let's check the chat. How long I've been trading? All right, so that's the precision. It's now 8 years trading. Haven't been, it did take me some time to get my edge. The first 2 years did not see consistency, and it was after the second on the third year that I start seeing profits. And consistency came way later. So that gives you a little bit of a idea.
By the way,
go ahead.
yeah, I was gonna say US30 is on the nice area to go long.
Okay, let's show
I
your
have
chart. Let's see.
yeah, I have a paper trade here. So let's see how it does, because I already took my trade. I can see somebody was asking my view on US30. I already took my short from here. But if you go to the daily time frame, this is a decent area. Why? Because it is a very decent area. I marked it because of these rejections, which is simple support and resistance area. Let me draw it here. So it is these two areas. Okay. So right now price came to that area, and if you go to the 15-minute time frame, price is overextended according to the EMA on the 15-minute time frame. And we already broke out of this trend line. This session, the first half of the session was completely, we saw a drop to the downside. So if we go to the 1 minute time frame, look at this, price is slowing down here. So it is my entry pattern. It is normally, if I was not in the shorts here, so I would have definitely taken a long here. So that's why I have a paper trade here. And stop loss placement, I have kept it below these lows, and a little bit I have given more space. It is 250 points stop loss, and my target is very decent also. Normally I think price can tap these areas, or at least this resistance area if I was in longs, but it looks nice for longs here. So let's see how this trade does. Let me draw it like this. I'm gonna erase this thing. So yeah, if you go to the gold is also consolidating in that support area as I've marked this area. So let's see if we hold this area or we break. On the 5 minute we can see we are holding this area a little bit. I think if we can cross above this area, that will be good. you can expect the price to come at least till this 15-minute EMA, and I think the 1-to-1 can be smashed that way. Yeah, something like this. But as again there is FOMC, so now this momentum has played out. I think now there will be some kind of slow momentum till the FOMC. So let's see how it goes.
Nice. Actually, we are at the end of our stream, but there was one individual, one esteemed member who asked me to show another entry. I'm not sure, and I check on my terminal. I'm gonna show back to my screen if that's okay. Let me double check before I do so. How the market is going. Okay, so yes, I'm on the. Let me indicate it here. Let me switch to mine. So don't worry about the stop loss. It's not necessarily where I put my stop loss, but it's negative, right? So I'm only going for a couple of pips, as I said. But what I look for, one of the things that I look for, like there is a order block, right? There is an order block here. If you go to the higher time frames, right? We have on H4, H2 there was, right? There was an order block that was going through there. It's not a fresh order block, so I cannot use it for my main strategy, but you can still use it to scalp or to, to put the probabilities a little bit more in your side, on your side. So when the market, if you go back to lower time frames, when the market breaks it, right? We talked before, this was one trade, but this was another one that I took. So when the market, the market is supposed to bounce multiple times, and it did it again right here as it was squeezing that order block, right? It was going beyond the order block, and it was reacting until it stopped doing it. It broke it and closed below it on the 1 minute. And to me, that was the beginning. All right, so something just snapped, right? The structure that was supposed to hold did not hold, at least on the 1 minute. It may or may not actually close like that, but that's how it begins. That's how breakdowns begin. So I'm zooming in on the 1 minute and trying to read the action, the price action. Is the market, is it just a fake out? Is the market coming back and pushing higher? And what is it doing? It's not, right? 1 wick doesn't say a lot. Another wick, that's a cleaner reaction. You can see the wick being much bigger than the rest, than the body and the rest of the whole range. And the market pushes again, and you see that clean reaction on the order block. See that? Look at that. I mean, I can't show it because it's on the 1 minute, but there, look at that clean reaction. To me, that's an acknowledgement that the market rejected the order block, and that's where I took the short. And if you measure from that area to the next level, right, you're not gonna getting the to the tick precisely, but if you measure, a couple of let's say this is 18, let's say 2 pips below, let's say 16, something like that. You have, to the next level, the next H. I don't know what time frame this was. I mean, the next level is 5 pips, and that's with 2 pips of difference. And I mean, 2 pips is maybe not a lot when you're talking about this, but that's plenty. 5 pips, if you're scalping, that's plenty of profits to be had, right? And you can even use this on a higher time frame, use the target on a higher time frame, or use something else. Let's say you are on the 1 minute. You look back, that was an H2. There wasn't a lot, but you could, if you understand that the market, where is the market coming from? The market is coming from an H4. So how likely is it to bounce back on just the H2? Not very likely. It needs same time frame or higher to be bouncing. This is the H4. So actually, you can target the next H4. See that? Um, so and make it a bit more than just a scalp. So that would be you would to the next target, next H4 is 18. That's way too much. That's not a scalp to me anymore. But you can expand these TPs and catch more. And actually, it gave you multiple structures. Look at that. Comes back to the order block, and that could be if you didn't get it before, then this would be another moment to get in. Anyways, hopefully that helps. Thank you very very much everyone for watching. I know always we here at the Firefirst enjoy sharing our our traits, our ideas with you, so that you can learn and become better, more profitable, more consistent. And Samir, great trader. I see that with your
Yeah, it was a
consistency and how you're.
um,
Uh, I like how how you have this holistic way of laid back uh,
yeah.
approach to the market. I like that a lot. Thank you very much for your time.
Thank you. Thank you to you also, and thank you to our viewers also. And guys, if you are new here, make sure you are subscribed to our channel and make sure you leave a like, as it is the end of the stream and I can see some new names here. So make sure you are subscribed and turn on that bell notification also, so that you can get the notification when we start the live stream. With that being said, guys, that is it from our side. We will see you tomorrow, same energy, and follow the trading plan also, guys. That is the advice from my side, as we are you know ending the stream for today. Actually, tomorrow we'll be back. So that's it from my side, guys. Take care,
Perfect.
and don't overtrade. FOMC, don't trade that also. You can trade after 30 minutes or 45 minutes. So that is the ending note from my side.
Perfect, perfect. Thank you, Samir. Yes, indeed. That is one of the that is the actually elephant in the room for the day. You want to be on the safe side of things. It's better to just watch the market, try to see paper trade it if you really need to, see how you would have entered, and see how it go. And it would be better just to see I could have made profit, but you didn't. That would be much better than actually taking a trade in the heat of the moment and perhaps losing way more than you wanted, because that's one of the big risk of these moments. Market can move very quickly and leaving your trade idea in shambles. So,
Yeah.
anyways, we have a Discord session here at the Fivers in our Discord room in about 35 minutes, maybe a bit longer. And I hope to see you guys all there. And if not, then see you back tomorrow. I will not be tomorrow on the streams, but Samir will be, and all of the other traders who are part of the team will have plenty of great insights to deliver to you. So tune in, hit the like button, subscribe, and thank you very very much for your support. Bye bye.
Bye, guys. Take care.